The rules for implementing the Act have been finalized. Sources say draft rules for consultation and public comment will be issued within 20 days. Stakeholders will have 60 days' time to give their feedback. The government is hoping to begin implementation of the Data Protection Act within this financial year. Okay, all right. With that, we will slip into a short break. When we come back, we'll talk all about the cues from the commodities market. Stay tuned for that.
There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the #3 country in the world to probably have obesity, but we are #2 in terms of diabetes. And diabetes is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV 18 and CNBCTV18.com.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Welcome back. You're still tuned into Power Breakfast. We spoke about equity markets and global market news as well. It's time to talk all about commodities. Manisha Gupta is joining us to get us up to date with the commodity space cues. Good morning, Manisha.
Morning, Sonal. Thank you for that. Well, the crude oil prices have seen a decline for a second straight day. It's been a 3% decline overnight, and this is on the back of easing supply worries, hopes of a Middle East ceasefire as well, and then the Chinese demand concerns amid weak economic data also have just about continued. Not just crude oil prices, heating oil also has declined to a 14-month lows. But that is where the declines really end, because the other commodities seem to be doing quite well. You have the gold prices holding near all-time highs. This is on the back of dollar decline. So $2,500 per ounce is holding. Silver also has gained up to a 4-week highs. We have seen strong gains come in, not just in copper, which is trading at a 2-week highs, but a smart rebound in zinc, which has gained 2% in the last 1 week. The nickel prices also are off their lows. Steel prices are trading back above 3,000 Chinese yuan. So the metal price is really coming back in favor.
Okay, so metal pack coming back in favor. Thank you so much, Manisha, for joining us with all those details. With that, let's move on and let's bring you some updates on the Kolkata rape murder case. As nationwide protests continue against the rape and murder of a trainee doctor at RG Kar Hospital in Kolkata, the Supreme Court is set to hear a suo motu case related to the incident. A 3-judge bench headed by Chief Justice of India, D.Y. Chandrachud, which had taken cognizance of the incident, has kept the matter on the top of the cause list for hearing at 10:30 a.m. today. Meanwhile, CBI will conduct polygraph tests on the arrested accused, Sanjay Roy. This comes after the CBI took over the probe from Kolkata police as the Calcutta High Court expressed lack of satisfaction with the probe done by the Kolkata police. Let's focus up north. 2 earthquakes with a magnitude of 4.9 and 4.8 respectively have struck Jammu and Kashmir's Baramulla today within the last hour. As of now, it is yet to be determined if there were any casualties or damages in the area. Okay, before we wrap on the show, let's quickly take a look at what the Gift Nifty is doing. It was largely a green-looking Asian screen, so the Gift Nifty is indicating that the start for our own markets could be in the green. It has come up from the highs. Earlier, it was suggesting a 62-point uptick. Right now, it's around 45 points higher. But yes, looks like it could be a green day. Whether we sustain those gains or not is something time will tell. But for now, it's curtains down on this edition of Bar Breakfast. Stay tuned. Bazaar Morning Call comes up next.
Together, we will build what I call an opportunity economy. Under my plan, more than 100 million Americans will get a tax cut, and we will do this by restoring 2 tax cuts designed to help middle-class and working Americans. The Earned Income Tax Credit and the Child Tax Credit. We will provide $6,000 in tax relief to families during the first year of a child's life. Now think what that means. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy. An opportunity economy. An economy where everyone can compete and have a real chance to succeed.
We have a 5-year-old daughter. We want to make sure that she has access to the best schools and to community programming and those kinds of things. And so we really want to be in a position to give her the kind of home a little more.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam. Guys, good morning.
Good morning.
Good morning.
So we're talking about the market cues and, the start likely to be in the green, etc. That's about later. Prashant, wish you a very, very happy birthday. Another round around the sun, and may you keep being healthy, wealthy, wiser, prosperous, and more importantly, happier.
Thank you so much, Mangalam. Thank you.
Many happy returns of the day. And viewers, if you're wondering why there was this little awkward pause at the start of the show, that's because we were trying to corner Prashant into getting us a party. So that conversation is going to continue off and on air. But wish you a fantastic day and fantastic year.
Thank you so much, Surabhi. As my wife says, closer to 50 than I am to, actually 35. So I think, but yeah.
We freeze at 35, don't we?
We do?
Okay.
Some do, not all.
I don't know what 35 is.
Yeah, of course.
So, since you're closer to 50, you'll raise the bat at the half-century mark?
Not yet.
Right
not
now,
yet. Closer to 50, not there. All right, well, let's kick off market action and what you need to know as we begin another trading session here. You basically have another decent day as far as Wall Street is concerned. The rally started last week and it is continuing. And the markets overnight are giving us good cues. The S&P ending about 1% higher, the Nasdaq ending about 1.4% up. The S&P is now just about 1% away from the pre-jobs data sell-off levels. That's quite incredible, isn't it? And it's coming fast and furious. 11 sectors, all 11 S&P sectors were higher. 82% of the stocks which traded were in the green. I'm just sort of highlighting some of the finer data points here in terms of what happened in the US market, just to say that it was not just 7 stocks on the Nasdaq which did the job. It was a broad-based move after the sell-off that we've seen, 1.5 odd weeks ago. Of course, it helped that there was no real sort of souring headlines or risk events or bad data, etc. Dollar index, and that's a big one, right? The dollar is continuously selling off. It's below the psychological 102 handle. We left off at 101.87. So day before yesterday, 0.6% sell-off, another 0.5% yesterday overnight. And that gets us to under 102. Treasuries consolidated. The 10-year yield is down about 1 basis point. Curves, longer end flattened. And by the way, the other data point, which is the USD JPY, that is calming down as well. The dollar is depreciating. The yen actually is now back to about 146.6 from 145 levels. The high was about 142. It moved from 162 to 142. It's now come back, not quite there, but we are getting there. 146.6 is where we are at. Oil prices sold off sharply, and that is the bigger move actually out of everything which happened overnight. 2.5% lower, and we are now under $78 per barrel mark. It's not a bad setup at all. I mean, equities are higher, dollar is sharply down, yields are flattish, oil is down sharply. I mean, I think it's a good setup to wake up to if you're thinking about going long and looking at upside levels. And that gets us to where we left off here and the levels. So the Nifty consolidated. It was a quieter session, but I mean, of course, you're coming off the 400-point Friday rally. The small caps rally, the small cap index was just about under 2% higher. So bulk of the price action was in small and mid caps, and that did very, very well. Near-term hurdle for the Nifty, and I think we should get that done today, is 24,686. Yesterday's high was 24,640, 38 to be precise. So we never got to the 686 level. What is that? It is the upper end of the gap area, which was caused by that global sell-off. And it also coincides with the 66% retracement of the fall that we've seen. Now, closing decisively above the 24,686 level, this level, can take us towards the all-time high of 24,078 and beyond. But you need a decisive close above it, and then we'll talk about higher levels therein. Bank Nifty has been the weaker of the two indices. And by the way, supports, same 24,100, where the market has found, a reasonable amount of buying coming in over the last 10 days or so. I don't think that should come into view today. Nifty Bank needs to take out the 20-day moving average and the swing high. Both are the same now, by the way, which is 50,830 as of yesterday's close. And again, here also, looking at global cues, etc., maybe we take a shot at it. We'll see. Support for the Nifty should come in around the lows of support for the Bank Nifty on the downside should come in at about 49,654, which must be defended. The GIFT Nifty will come up on your screen, and that should give you a sense of how we are starting 50 points higher. A slower but higher start is preferable, and then you sort of build on it instead of a big gap up, which then makes it all the more difficult for newer people to come in and buy on top of a 150 odd point gap up. So this is fine, and hopefully we're able to get over that 24,686 hump and then maybe look beyond as well. So it's not a bad looking global screen, as I said, Surabhi. And
your shirt is matching the sentiment, I think, Prashant, with all the green.
Shirt and tie.
but yeah, as you said, probably slow and steady wins the race, they say. So if we kind of start gradually and then build on it, traders will take that with both hands, because the setup has been very, very positive. I mean, we've got Wall Street with 8 consecutive days of gains, at least the two indices, that's the S&P and the NASDAQ, big moves coming in over there. By the way, the only chatter that I'm sure Wall Street will start sort of, looking at as well, political chatter, is Kamala Harris talking about an increase in the corporate, tax rate, and a big increase and a big rollback from the Trump era cut. She's now saying corporate taxes should be at 28%. Trump had slashed the rate down from 35% to 21%. So a lot of the political chatter will, of course, keep Wall Street occupied, along with all the, action around central banks. Speaking of central banks, here in Asia, China has been in step with expectations. That they haven't touched the loan prime rate at all. It's been left unchanged this morning. So no hiccups there. And some of the key markets like Japan continue to build on to the momentum. Japan is up another 2% this morning. So that's good news. Of course, there's a lot of dilly-dallying over the extent of the cuts that we may get from the Fed in September. And later, this morning, if you look at the Fed Watch tool, the probability of a 50 basis points cut is reduced quite a bit, considerably, to about, I think, just about 50% right now. So let's see how that plays along. Now, the fund flow picture here, again, FIIs went back on the sell side yesterday. Remember, just a day prior, we were talking about a minor buy of about 700 odd crores. Well, that reversed again yesterday, and the selling was to the extent of 2,600 odd crores. Domestic institutions or buyers, about 1,800 crores. Pull up the FII stats for the last couple of months, and we've turned negative all over again. So the number was negative in May, around 25,500 odd crores. June and July were positive. August, we've rolled back to a negative net number. This is the final number, not the provisional, the final number that comes in. So we are at negative 20,000 crores from the FII fraternity. But hey, we've got a great DII support coming through. So not much of a problem. But again, just to place this on record. In terms of corporate action today, actually more than corporate, market buying, selling action. Zomato is going to be the stock on my radar for sure, because there's a lot of buzz that Antfin is looking to pare down a little bit of its stake, between 1.5% to about 2%. So let's see demand. The stock has been on a massive tear. And the sense is that, any dips will probably get snapped up, because, there's a lot of, shall I say, hunger for Zomato on the street. Manglam.
Well, hunger and lack of patience. People really are seeking a fair amount of convenience in the quick commerce business. And there is a fair amount of demand because, the size has been up. But more on Zomato in just a bit. For our markets itself, there are a couple of things that I'm looking at. Yes, it is likely to open fairly strong, but where does it close? That's extremely crucial to track. Why is that? Because yesterday's open and high on the Nifty were absolutely at the same level. The Nifty managed to hold on to some green, the Sensex a bit of red. That's because the financials are under a wee bit of pressure. You have, both the Nifty Bank as well as the Nifty Financial Services, which were about 0.25% lower. Broader markets, no problem. We were talking about, 82% of S&P 500 stocks doing extremely well. But our markets as well saw great gains. In fact, the Nifty Next 50, which is a barometer of where, good quality mid-caps are, that was up almost 0.6% in yesterday's trading session itself. What is it that dragged the markets lower? Yes, on the FII selling front, there was selling, but there wasn't enough buying by the DIIs, and as a result of which the net flows were, a sale of close to around 900 odd crores. The FIs bought in index futures the previous trading session. Then again, yesterday sold about 304 crores. The net long contracts, short contracts exposure moving to around 50% each itself, with the net exposure now closer to around 350 odd contracts on the short side. Basically, absolutely at an even keel. The 24,600 mark seems to be a bit of a fulcrum for the Nifty. 24,600 call and 24,600 put, both of them fairly active. So, putting the option-based range on the Nifty at the lower level to close to around 475, and on the way up, 24,700 is something that we're looking at. And this ties in with the technicals of the market as well, where the 20-day moving average of the Nifty is 24,480. And the 20-day is important for both the Nifty as well as the Nifty Bank. For the Nifty, it is an important support. For the Nifty Bank, it is a crucial resistance. Yesterday's high on the Nifty Bank as well was closer to that 50,828 mark itself. What can move the needle? In the second half of trade, watching out for HDFC Bank in particular. Why? Because it defended the 20-day moving average yesterday. On the way up, it's the 50-day moving average that we will keep an eye out on. This is the highest weight on the Nifty Bank and on the Nifty Financial Services Index, along with the Nifty as well. So the Nifty Financial Services expiry plays out today. It's a Tuesday, so we'll watch out for that as well.
Mangalam, thank you very much for that. So that's essentially a nice wrap out of what you need to watch out for in terms of specific levels and the markets overall. Let's get in some perspective. We have Mark Giannoni, is Chief US Economist at Barclays. He's with us in the program. Mark, great to have you with us here. Thank you for your time. It looks like all those sort of fears about a US recession, etc., behind. And last week we had that. Once again, that so-called Goldilocks kind of data, which the market has latched on to. And if you look at US stocks, it does seem like we're not in the phase of short covering anymore. There are fresh longs being added. So you're in, once again, would you agree, in a bit of a risk-on kind of a zone? What's the perspective, Mark?
Yes, again, thanks for having me, and good morning, happy birthday. So last week's retail sales, I think, have been quite important. They suggest really that the spending part of the dynamic that has been driving the economy, and in particular the cycle between employment, the income that gets distributed, and then the household spending. That cycle keeps going. And there were some concerns a couple of weeks ago when the payroll report came out that was about to break. We didn't think so. We thought that the fundamentals really for the households in the US economy are still strong. If you look at income, if you look at household net worth, and that the economy can continue to power through.
Mark, hi. Good morning. So, just about 2 weeks back, everyone was fretting about a hard landing in the U.S. and now data is looking like, maybe it won't be that bad. What is the extent of rate cuts that you're penciling in from the Federal Reserve, and the way you see risk assets respond to the current macro setup?
Yes, so on the Fed, our expectation is for the Fed to see that there is some slowing taking place. The economy is no longer growing as rapidly as it was in the second half of last year, necessarily at the beginning of this year as well, that we see the labor market gradually cool. And with that, inflation has also come down. And it has come down to a point where the Fed is comfortable now about starting to cut rate. Our expectation is that the Fed will cut 3 times 25 basis points this year, first in September, then another 25 basis point cut in November, and then a third basis point cut, 25 basis point cut in December as well. So that's our expectation for this year. As far as equities are concerned, I mean, they'll benefit from a slightly lower rate, and they benefit from that. They also benefit from a pretty resilient growth. So going forward, we expect the economy to remain resilient, to not enter into a recession, but to really gradually slow to the long run steady state growth path that the Fed has been trying to engineer, and the soft landing it has tried to engineer. So we are pretty optimistic on that.
Right, 3 rate cuts with a soft landing, positive for equities. But, you know, before the Fed meet, the near-term imponderable will be what we hear from the Jackson Hole Symposium. What are your expectations from there? What is it that you think Jay Powell would say or should say?
Right. So we think that the Jay Powell will give an important speech on Friday here, 10 Eastern Standard Time, Friday morning. Our expectation is that he will express more confidence that conditions are really in place for a 25 basis point cut at the September meeting, provided still that inflation remains moderate and the labor market conditions remain unchanged. We strongly doubt he will make any policy commitment, like we think he will likely reiterate that decisions are going to be data dependent. They are also going to be made on a meeting by meeting basis. But we also think that Powell will mention that the FOMC is prepared to respond forcefully if the labor market were to unexpectedly weaken. So our expectation again is baseline scenario, he's going to open the door for this 25 basis point cut. He'll express confidence about that, but be open to the possibility of having to cut more if conditions were to really unexpectedly weaken.
All right, Mark, we'll leave it there. Thank you very much for your time here on CNBC TV18. Thanks for the wishes earlier. Appreciate you joining us here this morning. Well, that's Barclays with a perspective, so no recession. I mean, I think that is a thing of the past. We're back to talking about as we were from the middle of last week, Goldilocks. We'll run you through some more opinion that we are getting. Mahesh Nandurkar of Jefferies also weighs in, and he says that the 12% earnings growth for the Jefferies coverage universe, this is excluding oil and gas and metals, for domestic companies was broadly in line, though analysts at Jefferies are downgrading their both FY25 and FY26 earnings for more stocks than upgrades. So the overall season was a tad disappointing on to him. He says the June quarter season was impacted by a harsh summer and elections in select sectors. Employee cost growth weakening to 5% is a negative, according to Mahesh. And he adds that consensus Nifty EPS for FY25 is unchanged with growth estimates at 16%. And the key positives were improvement in IT and rural commentary.
All right, let's move to some money market views. Abhishek Goenka of India FX and Asset Management says fears of a U.S. recession have been allayed, post better than expected U.S. retail sales data and upbeat consumer sentiment. He says probability of a 50 basis points cut in September has come down, and also adds that U.S. Treasury yields have stabilized and the dollar is weaker against major currencies and crude prices are also lower. He adds that the USD-INR pair continues to remain extremely stable and he expects it to continue to underperform amid broad-based dollar weakness. He says the Fed Chair Powell's speech at Jackson Hole will be a key event to watch this week, and he's expecting the rupee to trade in a range of 83.40 to 84.40 over the medium term.
All right, on bonds, we have B. Prasanna who weighs in. He says that ICICI Bank global fixed income markets remain in a consolidative mode. He says incoming data has surged recession fears in U.S., resulting in less aggressive rate cut expectations. Back home, he adds MPC's continued focus on inflation and upbeat growth indicators have kept rate cut expectations at bay. And he's expecting markets to trade with a softening bias given robust demand for bonds. The 10-year bond yield, according to him, is likely to be between 6.85 and 6.9%.
All right, we have a lot of stock-specific action to track today as well, and we'll get to it in just a bit in our special Top 10 segment. Today, we're looking at a bunch of stocks: IndusInd Bank, Nucleus Software, High-Tech Pipes, and Sequence Scientific on our radar on the back of positive news flow. Then we have the big block deal in Zomato, Bajaj Auto, HCL Tech, Zaggle Prepaid, Prudent Corporate Advisory, and Poly Medicure stocks, which may see some bit of red in today's trading session.
Right, well, on that note, we'll take a very quick break. We'll come back with a list of potential top movers and shakers, our stock list coming up in just a bit.
You know, a place where we can entertain and invite our friends in our community to spend time with us. All of those things are really important, and we really want to make sure that it makes financial sense before we can do something like that. So she spoke to my heart as a potential homeowner.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com.
Welcome back. So the cues are quite positive. Let's look at the stocks that could be in focus today. That's the implied open with the GIFT Nifty. Most of the Asian markets are showing lots of green, barring mainland China as well as Hong Kong. So let's talk stocks. As promised, we have our team standing by with the list this morning. Guys, okay, we've got everybody on the same window now. Manglam, you go first. Zomato in focus yet again. Tell us more about this potential block.
Well, you know, so if you look at Zomato, yesterday there were good pieces of news coming in. The stock was doing extremely well, but it ended in the red after hitting a record high. So nearly 7% off highs. That's about 1 month. But just yesterday's chart should tell you that, you know, the stock was seeing or sensing some sort of supply coming in after the big move that we saw already. And now we have news on that as well. These are sources telling Nimesh that Antfin will sell 2% stake in the company for nearly $556 million. Remember, there is a fair amount of demand for that, which is why the offer size has been increased from 1.5% equity earlier as of last evening to about 2% now itself. The floor price is at 251.6, which is a 4% discount to yesterday's close. And which is why I'm going with a red, largely because the deal would be done at that. There would be an adjustment for it. Thereafter, the stock would perhaps see a recovery given the sort of momentum that it's seen already. The only thing that we'll have to watch out for now is that are they looking at a clean out at some point in time? Because right now they are selling 2%. They hold about 4.24% stake as well. So at some point, they would like to sell the other 2.24% as well. Puts a bit of a supply overhang, but nothing fundamentally wrong.
Absolutely. And we had Ramdev Agarwal yesterday with us.
He said they've started trimming stake as well.
They've actually trimmed significantly.
Yes.
But he said, to be sure, they bought under 100 rupees.
Yeah.
And they want to sort of realign the portfolio a little bit. But yeah, I mean, it just shows you that early investors, this is a buoyant market. I mean, if you don't sell now, if you want to sell, if you don't sell now, when do you do it? So, and funds, of course, can sell for a variety of reasons. It's not always necessarily, a call that, well, the business has turned south or whatever. It's not the case. And I think Mr. Agarwal, of course, made that case very pointedly. IndusInd Bank is the next one we were focusing on. Abhishek has got details here. Abhishek, good morning.
Good morning, Prashant. So, IndusInd Bank has given a press release wherein they mentioned that the bank has received approval from RBI to set up a wholly owned asset management business of a mutual fund. So, this is to be done via equity infusion or infusion of equity capital into that AMC business. There are additional conditions which are mentioned in the letter. Remember that sometime back, the promoter group, that is Hinduja Group, had picked up a 60% stake in Invesco. So, Nomura has written a note on IndusInd Bank. They have a neutral rating with a target price of 1,580 per share. They say that this is a positive development for the bank that currently does not have any direct para-banking subsidiary businesses. Back to you.
Right,
okay. All right, Abhishek, thanks very much. So let's see, perhaps one more mutual fund house coming soon to the street. Let's quickly move on and talk about Bajaj Auto. Sudarshan's watching out for this one. What's the news here, Sudarshan?
Morning, Survi. So for Bajaj Auto, I'm going with red just because company will see one-time impact in its net profit in the Q2 period. So the news is company will provide for rupees 211 crore in Q2 as indexation benefit is withdrawn on debt mutual fund long-term capital gains. So what will be the impact on P&L? Company says provision for this one-time impact will be made in the net profit, and impact of one-time change relates to other income and not the operating performance. Also, only a provision is being made in the books of accounts at this point. Actual tax payment will be made at the time of redemption of these mutual funds. So what are the reasons of these additional provisions that company is going to make in Q2? Company invests surplus funds into several asset classes, including debt mutual funds. It used to make provisions for deferred tax on fair value gains on these investments. Remember, in budget, Finance Minister announced withdrawal of indexation benefit on LTCG on debt mutual funds purchased before April 1, 2023, and also announced change in the tax rate from 20% to 12.5% without indexation from 20% with indexation. And this is the reason that these auto companies are going to make additional provisions in Q2.
All right, Sudarshan, thanks a lot for that. A mild red is what you see on Bajaj Auto as well. The stock ended about 1.2% lower in yesterday's session already. It was similar to what Maruti had said in yesterday's session as well. Stock ended about 0.5% lower too. But let's go across to Rima now. Rima's got news from the tech space. Rima, HCL Tech and Nucleus Software.
Yes, so let me start with HCL Tech, where the CFO Prateek Agarwal will be stepping down to pursue opportunities outside of the company. The company has appointed Shiv Walia as the CFO effective 6th of September. Shiv Walia has been, with the company for over 3 decades now. He started his professional career, so an insider, and he will take on the role of the CFO's position at HCL Tech. Nucleus Software is the other mid-cap IT company. I'll be watching board meet on the 22nd of this month, where they will consider a buyback of shares. The cash in the company's books as of 30th June was 920 crores. Back to you.
All right, thanks very much, Rima, for that. Well, Zaggle Prepaid is the other one we want to talk about here. Also, by the way, there was a block. Prudent Corporate Advisory was down sharply yesterday, and there is that one we want to cover as well. Vivek has got both those. Vivek, morning.
Well, good morning. Both of these stocks actually saw large trades in yesterday's trading session. Let's go with Zaggle first. Zaggle, again, what's actually happened here? One strategic investor, Zuzu Corporate Software Services, sold close to 4% stake at 361 rupees a share. Now, remember, they held close to 12.83% stake, so now there remains an overhang of further trimming of stake. Now, when you're talking about prudent corporate advisory, again, close to 3.5% of total equity actually exchanged hands yesterday. Two of the promoters, which is Sanjay Shah, sold close to 1% of the total 43.3% stake that he held in the company, and another promoter, Ramesh Chandra Shah, sold close to its entire 1.48% stake. Amongst the buyers, the ones that have been disclosed is Societe Generale. They purchased close to 0.7% stake, going with the red on the back of the strategic investor and the promoter selling stake in both these companies.
All right, got that. Thanks, Vivek, very much for that. Back to Abhishek. Abhishek, you're looking at Poly Medicure. What's the development here?
Well, sources tell that Poly Medicure has launched a QIP. The QIP size is about 1,000 crore and the indicative price that they have set is at 1,850 per share to 1,880 per share. So the discount is about 11.5% to yesterday's closing price, and to SEBI floor price, it's almost at the similar level. Equity dilution would be about 5.5% to QIP equity base that they have. The use of proceeds states that funding capital expenditure to be incurred, a company for setting up manufacturing facilities, pursuing inorganic opportunities and general corporate purpose. So there is a 90 days lock-in for the promoter and promoter group. Book running lead managers are IFL Securities as well as SBI Cap. Back to you.
All right, Poly Medicure was a big mover in yesterday's trading session. QIP today. Vamakshi joins in now with all the other stocks that are in the news. Vamakshi.
Well, good morning, Mangalam. Let me first start off with high-tech pipes, going with the green for this counter, and that is because the company is looking to raise funds up to nearly 600 crores. They are considering various modes of funding, which includes QIP, FPO, rights issue, among some other combinations. The next stock on my radar is Sequence Scientific, going with the green for this one as well, after the company has received pre-qualification approval from the World Health Organization for albendazole API. This approval is in partnership with Mepro Pharmaceuticals, who has successfully developed and commercialized the chewable formulation from its WHO PQ approved plant using Sequence API. By the way, albendazole is a vital medication that is used to treat a range of parasitic infections, and Mepro's chewable formulation is the first global approval of its kind by the WHO PQ. So on the back of this development, going with the green for Sequence Scientific.
All right, got that. Amakshi, thanks very much. Let's quickly recap our list of top stocks to watch this morning. The ones that have positive news flow around them are IndusInd Bank, Nucleus Software, High-Tech Pipes and Sequence Scientific. Stocks that have negative news flow around them are Zomato, Bajaj Auto, HCL Tech, Zaggle Prepaid, Prudent Corporate Advisory and Poly Medicure. All right, so that's the stock list for the day to watch out for. With that, let's quickly move to the commodities universe. We have Manisha Gupta joining in with a roundup of all the commodity market action. Manisha, good morning. We are happy with the fall in oil prices, but you tell us, what are the other headlines? What are you focusing on?
Well, yes, it starts with the crude oil prices, though, because the second straight day of decline and 3% decline overnight clearly tells you that there are easing supply worries, the hopes of Middle East ceasefire, and the soft refinery margins all seems to be weighing onto the crude oil prices. And that's pretty much the case across commodities also. We have started Asia on a weaker note. The gold prices, which hit a 25.10 of a high, all-time high rather, in the markets yesterday, have come off, and we are trading now below $2,500 an ounce. This is because of the ceasefire conversation within the Middle East, so that has taken off some safe haven demand for gold prices. This is happening even as the dollar index is now trading at around 7-month lows, just about holding 102 in the Asian markets right now. The base metal prices, while yesterday was a great day, last week was a good one as well, but we haven't been able to hold to those kind of levels. So copper prices, after gaining to almost 2-week highs, have come off slightly. Steel prices are off its 8-year highs, but we have seen some profit taking onto this one as well. Same is the case with nickel and zinc. They were gainers in last 6 or 7 trading sessions, but today there is some profit taking or correction coming in for this too.
All right, Manisha, thank you very much for that. So oil down, but base metals broadly higher overnight. We'll take a quick commercial break here. We are back. Amnish Agarwal, Head of Research at Prabhudas Leader, will join in to discuss some fundamental aspects and individual names as well. Stay tuned.
основне завдання наших оборонних дій загалом знищити якомога більше російського потенціалу війни і проводити максимум контрударної роботи. Зокрема, це і створення буферної зони на території агресора, наша операція в Курській області.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way you have to be.
Welcome back. You're watching us here on Bazaar Morning Call. If you look at the GIFT Nifty, it's indicating a positive start. If you've just tuned in, a 50-point uptick is what we're seeing on the back of good global handover and an overnight decline in oil prices as well. Let's get stock specific now. Amnish Agarwal, who's the head of research at Prabhudas Lilladher, joins in. Amnish, yesterday stock that did extremely well was Voltas, up around 5%. We've also seen positive commentary come in from consumer durables sellers, the likes of Electronic Smart India, etc. What are your thoughts on this space right now? Is there anything that you like in particular, especially given the sort of move that we've seen here already?
You see, if you look at Voltas, I think there were two big reasons for that. We had perhaps one of the harshest summers we have seen in maybe last 4 or 5 decades. And that is why the sales of ACs were very good. The volumes were very strong, and due to operating leverage, I think the margins also improved, but not to the extent it was expected. Even their EMS division, they did well. But I think at the current price, you see, this kind of it is structurally, ACs are fine, there is no doubt. But having said that, the kind of extreme weather conditions which prompted the very high sales growth this year, it might not be repeated in the coming year. So I believe that at the current valuations, a lot of positives are already factored in. And the incremental returns from here on will not be very meaningful. Now, coming to your broader durable space, given the fact that your monsoons are, you can say, running fine on normal, and the demand revival is there, I think the broader durable space is likely to see increased action in the coming few months.
Okay. So that's Voltas and durables. Amnish, hi, morning. Let's get your views in on the oil refiners. I mean, even yesterday, there was a nice pop on most of these stocks, IOC, BPCL, HPCL, even actually the upstream guys, because of the windfall tax cut. What is the general expectation in terms of GRMs that you have as we go forward? This morning, again, there's a positive tailwind because of the fall in oil prices, maybe a trading pop. But in general, after the first quarter, what is your takeaway and what's the view on the refiners?
Okay, so in terms of the GRMs, if you look at say past few quarters, last quarter GRMs were significantly lower than the normal levels. Now, what happens incrementally is that this quarter the GRMs are improving QOQ, and given the fact that the oil prices have shown some correction, I think there is a scope for further improvement. But this gives you some sort of a trading prop-up, because if you look at say estimates, the current estimates already factor in the GRMs, which are at a I would say significantly higher levels than what we have seen in 1Q of the year. So in the near term, I think there could be some, I would say, trading, you can say, kind of an opportunity, but structurally, will it lead to any earnings upgrade or something? I don't think there's a case for that.
Amrish, hi, good morning. Thanks for joining in. Just a quick word on, but what's your view? And do you have sort of active coverage or a view on metals and mining? Stocks all spiked yesterday. The metals index was up 2%. Tata Steel, Hindustan Zinc was a big mover. So steel, non-steel both did very well. All the news out of China is not all that great. One of the largest steel producers out there is saying, well, be prepared for some stress, for a longish kind of stress period. Your thoughts here, Amnish?
Yes, steel prices are actually driven by what happens in China. Now, if you look at, say, 1Q, you can say the EBITDA per ton of most of these steel companies, that was, I would say, not very great, significantly lower than the peaks. However, there is likely to be, you can say, sequential improvement in that. But if China slows down, if there is more, I would say, softness in the prices coming on the Chinese front, then I think the Indian companies won't be benefiting much. The only silver lining here has been that the raw material prices have also been relatively benign. So I think it is, again, I think at the current juncture, there could be, say, some trading prop-up kind of a scenario, because if China slows down and the global, you can say, the global steel prices, they come up, and I think it doesn't make the case for a very long rally in the metal stocks.
All right, Amnish, request you to hang in there. Perhaps you'll be interested to listen into this conversation that we're getting in from, the Motilal Oswal conference as well. Sachin Ashok Salvi, the CFO of Krishna Institute of Medical Sciences, joins in from the 20th Motilal Oswal Annual Global Investor Conference. It reported a steady revenue growth in the first quarter. There was a mild dip in occupancy. The average revenues per occupied bed were higher in the first quarter itself. Thanks a lot for joining in. Always a pleasure speaking with you. The first quarter occupancies were slightly lower. So the question then is, the second quarter so far, have you seen a bit of a pickup? And what are you guiding for this year when it comes to occupancies and average revenues per occupied bed?
Certainly in the second quarter we are seeing a good growth. The percentage occupancy is improving. In fact, seasonally Q2 is always a better quarter for us. So we are seeing a good uptick in terms of occupancy in Q2. Percentage occupancy is likely to remain in the range of 50 to 60% at the year-end level. That is what our expectations are.
And this is on increased base, right? Because you have the Nasik hospital coming in as well.
Yes, so the Nasik hospital was likely to commence operation in the month of July, but certainly it got delayed by about 1 month, and we are expecting to start it by 31st of August. In Nasik, we will be starting in the first phase about 100 beds. So considering this, I'm talking about the percentage occupancy which I just mentioned.
Okay. Got that. Sachin, hi. Good morning. Prashant here. So just a quick sense. I think you're adding a total of what, 2,000 beds over the next year and a half?
Yes, about 2,000 beds we are adding over the period of next 15 odd months. That includes facility at Nasik, Thane. We are coming up with 2 hospital units in Bangalore, one at Marthali in Bangalore, and the second one is near the Electronic City in Bangalore. which is about 250 bed hospital units. So about 2,000 beds we are adding over the period of next 15-18 months.
So you'll basically move up to about 5,500 beds by the end of all of it.
Yes, so currently we are operating 3,975 beds to be specific. By the end of the entire expansion, we will be at 5,500 odd beds.
And Sachin, hi, morning. All of this is, taking place, this entire expansion through your internal accruals. I mean, just give us a level of the cash on the books that you'll be left with, if at all, after this expansion is complete, and if you're looking to borrow at all.
So currently we are gross debts at around 1,200 crore. Our debt equity ratio is about 0.5:1. Some of these expansions which we are doing is out of our current accruals, because the business is literally giving a cash of about 500 to 600 crore every year. We are doing some of our expansions out of our current internal accruals, and we will be raising some debts. We are ensuring that the debt equity ratio remains in the ratio of 1:1. At the end of this current expansion which we have planned, that is about 1,500, 2,000 beds which we are adding over the period of 15 odd months, our debt equity will remain in the ratio of 1:1, and our debt would be certainly in the range of 1,600 to 1,800 crore at a gross debt level.
Okay, so just to clarify, Sachin, you're saying that your debt equity currently is at about 0.5. It will go up to about 1:1 as you go through this expansion, but it won't go above, it won't cross 1. Got that? At the peak, got that.
Cross it.
Got it. And you said that at a yearly basis, the business throws up almost 500 crores of cash. Again, if we talk, end FY25, by the time you'll be deploying some of that cash, some of those internal accruals as well, how much cash would you like to retain on the books? What are you comfortable with? Because you're doing a mix of internal accruals and debt to fund this expansion. So what's the cash right now, and how much would you want to, see it at by the end of the year?
So currently, as on 31st March 24, we were having on our books about 125 crore as cash. We will continue to maintain that cash level at the year-end financial year 25.
All right. What really stood out in your first quarter was the average revenue per occupied bed, because you are doing a lot of these high-end surgeries, etc. as well. So wanted to know, in your overall proportion, how much revenue comes in from high-end surgeries, and what's your target then on the average revenue per occupied bed? Because all of last year it was close to 32,000, and the first quarter itself it jumped all the way up to 38,000.
So the first quarter average revenue per occupied bed had improved mostly on account of optimization of our bed capacity. LOS, that is length of stay, was quite low in some of the segment. That is the only reason. It will sustain for about another 1 or 2 quarters. This is what we are anticipating. As far as our contribution from the higher end surgery is concerned, it is almost to the tune of 25-30%, and that would be certainly maintained.
All right, so 25 to 30%. ARPOBs stay around that 32 to 35,000 rupees mark. I'm just looking at rough calculations. You said you'd be close to around that 5,500 beds over the next 15 months or so. At peak of this after this expansion cycle completes, you could do revenues of what? A little over 5,000 crores? Is that a possibility? Or if you take the ARPOBs further higher, depending on how higher you take it, it comes to close to around 5,500 to 6,000 crores as well.
Certainly 5,000 or 5,500 is in the range, because most of our facilities which are coming are in the metro cities. One of our facilities which is coming in Thane, there itself the ARPOB is hovering around 50 to 55,000 for the listed players. Of our Bangalore facility, for example, Bangalore units, the ARPOB is hovering around 60-65,000. So currently our ARPOB is about 35,000 in some of our units. So considering that, and considering the growth expansion which we are envisaging in coming years, certainly 5,000 is in range, and ARPOB is likely to improve further.
That's by FY27, likely to be about 5,500 crore on the top line?
We are anticipating it to be in financial year 26 because these newer facilities, given the market, given these are some of these are virgin markets, we are anticipating this to reach by financial year 26, if not 26, certainly in 27.
Sachin, we'll leave it there. Thank you very much for your time. Good speaking with you on the sidelines of the Motilal conference. You know, the GIFT Nifty will come up on your screen. Take a look at what that is indicating. And then we will sort of go across to Anuj, who's standing by with what he's making of the markets and the setup. Okay, I think Anuj is with us. Anuj, morning. What are you picking up?
Morning, Prashant. Well, you know, the market's been making some kind of trending moves. And yesterday's session was actually quite good after a blockbuster Friday that we had. And the reason I say that is that after a 400-point rally, the Nifty closing in green is good enough, along with the fact that the market breadth was strong through the day. And almost like parallel lines, you had advanced decline, which was very strong. Now, as long as the Nifty is above the 20-day exponential moving average, the texture is buy on dips. The bank Nifty is a bit of a problem, as HDFC Bank and ICICI Bank both are sulking. And as we approach the Jackson Hole Symposium, the market will bet on dovish Fed. So that means that IT, metals, oil and gas, perhaps that could still remain the space, the go-to space. On the Nifty, the levels I'm watching out for, first support is 24,500 to 24,550. And then 24,390 to 24,425, where all the major moving averages are placed. The resistance comes in at 24,625 to 24,700, yesterday's high, and then 24,800 to 24,850. On the bank Nifty, as I said, it's struggling at 10 and 20-day exponential moving average. That's where the resistances are, 50,400 to 5,500, the 10-day moving average, and then 5750 to 5800, the 20 and 50-day exponential moving average. The support comes in at 5200 to 5300, and then 49,900 to 50,000. Now, for the quote of the day, I have taken a very interesting one. It's the birthday of this author, Jacqueline Susan, and you know, the quote is, when you're climbing Mount Everest, nothing is easy. You just take one step at a time, never look back, and always keep your eyes glued to the top. It's a birthday, and it's also your birthday, Prashant. So from my side, wish you a very happy birthday, and to Shireen as well, if she's watching, happy birthday to her as well.
Well, happy birthday to Shireen as well. And Anuj, thank you very much for those wishes. Great quote, as always, and you know, a little bit in the market, a little bit as far as some of these life lessons are concerned. We'll take a quick commercial break here. We're going to come back with our technical experts, Mitesh and Sudarshan, and we continue to run you through what you sort of need to do in terms of specific trades. That's the advice on the other side. Stay tuned.
Bengal is not a place safe for women. Bengal has failed its women, not Bengal society. The present government of Bengal has failed its women folk. Bengal should again be brought back to its pristine glory, where women had their own respectable place in society. That has been lost. They are scared. They are scared of gundas. This has been created by a government which is insensitive to this issue. You know, we take pride in the fact, Yatra Naryastu Pujanti, Ramante Tatra Devata. Where women are honored, there the gods rejoice. But unfortunately, in Bengal, the government has ensured that women have no protection. That is what is reflected in the gruesome tragedy that has taken place in RG Kar. That should not be repeated again. I respect the sentiments of the mothers. Certainly, the law will take its course. See, my communication with the Home Minister and the Union Ministers, I do not want to discuss the details in public. I'll do my duty. Regarding RG Kar, whatever steps are to be taken will be taken. We have the observation of the High Court about absolute failure of the state machinery, which is a very, very serious observation. I am apprised of that. As Governor, I will do my duty and fulfill my promise to the people of Bengal.
What kind of thing we accumulated at sub-100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus. And also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times
Welcome back. You're with us here on Bazaar Morning Call. We got about 10 minutes to go, 9 to go for the pre-open session. It's going to be a 40-point higher start. The global backdrop is very positive. So you've got that as a bit of a tailwind. But institutional flows, especially from FIIs, has been poor, has been lackluster. And, you need more and more at higher and higher levels. You need more and more in terms of absolute amounts for the market to do better. So it gets a little weighty. So you need FIIs to pull their weight as well, which they've not been doing. Mitesh Thakkar is with us with some technical trading ideas. Sudarshan will also be with us in just a bit. Mitesh, good morning. Your thoughts as we begin today's session. Is it prudent to go long on a 30-40 point gap up?
Morning, Prashant. So one, I think not on the Nifty, purely because of the fact that the Nifty will immediately run into resistances. 24,630 thereabouts is the 61.8% retracement area. There is a gap as well. So not very keen to buy the Nifty. I would be watching the Bank Nifty very, very closely. Now that's the index which has kind of, underperformed. But if you look at the last few days of data, it's had some two closings on the hourly and the 2-hourly charts around this 49,750, 800 zone. Potential of what could be a bullish reversal pattern, which is a double bottom. So I think the Bank Nifty on the upside, if it can get past 50,750, 50,800 levels, then I think, you will see a strong reversal happening in the Bank Nifty, and that could be the trigger for the Nifty as well. So watch the Bank Nifty. I would want to buy once the Bank Nifty starts trading above 50,800. Take a 150 odd point kind of a stop loss and look for 500-600 point kind of a continuation rally over the next few days.
All right, that explains your call on the indices. We also welcome Sudarshan on our show. Good morning, Sudarshan. You've been positionally long on the index, but now, as we open higher, do you think these consolidation levels are good for people to, prop up their positions right now, or maybe just stick around with whatever you have right now?
Good morning. See, the market trend is up. Now, consolidation is really an ideal location to go and add to your positions. That doesn't give us a guarantee that the market will go up, but it's the best trade in town. Now, the trade is not to buy on a gap up. Even yesterday, it was not so, and earlier also. The trade is that this market is giving us intraday dips. If you see a 75 to 100 point dip, that's a range. Then you go long, your risks have become that much less. Keep a 100 point stop loss from your entry price and stay long. If you're already long entering into today, stay there with a 100 point stop loss.
All right. Your individual stock picks?
Sure. Canfin Homes is a buy with a stop under 785. I also have two IT stocks, and IT is the sector that's doing a little better. LTI Mindtree is a buy with a stop under 53.65. Coforge is a buy with stop under 5,900. My only intraday short is Apollo Tyres, which has been consistently falling relentlessly almost day after day. So stop above 489, but primarily focus on the long positions.
All right, very close to its 200-day moving average, Apollo Tyres. We'll keep an eye out on that one. Mitesh, your stocks?
I have more of buy calls. The Gas Authority is a buy with a stop at 233.5 for targets of 250. A buy on Berger Paints with a stop at 550 for a target of around 585, 590. And BPC was a call earlier as well. Now can be bought afresh with a stop at 335. Look for targets of 360 here. And BHL is this solitary sell call. Keep a stop about 300. Look for targets of 280.
All right, gentlemen, we'll take a short break, come back. On the other side, we will have the pre-open rates for you as well. And then we'll get in some more market opinion coming in. Stay tuned to Bazaar Morning Call.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources, but mushrooms, dairy,
Welcome back. Well, we will start getting the pre-open rates any minute now. We also have our F&O guest joining in, so let's get a couple of F&O trades going for the day as well. Sneha Sheth, derivatives research analyst at Angel One, is with us. Sneha, good morning. So it was a range-bound session yesterday. What are you calling for today? I mean, call either a trade on the index or individual stocks. What are you working with?
So very good morning. Yesterday, we did see a very choppy session. However, Friday's session was quite interesting, wherein we have seen a strong up move. The base has been shifted towards 24,400, 500 for now. And any move above 24,600, 650 would be interesting. So it's a market wherein any dips can be used to go long. As far as individual counters are concerned, I have a 2 buy call. So National Aluminium, this counter looks quite good at this point in time. We have seen some profit taking from the higher levels, and from the strong support zone around 163, 165, it has been rebounding. So I would recommend buying this counter with a strict stop loss of 166, and the target expected will be around 181. Apart from this, metal space was doing quite well yesterday. So I have a buy on Tata Steel. This counter was consolidating after a profit taking, and from last 2 sessions, it has been showing decent strength. So I believe we can go ahead and long Tata Steel with a strict stop loss of around 150, and the upside target would be around 162.
All right. Thank you very much for those trades. We'll come back to you for more as we go along. We're going to just sort of play out some sound bites that we got yesterday from Ramdev Agarwal of Motilal Financial Services. So we spoke with him about what they've done with this Zomato position. I mean, it's a widely owned stock. And of course, I mean, Motilal was in their funds, one of the early investors. They've trimmed some positions. We also touched base upon his views on Ola, specifically Ola and what it means for some of the other two-wheeler companies out there. Listen.
What kind of thing we accumulated at sub-100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. I would think that the best is ahead for the industry. As we go forward, recovery will pick up. I think we've seen the first quarter result. First quarter result was fantastic, that they are clearly leader in their field, and in two-wheeler particularly I have seen being number one is very important. So on the electric mobility, they are clearly number one, and they have very dominant share.
That's Ramdev Agarwal with perspectives on both. I mean, of course, Ola and Zomato. Amnish is still with us. Amnish, you're going to take a shot at these? What would you do if one were considering fresh investments here?
You see, Zomato's numbers have been good. It is picking up in both the businesses, that is Blinkit as well as the food delivery. And if you look at last few quarters, I think Blinkit business has added more value for the investors. So I think given the fact that they are likely to enter into new businesses, the stock remains in the positive territory for the medium term, but obviously the returns can be much more measured now. So for someone who is holding on to the stock, you can say continue to hold on. But for fresh buys, one will have to be more rational in terms of return expectations. Now, as far as Ola is concerned, I think it's you can say, classic case. In the last 10 days since its listing, the stock has more than doubled. So this usually happens when you can say the understanding about the industry is very limited. First pure EV company which has got listed. Now, in terms of profitability, we might be far away. So it might take some time, but I think it is basically due to their backward integration, battery business, etc., that the stock is commanding these valuations. So I would say it's going more on the trajectory of what we have seen with you can say IREDA a few years back. So I don't think it is going to crack down, but at the same time, I think incrementally one will have to be much sure as far as your numbers are concerned. But in terms of their product pricing of the bike, in terms of backward integration, if one has to take a bet on the pure EV play today in the market, in the OEMs, I think Ola is on the only vehicle for that.
All right, just be mindful of the float available here as well. 17% of the equity is available for trade right now. Obviously, the first tranche of post-IPO lock-in opens on September 5th. So until then, we'll keep an eye out on this stock as well. But good time to get in, a view on the metal space as well. We have Rahul Jain joining in. Rahul, there are base metals which are rallying this morning, but at the same time, there is a fair amount of concern around what took place. The Supreme Court saying that there could be retrospective royalty which will be charged by states over the last few years itself, and that took Tata Steel down in Friday's trading session. What are your thoughts on the space right now? What should one be looking at?
So on the metal side, steel is under slight pressure. We've seen price cuts happening right from March, and the price this quarter also we've seen about 1,000-1,500 rupees kind of cut, which is ongoing. Now, coming on the Supreme Court deferring, there is expectation that the government may come out with a kind of a bill to defer this kind of payments, because cost will go up quite dramatically, especially for captive miners. For example, NMDC categorically stated that they will pass on whatever increase they've had to their customers. So for the steel companies, especially, the issue is quite serious, and there's expectation of some kind of leeway that they can get in future, but it's all speculative right now. And plus, you have a weak pricing environment right now. For non-ferrous players, the ruling isn't as impactful, especially because the cost element on the mining to the end metal product isn't a lot. So inside the value addition is very high, so the cost impact isn't very much. The steel companies definitely will have to rework their strategy, and plus you don't have a pricing environment which is supportive currently. They have a global, especially in China, the steel production hasn't been cutting off, but the demand is off. So their exports have gone up quite sharply, which is, hurting the domestic steel producers. And domestic producers haven't been proactive in cutting prices because obviously for them the cost inflation is high and they've announced very large capacity increases. So they have to balance between profitability as well as the capex which they're doing. So so that is the slight issue.
So Rahul, yeah, exactly. Coming to the global picture now, just demand supply to try and understand that for both ferrous and non-ferrous. Staying with ferrous, I mean, what you just said, this demand concern out of China, because we all know that no matter what stimulus measures they provide, the property market still seems to be in the doldrums. And I was reading that apparently the domestic steel consumption in China is a quarter of what it used to be at the peak. And therefore the higher exports that you're referring to. So given that context, what are we expecting in terms of the demand supply trends here in India? I mean, to what extent?
Actually, the demand is not an issue at all. Like if you see, most projections are between 8 and 12% growth. But thing is that the pricing is determined on the marginal producer. So Chinese, they're kind of, selling at cost or below cost, which is really, despite the fact that India iron ore is captive for a lot of players, and there is a huge pricing difference in terms of the landed price of iron ore and the prices what the steel players pay for. But despite that, the margins are under significant pressure. And with the price coming off recently, we could see quite weak numbers in Q2. Typically, second half is much better, but again, it is subject to a lot of conditions. In some Chinese, the export slowdown, and there is a anti-dumping duty probe which has started against Vietnam and things like that. The iron ore producers especially haven't cut prices in India. So I was just checking for NMDC, we could see another 20% kind of a price cut which they should do based on historic pricing parity. So there is cost which is not coming down as fast, but the end product.
Rahul, what's the compression in margins? Could you just quantify that? I mean, at least Q2, the here and now. What is the kind of compression in spreads that we are looking at potentially for domestic steel manufacturers?
On an average, about $20–25 lower than the first quarter. So that is the general number, because coking coal, what happens is the number varies from company to company depending upon when they have booked the coal, the imported coal. Prices for coking coal also have come down, but there is generally a lag. So typically you need to keep 1 month inventory with you, so you cannot really adjust cost very fast. And second half is generally better for the industry in terms of volumes. Now pricing is we'll have to see in terms of how things shape up in China and global factors, but it looks tough for any price increases to happen in the near term.
Okay, and that we should put that line out. NMDC 20% price cut.
So the historic parity has been about 60% discount to international prices. Currently, they're at about 45%. So just taking that, so around 1,000 rupee cut should happen in the next, 1 or 2 months, depending upon when they revise, when they meet, and things like that. So in case of non-ferrous, the situation is far better.
I'll just come to non-ferrous. I'll just come to non-ferrous in a bit. I want to, for our viewers, right, the new thing, what we want to address, and the graphics will come up on your screen. So I hope I'm pronouncing this right. China Bao Steel Group Corporation. Rahul, you must have read this. So the chairman of the company, and they, by the way, produce about 7% of global steel. They said that the crisis, they're calling the crisis, will likely be longer and more difficult to endure than we expected. In the process of crossing the long and harsh winter, cash is more important than profit. This is coming in from the chairman of one of the large steel companies in China. Go on, sorry. So go on, Rahul. You want to say something?
If you see the historic pattern of how economies evolve, China is kind of way past its, the per capita that you expect.
No, I get that. Let me ask the question. Will we see duties going up here? Will we need that? I mean, if this is a prolonged situation and they're going to sort of ship out stuff because the consumption there is low, will duties need to go up here in India for protection purposes? How urgent is the need?
These duties have been introduced in the past, so it's not like a one-time, first time it's happening. Think that, it's quite ironic that the cost curve is quite low in India, but we're still not able to price the steel competitively. And which is also because the cash requirement is very huge for these companies. So if you see, we will add 20-25 million tons of capacity this year. And 20 years back, our annual production was only 30 million tons. So the scale of cash requirement is quite huge. So to balance these considerations, the government made adding tax, which I think is a temporary measure.
So this is not exactly a conducive environment to go long steel stocks, right, Rahul? Briefly.
So see, they have had a great last 3 years, obviously. So you could have a pause for a while. And so depending the pricing, the spot pricing plays a lot of crucial role in terms of how stock prices will be in the short term. And so structurally, overall, globally there is a overhead. So you cannot expect these stocks to deliver very massively from here. But you will have stories where a lot of the smaller names are where.
That's true. That's true. In 30 seconds, in non-ferrous, what do you like? You say the situation there is much better.
Yeah, non-ferrous, the cost structures and everything are very conducive. For example, aluminium, they have their own, a lot of the companies have own alumina, own bauxite. A lot of them are getting their own coal as well. So the cost curve is in the top decile. So that actually really is very profitable at this point of time. Vedanta, Hindalco, both are looking very good. In fact, Hindalco for the first time after a very long time is looking to add capacities in India on the smelting side, on the refining side, which is very positive. So I think both these companies are, and we have only two real large non-ferrous players. Both of them are very good, actually.
All right, Vedanta and Hindalco both looking good. Rahul, a quick conversation today. Thank you for your time. Good perspective. Appreciate it here on CNBC. Sudarshan is with us with his 9-10 call. Sudarshan, what do you have?
Well, consider buying Coforge with a stop under 5,900.
Coforge. And Mitesh, what about you?
Buy on Gas Authority for targets of 250.
Okay, all right, gentlemen. Well, we have just a couple of minutes to go before trade kicks off. 3 minutes to be precise. And the pre-open is settled with about a 70-75 point sort of an up move on the Nifty. Some of the movers on the upside are BPCL, Shriram Finance, IndusInd Bank. These are the early gainers in the pre-open session. We'll talk about TCS in just a bit because there's a favorable note coming in on TCS. I think we have Rima with us for that. Yes, Rima, tell us what Nomura is saying. They're sounding quite bullish.
Well, it's Macquarie on TCS where they've raised the target price to 5,740 and it's a sharp increase from the previous target price which was 4,750. So near 1,000-point increase in the target price, and the key reason is the earnings remain unchanged but the valuation multiple has gone up to 35 times FY26 PE. Earlier, they were valuing TCS at 29 times. They've also added the company to their marquee idea list. Now, the idea behind this Macquarie note stems that just about 2 weeks back, TCS had held analyst meet where they had demonstrated their investments in AI and some of the use cases. So this impressed Macquarie. So Macquarie says that TCS has created a legacy modernization framework based on AI, which means AI can now make legacy modernization cheaper with lower risk and greater accuracy. And this opens up a large market for TCS over the medium term. The company also showcased their AI-based autonomous vehicle platform with an algorithm that supports more than 50+ features. So they're just going back, zeroing in on the fact that the company makes a lot of R&D investments. TCS's R&D investments are just 1 or 1.2% of their revenues. But in absolute terms, the company spends more than $300 million per year in terms of R&D investments. They keep filing patents, and that's what makes Macquarie bullish on TCS over the medium term. They say TCS has the broadest portfolio of services and geographies, allowing for low risks and continued growth. Back to you.
Right, Rima, thank you very much for that. So that is TCS in focus. We'll see how the stock opens up on the back of that brokerage note. We've got a couple of seconds to go for market opening. We'll do, as always, look at indices, and then we'll get into individual names. Yesterday, of course, Nifty was quiet. The broader market was vibrant as ever. Market breadth was overwhelmingly positive. Small cap index ended just about under 2% higher. So there's a lot of stuff, a lot of blocks, which of course have been coming through in the market as well. First trades, what do we have? About a 0.25% gain, 24,630. The Sensex is at about 80,651. So the Sensex also about 1/3% higher at this point. Nifty Bank is starting at about 50,440. 50, about 0.15 higher. Slightly behind what Nifty is doing at this stage. The IT index, Friday was a big 3% day. Yesterday was positive, and today it's starting about 0.5% higher once again. So these are indices. And of course, the Nifty heat map is up on your screen. You got about 6 odd names which are lower, but everything else is starting up in the green. 0.25%, that's about 60 points on the Nifty to begin this Tuesday.
Okay, well, let's take a look at some of the movers and shakers. On the way up, the refiners, oil refiners, BPCL again about 2.5% on the upside. It's not alone actually, even if you look at HPCL or IOC, so the foreign crude prices, these stocks are reacting fairly well. TCS is also up and about on this Macquarie note that Rima was just alluding to, about 1% higher. IndusInd Bank is the second best performing stock on the Nifty. They're looking to set up an asset management business and have the approvals in place for it. So that's a stock on the move as well. Hero Moto, Tata Motors, Eicher Motors, these are the early auto names. Bajaj Auto as well, about 0.5% on the upside. So this is the winners list. Some of the metals names like Hindalco, for instance, are up as well. On the downside, ONGC is cooling off after yesterday's big move. There's some profit taking on Cipla, on ITC, on Tata Consumer. So in general, I mean, early trends, but FMCG and pharma are a bit on the back burner. You have a lot of the other movers and shakers on the upside. 70 points higher, so pretty okay start.
Pretty okay start. In fact, it's incredible on the broader market front as well. Yesterday as well, when we started, we had about 1,700 stocks which are advancing. For about 350 stocks which are declining, the advanced decline maintains its outperformance of advances versus declines. And the stock of the morning once again is Ola Electric, up 6% at open. It has now, with today's move, doubled over the IPO. So 8 sessions is all it took for the stock to double from its issue price. 76 has now turned into 154 rupees in just 8 trading sessions. So Ola Electric is one of the stocks that we'll be watching out for. Apart from that, a lot of these bulk deal related stocks are buzzing around too. So you have something like an ADF Foods. Remember, in the pre-open there was an equity exchange of nearly 4% of the outstanding shares, and as a result of which that stock is up around 5%. Zomato, the large trade has happened in the opening tick itself. From the lower levels, the stock has seen a bit of recovery, still down by about 1/3%, or rather 2/3%, but it's recovered from the lows. In the FNO pack, among the top gainers today is Polycab. There's a favorable note coming in from UBS on the cables and wire industry. They believe that Polycab is one of the better placed stocks out here, and that stock's doing extremely well too. Though we're seeing some softness in names like Aditya Birla Fashion, Birla Soft, as well as Trent. Remember, Birla Soft did extremely well in yesterday's trading session, but has re-entered FNO band. So maybe some bit of give back is what one is seeing out there. Profit taking for names like Mazagon, Dock, etc. continues. So that stock lower by about almost 3%. But by and large, it's a very strong market when it comes to the breadth of the market itself. 1,600 stocks continue to do well, as against 440 stocks which are lower.
Absolutely. 4:1 advances to decline ratio. So this is looking good. And Ola is top of the charts once again. In terms of volume-led gainers, it's sort of way ahead of everything else. By a factor of 10, I think, if you just look at the value traded. So 156 or so on Ola. It's 6% in the green and holding on to the gains. You got, I think, Unicommerce, right? I think Mangala mentioned it, 8.5 higher on Unicommerce. It's a new listing.
Yep.
So that's 8.5% in the green, 246 on that one. Look at the volumes on it. 4 million shares, by the way. So it's a very large gain. Sequence Scientific is up 9% right now. Stocks at about 172. It's got very large volumes as well. Praj is starting 4% in the green. These are individual sort of SMID movers, small and mid-cap movers. Praj is up 4,781. Keytex continues its journey, 40% in 3 days. Today is the 4th day, and is starting another 3.5% on top of it. Nucleus, I think we did mention, Nucleus is up 16%.
Buyback.
There's a buyback announcement. And, of course, it was higher, but it's still up and about. What else? Kernex is up 5, and I can go down on the sort of volume traded list, but this is it largely. High-tech, GPT Health, All Cargo. All Cargo is coming up with a 6% gain.
All Cargo has reported its July monthly update out there. They said that it's the highest ever monthly volumes that the company has reported, 6% month-on-month, 5% year-on-year. That works well for them. Also because, it tells you that maybe the international shipping related, freight cost related worries are now abating and people are looking to increase these volumes out there. So big positive for all cargo logistics. I look for a rub-off coming in on all the other shipping related companies as well.
No, absolutely. Though, I mean, for now, in terms of shipbuilders, because they've had such a fantastic ride, Mazagon is the top volume-led loser, Mazagon Dock, 3% down. And again, volumes are through the roof for this point in the day. And then look at, GE Shipping is down 1.25%. And I think I saw Garden Reach is also down about 2.5%. Cochin Shipyard is down about 1.5%. So the shipbuilders, ship repair companies, of course, some of them like Mazagon, Garden Reach, etc., are actually even Cochin, depend on the defense. These are quasi-defense on the naval side. They are seeing some amount of profit booking. RVNL, ONGC, Moripin Laboratories, Oil India are some of the others which are seeing some knocks.
Zomato, with the trade having been done, stock's still down about 1% or so. Otherwise, it's the railway complex, really, the railway favorites. Most of them are down. RVNL, IRFC, RailTel, a lot of them down. Actually, even some of the PSU banks. I mean, in general, there's some profit taking on the PSU universe, UCO Bank, a couple of others on the way down as well on the PSU side. So that's how it's playing out. But otherwise, the mid-cap index up 0.25% in step with the Nifty, holding on to gains of about 50-odd points.
I wonder what's up with matrimony. That's the stock.
Even yesterday, yes.
Shadi season. I don't know whether it's Shadi season or not because they don't benefit as much from Shadi season as they benefit from searching season. And for searching, I don't think there is any. Yeah, but
it was 20%.
But that can happen every time, right? You don't need to. There's no season for that. But definitely a big mover. Everyone's talking about
Surabhi was highlighting.
This is 20% yesterday by close, and on top of that, it's a 6.5% up move. So yeah,
26% in the last two trading sessions.
It's the general sort of rub-off of the festivity. And by the way, now it starts, it goes on all the way till the end of the year. Early.
So to start searching now, if you have to have a winter wedding like that, right?
All right, Venugopal Gare is with us, Managing Director and Head of Research India at Bernstein. Venu has been, of course, expressing his wonder at how strong and how hard the market has been rallying through his notes. Some of them really sharp and pointedly expressing his views. Venu, so you're coming back after a while, so why don't you tell us what you're making of things before we really delve into some of the finer aspects of, PEs and earnings estimates, etc. Go on.
Thanks, Prashant. I mean, the market resilience has primarily been pretty interesting. Now, it's interesting because the fundamental reality is that you're not really seeing any earnings growth acceleration. And more importantly, you're not even seeing earnings upgrades. The only difference is that we are still in a decent macro cycle. Earnings growth are decent, even if they are slower than what we actually saw in the previous 2 years. Now, the reality is that whatever the framework be, it's very tough to justify stocks across the board from a valuation standpoint. And it's actually very tough to justify them even from long-term measures. So what is essentially happening at this juncture is the broader macro strength, which I think is fairly visible for the next few years, is ensuring that the domestic flows sort of remains resilient and actually been very strong. It's not just sort of bringing up or pushing up markets. It's also ensuring that a lot of the broader IPOs that you're seeing and stake sales that you're seeing are also getting digested. So that is a fundamental reality at this juncture. So somewhere down the line, one still has to participate in these markets. You can't be really off these markets. So people like us also figure out creative and imaginative mechanisms to ensure that we remain buy on certain stocks and push some ideas. So that's where we are.
Right. Very interesting there because, I was just looking at your note and it's exactly what you're saying right now. Most investors appear uncomfortable with market levels, but investing continues with cash levels not being raised. What's interesting is that you've, dissected this phase-wise. The phase one is where there is phase of denial, where a strong macro and earnings outlook drives a re-rating. That has happened. Towards the end, you then start to see acceptance of these valuations. That's phase two. Rational investing still prevails. Then you're talking about the invincibility phase, where public market investors start to think like venture funds, and people, the era of imagination commences. Do you reckon we're in phase three, and what typically happens after phase three?
So yeah, so that is something which out of a bout of frustration we had put across in a recent report to sort of timeline the sort of a market cycle. And actually, I've seen that in the past as well. We're all like pretty old hands at the market. I think we are just about heading into phase 3. Phase 2 and phase 3, I do still see some degree of rational voices in the market. But this juncture, early stage phase 3, and I think this phase 3 could last for a while. And what happens after a phase 3 is very clear that you primarily reach a situation of a bubble, which when pricked, but you need an external catalyst to prick it, then there is a collapse. And I have a slightly different view on the collapse this time, because one of the perspectives that I have at this juncture is the fact that broadly there is a willingness to sort of give high Ps to stocks rather than high earnings, right? So what it means is earnings upgrades are not necessarily the driver for the market. So when the collapse happens, you're not going to see a massive earnings-led collapse. It's going to be just valuations tempering down materially. So that's basically what we see post phase 3.
Okay, so Venu, so what's the sense from here on, and if indeed we are going to get into a period of muted performance or underperformance, then is this the time to sort of keep your powder dry? And what's the strategy with which you're going? Should people be sort of booking some profits, raising cash in the portfolio, and get ready to redeploy? What's the advice?
In fact, the advice is to do everything. So it's a very interesting advice, because the way we are approaching it is that all of us are searching for a big negative catalyst to bring down the markets. Now, in the absence of any big negative catalyst at this juncture, the idea is to participate through various mechanisms. So what we're doing is that we are taking an approach that certain sectors which look still reasonable and may not necessarily be high growth sectors, we need to perhaps have some positions there. Second thing is, when I say those sectors are sectors like financials, right, which haven't really performed, where growth is not necessarily very high, but valuations are fine. Similar is the case of ID services. The second sort of a bucket for us is essentially look at high growth sectors, which are very high PE, but where there is potential for, as I call it as a new term, non-linearity, where high growth can last for slightly longer, or they get new opportunities because they're in certain sectors which offer you new opportunities, and suddenly you actually see that growth, let's say 30%, remaining at 30% for another year. So we are actually sort of in that bucket of those stocks that we essentially push. It is not just high growth. It is high growth with non-linearity, which is what we push as a second bucket, in terms of the stocks that we would look at. And the third aspect is, yes, wherever you feel uncomfortable with the growth valuation equation, start to trim down a bit. It's a combination of all that we choose when we build a portfolio as well.
And by the way, Venu has, I think recently, not that recent as well, but he's got a small cap portfolio as well, right? I think you got names like Dixon, Keynes, Muthoot was the latest edition, and I think there's one more there as part of that grouping.
Sona Comstar, yeah.
Sona Comstar, yes, that one. Just something you were talking about earlier, Venu, I want to just sort of ask you to explain that a little bit more. You're saying whenever the market kind of starts to come off, it won't be anything big. It's just valuations which will start to taper off, right? Now, what you're implying is that earnings estimates are not, typically at this phase of the market, earnings estimates become a little unrealistic, which is what you're saying is that has not happened. It's P multiples which have been taken through the roof. So it's a little different from what we've seen in prior cycles, right? Especially at this phase of the market. So when we say, for example, we put out post-quarter earnings reviews and we say, well, earnings have not, in some cases, beaten, but they're not even beating those sort of moderate earnings expectations anymore. It's not just, the bar is not very high in that sense, because estimates are not crazy. Estimates are reasonable. It's P's which are through the roof. Just explain that. Yeah.
Yeah, Prashant, the interesting point that you noticed. So I'll tell you an interesting story around this. Let's say 15 years back, previous cycle, which is perhaps the first mean cycle that we saw, and this sort of investment community was also smaller and perhaps just starting to understand how to professionally look at equity markets, used to be very embarrassed to put 20 XPs or 25 XPs on stocks. That's a fundamental reality. We have tried doing that during that phase in the peak of the cycle. We used to get slammed, both by investors who used to actually question us on the rationale of a high PE such as 20-25x. At the same time, even trying to internally approve these sort of valuation metrics used to be very difficult. So what the market used to do in that embarrassment of not being able to put very high PEs, they used to take up earnings growth. So the previous cycle, what happened is, as we moved up all the way to FY 07-08, the earnings became frothy because that was the only way to justify your stock price targets or stock prices. And then when the collapse happened for various factors, cyclical factors and other factors that we all already know, there was pretty massive earnings downgrades that we saw at that point of time. Now, the difference with this time is that people are a bit more liberal. I don't feel embarrassed putting 100x PE rate on stocks. Nobody questions me. People feel happy about it. And the same is the situation 50, 70, 80x PE. So now we don't really need to keep very high earnings for the next 2 years. The other opportunity that analysts are using is using FY 28, FY 29. These creative mechanisms used to be slammed earlier. So
sure. Venu, yeah, I hear you, completely hear you and get your point that there are different ways of justifying the rise in stock prices, right? But I have a very simple fundamental question. And, they say that markets can stay irrational far longer than someone can stay liquid. So now if you're saying it's the beginning of phase 3, this phase of invincibility, the question is that given the extent of domestic liquidity, just the amount of money pumping through the system, could this continue for a whole while longer? And so therefore, should one participate knowing fully well this is perhaps a phase of irrationality we are in? Who's to say this turns tomorrow? Because, standing in front of a wall of money is like standing in front of a speeding train, isn't it?
Well, that's right. And that's the reason why our broader philosophy is to stay invested, but then alter your portfolio in such a way that you don't end up taking risk on low quality companies. Right? That's like a tricky thing. We're okay with high valuation companies as long as they're high quality or have a visibility for growth. So that's the only difference. And number two, remember that when liquidity is there, liquidity finds a way to get sucked, which primarily means you're going to see an acceleration in fundraising cycle as well. And not all of the fundraising will be high quality.
Okay. Just to pull on that earlier thread, Venu, you said that 100p, nobody's embarrassed anymore of putting 100p, right? And using, you were saying, using creative methods like using FY 28, FY 29 earnings estimates. So if you want to finish that point, or if you've already done, my question is it also because people are, in terms of their holdings, we say that, people are becoming long-term investors, right? Nothing matters. But actually, you will only use FY 28 and FY 29 if you don't really care about FY 28 and FY 29. If you are confident that you will be able to justify something so that you can make money very quickly. In 3-4 months, you're able to make a lot of money, which has been happening in many stocks. Just respond to that.
Yeah, that's right. See, investment horizons over the years that I've seen last 20, 25 odd years has essentially shortened quite materially. So the focus usually is on the near term in terms of earnings momentum and growth, right? So you really don't know which stocks which are generating 30% growth today will actually be 0% growth 4 years from now. But it's a classic extrapolation that you can do and then easily justify a target price today, right? Which primarily is a factor which is being done across the board, across investor base, across sell-side analysts, right? So that becomes easy to then justify sort of creating that narrative around story. So that's again another factor, right? If you're very near-term looking, then you don't really look at what is priced in for the long term. We typically publish a reverse DCF trying to explain that, hey, you can't have 25% growth for the next 30 years for this particular stock, right? Even if it has 35% growth today. So these questions are usually less asked when your horizons are very small in terms of investments.
Venu, just one last question. Sorry, I'm just completely not changing track, but very interesting sort of, way to look at things and what is going on. Putting some historical context into it as well. Elections, we are into election season, right? And some are saying, general elections was barely a speed bump, so why should state elections matter? Others are saying, especially big state like Maharashtra does matter. In a month and a half, we'll be into it. And the ruling party seems to be on the back foot, clear back foot, at least right now. and things may change. Just are you getting any questions from investors on this stuff at all?
Yeah, so earlier state elections used to be not focused much, but actually we're getting a lot of questions these days on this, because I think it is more to do with the fact that if the mandate state to state turns weaker for the ruling government, then what does it mean with respect to broader thinking around subsidy allocations or new subsidy schemes? I think this government has done an excellent job with respect to managing the budget fairly well. They did increase subsidies, but to an extent it was still within the broader mechanisms of fiscal deficit reduction. But then it did come at the cost of not being able to increase capex beyond what we was earlier thought. So the market is weighing between capex versus subsidies and how that goes over the next 12 to 18 months. So that's why they're focusing a bit more on this time.
Venu, we'll leave it there. Thank you very much for joining us. Great speaking with you. Appreciate your time here on CNBC-TV18. Well, I think from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference, our colleague Nimesh Shah caught up with Sundaraman Ramamurthy, Managing Director and CEO at the Bombay Stock Exchange. Exchanges, of course, are right at the heart of this big bull market that we are seeing. He began by asking Mr. Ramamurthy about the draft paper from SEBI on the F&O segment as the deadline for seeking public comments ends today. Listen in to what he had to say on the paper and, of course, on the company's outlook for scaling volumes going forward. Take a look.
There are some views in the country, across the country in some places, that the volumes in equity derivatives market in India are slightly very high, and there are retail participants who are losing money, and there is a crowded volume on expiry days. So the regulatory intervention is to sort of address these concerns. And naturally and necessarily, therefore, they are meant to have an impact on the volumes and the participation levels.
Sure. Have you heard from the regulators so far on what the thought process is? What kind of data has been asked by the exchanges to submit as far as the volumes in the derivatives is concerned, which has been a bit of a concern for a lot of politicians, government officials, as well as regulator?
So the regulatory process in India has always been a process of co-creation. So before the entire draft paper came into circulation for public comment, SEBI had an expert working group where significantly large amount of data pertaining to various aspects of derivatives trading were discussed. Post that, the outcome of the expert working group was taken to the Secondary Market Advisory Committee, post which the paper is published. So tomorrow is the last day for public to provide comments on the paper. Our understanding is that regulators will collate all the necessary, all the comments, and based on which they will decide which one will go, which will not go, how modified it will go, and all that stuff. And after that, they will have their own internal approval process, post which the final circular will come out.
Sure. So, any deadlines, sir, in terms of timelines on by when you expect the final circular to come from regulator?
On the final outcome, I don't have the deadline, but the public comment tomorrow is the deadline.
Sure, sure. Sir, a lot of analysts believe that removal of BankX can impact the EPS for BSE by 10%. Is that a fair assessment? And what is your thought process in terms of whether BankX can get removed by the regulators?
First 2-3 points here. I do not know what is the impact on EPS because the MIIs, we work on a very different pedestal in terms of how do we service the investors and how do we service the market. And the regulatory effect is not to remove an index. The regulatory effect is to say you should not have more than one weekly expiry. So BankX, if it is not the index which is for weekly expiry, because regulators have talked about one benchmark index. Benchmark means it should be only Sensex. So by that interpretation, BankX will not get removed. It will become a monthly expiry.
Got it. But the other way to look at is that in that scenario, BSE will actually benefit because the other exchanges far more, indices which are in the FNO. If those goes removed and it's only monthly, as you explained for BankX, this will mean that a lot of volumes can shift to the BSE Sensex. Is that a fair way to look at?
No, the way we are looking at BSE is this. As you know, we just very recently started this product. The way we are benchmarking ourselves is against ourselves. Like if yesterday I am performing X, how do I increase it to Y? If yesterday I had one product, how do I increase it to multiple products? So honestly, that is the way we are benchmarking. So going forward, what we will do is, we will be striving hard to create monthly volumes, more monthly products, and therefore we are already venturing on investing into technology, infrastructure, people, etc.
Sure. So in that case, what is the market share currently for BSE in the FNO market, and what's the aspiration goal or the number that you're looking at in FY25?
When people ask me about market share in derivatives, I tell them it is 100%. I'll tell you why. Because if there are same products between two exchanges, it is fair to put a market share. When the products are unique, how do you club all the unique products together and compute a market share? So I typically jokingly say my market share is 100% in my own products. But having said that, currently I understand out of the total contracts traded, the volume traded, BSE is trading 20% in overall. We have not put ourselves a target in terms of value here because we have unique products. We have always been putting ourselves a target in terms of number of products that we have, number of market participants who trade with us. If you recall, we started with hardly 8-10 people. Today we have around 400 plus people who have registered with us and who trade regularly. We want more people to come in. We want more investors to come in, more FPIs to come in. That is the way we are measuring our success.
Spoke about the FNO market, but what about the cash segment? Even there, it's been lacking to the competitor, but there has been some initiatives that you have already done. If you can talk about the cash segment, what the BSE market share currently is, and what are the things that you are looking to do or add in that space?
Very valuable question. If you recall, when we started, we had around 5 to 6% market share. Today, we are having around 7 to 8%, sometimes 9% market share in the equities market. But more than the percentage, the base itself has grown in a big way. Compared to around 6,000 odd crores on a per day basis, we do around 9,000 odd crores on a per day basis now. One of the most important, or rather two of the most important points to note there is, the capability to do product differentiation in equities is very limited. So what we can do is only service differentiation, which we are already doing. The second is lack of institutional participation in equity segment of BSE. So traditionally, the FPIs never used to trade other than block deals at BSE. Block deals, they used to come to us because of the inherent advantages BSE had been providing for a long time now. In the secondary market normal segment, the participation was not happening from FPAs mainly because if they're brokers, they don't give instructions to the brokers to go to which exchange. But typically brokers used to punch in one exchange because at the end of the day, FPAs required a single contract note. They didn't want for a single order multiple contract notes. So this was a problem in existence. Fortunately, this has been rectified now. SEBI has made it mandatory. It's mandatory now for both the exchanges to provide in both the segments a single contract note for institutional participants. It has to come into work from October. So we are putting all our efforts to ensure the custodians and others are fully geared up for this change. Once this happens, we think that we will be able to attract some amount of FPA volumes along with it institutional volumes. So that should improve our situation in equities market.
Sure. So the other big growth engine for you has been the Star MF. That platform has done really well for BSE. Any plans to monetize some value or unlock some value in Star MF going forward?
If by question of monetization you feel whether we will be selling it across, no, the approval has been given to the exchange. So it is part and parcel of the exchange. There are other areas where we can improve our performance in mutual funds. You may be aware that we have already embarked our journey on version 2 of our system, and it is going live. It's already gone live on a test basis. On a full-fledged basis, we will be completing that by end of this year and sunsetting the older system. I'm sure you're aware already on a monthly basis we are touching new highs in terms of volume processing. We process around 5.25 crores of orders per month now. Out of the 3.8 crores is actually SIPs. We are very bullish on mutual fund segment because compared to the entire population and various numbers and paradigms, I think we have not even scratched the surface in respect of mutual funds.
All right, that is the top management of the Bombay Stock Exchange sounding quite bullish on the mutual fund business, looking to grow more institutional participation and looking at more monthly contracts, more product innovation on the F&O side to take their market share higher from the present 20%. Well, with that, we'll take a quick note. But the news of the market's actually looking good. 93 points up on the Nifty now, so it's been pretty resilient. And some of the life insurer stocks, we should look at them. HDFC Life, SBI Life, that's where the buying is very, very clear this morning. So these are the major up movers. And then there's TCS, obviously, because of positive brokerage commentary. That stock's been doing fairly well. So that's the market for now. We do need to take a quick break. Come back on the other side, and we'll be connecting with Vinod Kumar Gupta, MD of Dollar Industries, as well as Ramesh Agarwal, ED at Rupa and Company, to talk about the trends ahead, consumer trends, the expectations from the second half, and how business is looking.
Very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities only because people have adopted to motorization as transports.
Welcome back. There's been a big up move in the market right now. The Nifty is up around 100 odd points. It's led by the Nifty Bank. There's no weakness in the Nifty Bank, and that's positive for the Nifty because apart from the Nifty Bank, we're seeing a strong support coming in from the IT pack as well. So all guns blazing right now. So the Nifty Bank has moved to the high point of trade, just about 200 points away from that 50,850 sort of resistance mark that everyone's looking at. IT, no problems there. TCS leading the way. We have a note coming in from a brokerage, Macquarie, and that stocks moved to the high point with a gain of almost 1.5%. And we have a bunch of other stocks doing extremely well. Axis Bank, for instance, has led the Nifty Bank higher too. We'll keep an eye out on what happens with HDFC Bank. That too has now crossed its 50-day moving average. 1638 is where HDFC Bank is at right now. The 50-day moving average on that one is 1635. Remember, had crossed the 20-day or seen support at the 20-day moving average. Above that 50-day moving average, let's see if it sees further buying from here on itself. The second half will have the Nifty Financial Services expiry play out. Let's talk about an interesting theme now. Remember yesterday here, we were talking about, the correlation between economic growth and the sales of underwear in an index that Alan Greenspan followed called the Underwear Index. Well, while we talk about its impact on the economy, etc., let's talk about how the industry itself is doing. So we have a special discussion lined up for you. Dollar Industries is, joining us today. And along with that, it's Rupa as well. Both of them saw a fairly steady quarter this time around. Revenue contribution for both these companies from the modern trade and new channels remained, robust, whereas we did see from Lowe's a big improvement in the EBITDA as well. But what's the way ahead? How's demand? We do have with us Vinod Kumar Gupta of Dollar Industries and Ramesh Agarwal of Rupa joining in as well. Thanks a lot, gentlemen, for joining in. Let's start this with Ramesh. The first quarter obviously saw some bit of improvement in demand, but the question is, how's the remainder of this year looking? And more so on the EBITDA margin front as well, because last couple of years you were in high teens, closer to 20%. Then you saw a big decline to low single digits, and thereafter you're closing in on that double-digit mark. So in terms of growth this year and margins, what are your thoughts?
Growth this year has been primarily been driven by volume because there is a price resistance. So we anticipate and we are seeing a growth in the demand for athleisure, thermal and ladies wear segment. So there we see a very robust growth. And when you say about EBITDA margins, yes, you are right. The EBITDA margins from 20% it has gone down, but we hopefully will maintain the EBITDA margin in 2 digits, so between 10 and 11% for this year.
And what about you, sir? We have the management of Dollar Industries as well with us. Mr. Gupta?
Yeah, good morning. As regards the EBITDA margin you are speaking, we are trying to maintain in between 11 to 12% for the current fiscal year. It was down in the previous years for some other reasons because of the price adjustments and market going up and down. But now the market seems to be steady and flourishing. And in terms of demand, we understand that there is a consumption recovery both for innerwear and the outerwear. And this is quite visible also in the current market. Sentiments have also been boosted up by the sales kicking off through the quick commerce.
Okay. Gentlemen, more on the local market in just a bit, but I'm just wondering how both of you are looking at your big companies in your segments, right? And how you're looking at exports. I think, Mr. Agarwal, for you, and correct me if I'm wrong, I think exports are still in single digits in terms of total revenues. Dollar is also exporting to many countries and markets. So if you gentlemen could start by telling us what the percentage of exports is now, and then also describe to us the opportunity. I mean, we all know what's happening in our neighborhood, right? Bangladesh. Now, I'm guessing that there is some business to be sort of taken up from there. Tell us if that's possible, not possible, and whether Bangladesh and what's happening there, if that has any positive rub-off on your export opportunity. Mr. Gupta, if you could start, tell us exports as a percentage of revenue and what's the opportunity? What's the scale up?
If you look at the exports is, of course, we are not improving much in terms of exports. The total exports from our company side is hardly 4% of the total revenue. And we are struggling still in the market for getting a big jump. If you look at the Bangladesh is primarily into exports of outer garments. They are not into the inner garments. So whatever scene is there in the Bangladesh, that is not going to even create opportunity for us or not even create something negative for the Indian products into the exports. And
okay, fair enough.
Pardon?
No, I was asking, sir, because of, I mean, a lot of you folks are in the athleisure segment, right? Or outerwear as a category is something that most companies are also trying to now grow in because that's where the margins are as well. But yes, please do complete your point. What is the scale up in exports that you see at Dollar Industries? And then we'll get Mr. Agarwal's take.
Yeah, in terms of exports, of course, athleisure is a big market. But then right now, from our side, from Dollar point of view, we are struggling in the market in terms of getting cheap products coming from China and Bangladesh into the market. The price is a big factor there. We are still struggling and trying to sell athleisure into the market. But we are hopeful of maintaining 10 to 12% growth in terms of exports this year. And we are trying to also enter into deep of African markets where the Indian products are well accepted by the country.
Okay, got it. Mr. Agarwal, sir, same questions to you. The export opportunity that you see ahead.
Our base in export is very small compared to our turnover. It's around 4-5%. But we see a good traction because we are actively pursuing exports. And when you say about Bangladesh market, yes, it will take time. But yeah, we are getting some inquiries from organized players because Bangladesh supplies mostly to organized big names. So we have a factory ready and it's a fully compliant factory. And we see good inquiries and it will take time, yeah, but that opportunity is there. And apart from that, for our Rupa brand, which we are exporting, we see a good, the last 2 years were not so good, but this year we see a good traction and we hopefully will be able to grow at around 20% in exports, more than 20%.
You will grow about 20% in exports. You know, if I look at the construct of the industry, it's interesting from the listed end of things itself. If you club the revenues of both Rupa and dollar, you get the revenues, the annual revenues of what Lux Industries posts. And if you club the revenues of Rupa, dollar and Lux, you get the annual revenues of what someone like a Page Industries posts as well. I wanted your thoughts on the construct of the industry right now. You know, we start with Mr. Gupta. How much is unorganized? How much is organized? At what rate are the two growing? And in the organized part itself, what's your share of revenue coming in from premium? How much is coming in from non-premium? Because at the premium end, there is a fair amount of competition as well, right? I mean, you have the ABFRL group, Van Heusen doing well. You have Page doing extremely well there as well, alongside competition coming in from newer players like Trent, etc. in the innerwear space too, and Arvind Fashions. So if you could give us a little on the construct of the industry and how you see your growth out there.
Yeah, if you look at the, we are into three category of products, super premium, mid premium, and then the economy range. The economy range constitutes almost 48% of the total revenue, and the mid premium is around 41% of the total sales. So if you look at the structure of the organized versus the unorganized market, as far as the study goes, it is 1/3 for the organized sector and the 2/3 is for the unorganized sector. But then the way the industry is moving now, we are taking a big chunk of revenue out of the unorganized market into the organized market. That conversion is taking place, but then it is being converting at a very slow speed. It is not at a faster speed. But the way the modern retail, the way the e-commerce is taking into the market, we understand that the share of the organized sector will keep on increasing over the taking share from the unorganized markets.
Right. Mr. Agarwal, would you have any sense of the market share for you, your peers, and how is that moving?
We are taking market share from both the upper segment and both the unorganized segment. We have brands in all the segments, like we have economy brand, we have the mid-premium brand and the premium brand. So what we are in the sense like our mid-premium and economy are the share in the turnover is almost equal. So that advantage we have, and we see growth in both the segments. So that means we will be taking share from the unorganized market and as well as the larger players than us.
Where does the market share stand for you?
There is no data as such, but based on the turnover, I mean, it's very difficult to gauge. There is no data. There is no published data on that. So.
Okay. All right, gentlemen. So let's wind this down by getting individual sort of outlook on your respective businesses as well. Both of you have reported margin expansion in the first quarter gone by. So, Mr. Gupta, if we could start with you, give us a sense of what we can expect in terms of top line growth, because the first quarter, the top line was a little flat, though the margin improved, and you're saying that you're looking to hold margins at the current 11 to 12% trajectory. What about revenue growth this year, full year?
In terms of revenue growth, if you talk of both volume and value, we aspire to grow at a CAGR rate of 10 to 12% each year, and to reach the turnover of 2,000 crores by the end of March 26. And that's our target. And if you look at the figure of the previous year, 23-24, you will also see that we did a good jump in terms of both volume and value. And that pace we are going to maintain in the current financial year and the year to come.
And Mr. Agarwal, what's your volume growth target? Also, you mentioned that you're looking to grow margins to at least hit double digits this year on a full year basis, right?
Yeah.
Also, just the volume and top line projections, please.
See, there's a pressure on prices, as I said. So volume growth will be more than the value growth. So value growth we see to grow at around 15%, and volume would be higher, so maybe 18-19% volume growth.
Okay. All right, gentlemen, we will leave it there. Thank you very much for important insights into, the inner wear and also the outer wear, businesses that you are building up. Thanks for joining in. Good to know. And that's pretty interesting that I think, though it's a very small part of the business, but they're saying that some inquiries by larger organized players who are right now sourcing from Bangladesh, some of those inquiries are beginning to come to companies like Rupa. Rupa at least mentioned that they're getting some initial conversations going. But with that, let's get back to the market. The market's been surging all the way. I mean, it's actually a nice pickup, 128 points now. 24,700 is on the board. Mitesh, so the bulls are charging down. They've begun their charge, shall we say. What are the trades?
Yes, so two things here, Surbi. One, the Bank Nifty is picked up and is now at that breakout level of 50,800, 750 zone, which is what I indicated. Let's hope it clears that. Once that happens, the Bank Nifty can gain about to about 51,400 and in good case 51,800, which is a 1,000-point rally, and that should prop the Nifty up as well. So say on the long side, the stocks that I have, LTTS I think is a buy and Kotak Bank is a buy. LTTS I would recommend buying with a stop at 52.90 for targets of 5,500. And after a long time, Kotak Bank is on a buy side trade. Keep a stop below 17.79 here. Look for targets of 18.50.
Okay, all right. Mitesh, thank you for that. By the way, one more set of stocks, Mitesh, if I can sort of put this to you. Mazgaon is down 5% now. So there's a bit of a breakdown. Cochin is down about 3% and Garden Reach is down about 4% as well. Anything strikes a chord here in terms of any trade one can take? Yeah.
Prashant, you can short these cash stocks. I think they are now going through a slightly bigger correction. I'm looking at a target of around 42.85 to about, and in the worst case scenario, 41.50 for Mazgaon Dock. Similarly, Cochin, if you look at the charts, I think while there is some support which is at about levels of 2,100 is maybe showing a pattern of breaking below that. If that happens, I think this decline should extend and this correction could see the stock price head to sub 1,900 levels. So I think this is very clearly a pattern of stocks which have done extremely well now going through a slightly bigger pullback.
Right.
Just a quick word on two more names. Actually, one more name. Because Ola, of course, doesn't have price history. Ola is down in the day now. So it was up about 6-7% at the day's highest point. But I think for the first time since its listing, it's actually now lower. 1%, 1.5%, hardly anything. 3/4, 0.5% or so. But of course, volumes are really one of the highest. But it's settling down a little bit after the non-stop breathless rally. Just wanted your view, Mitesh, on Edelweiss. Again, it's almost into 3 digits now. Stocks at about 98, 7% higher.
Yeah, Prashant, I think a very good breakout is taking place over here on the long-term charts. It did a good range of about 85 to about 60 for 3 to 4 months, and then now is breaking above that. I think the target on the upside is minimum is 110, but looking at the long-term charts, a good chance that I think the stock might head towards 120 odd levels. So 110, 120 could be two trading targets here. Add it slowly. It's already had a good run up. So buy partly here, get a 4-5 point dip, add there, and I think keep a stop below 18 points.
All right. Thank you for joining in, Mitesh, with your trades. The market is doing extremely well, 24,700 on the Nifty. And we do have Interglobe Aviation doing extremely well as well. One of the beneficiaries of lower crude. But speaking about crude, we take a short break now. Come back on the other side. We focus on the commodities markets. Manisha joins in.
Climbing and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology. a 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2%.
Welcome back. So it's a good morning for equities. Let's see what's happening in the world of commodities. We have Manisha with us in the studios now. Manisha, good morning once again. So what do you have your eye on?
So I'm looking at the crude oil prices because the major price moves have come in for this one. We've seen near 3% of decline in the overnight markets. And with that, when you look at the last 1 week, it has been a 6% of a cut that you can see in case of crude prices. Well, a few reasons why the crude prices are under pressure. One, the supply concerns really seem to be going away. And this is as there are hopes of a Middle East ceasefire coming in. There are conversations happening right now in Cairo, Egypt, and that perhaps has taken some premium of those prices. The other thing is about the China demand concerns. All the economic data that we have seen coming from China has been on the weaker side. The Chinese demand itself has been weaker. And when you look at the Chinese exports, especially when it comes to gasoline, well, they declined by 35% in the month of July on an year-on-year basis. Apart from that, it is also about the soft refinery margins. The heating oil prices also are trading at a 14-month lows. So when you add all of that together, if you look at the last 1 week itself, we have seen very sharp decline come in for the prices. Crude oil, as I was telling you, is down 6.5% in the previous week. We also have seen 5 to 6% of decline come in for gasoline and heating oil, and the gas prices also have declined by more than a percentage point there. Important to watch crude because the latest PPAC data shows that when it comes to self-sufficiency in sense of crude for the Indian markets, well, that has actually seen a decline from almost 12.2% in the previous year. The first 4 months show 11.7% of self-sufficiency for the Indian markets. And the next table will also show you on what is the crude oil import dependence that India has. Well, it was at around 87.8% of what we were importing as per our requirements, but that has gone to a higher 88.3% in sense of, and this is of course for the first 4 months of this year. And as you can see, it clearly has been rising. India imported 84% of its requirement in FY21, 85 to 87, and we only seem to be going higher there. So very important to look at the crude oil prices in the international markets, and of course a decline today does augur well.
All right, thanks very much, Manisha, for that. That's the commodity space and focus. And of course, I mean, the next sector is also heavily a commodity play, which is the cable and wire segment. UBS has put out a note with their thoughts on the space and why it looks good, their top ideas and more. Upasana is here with details of what UBS is saying. Upasana, over to you.
Well, that's correct. UBS has written a note on cables and wires segment. It has initiated a buy rating on KI Industries with a
target price of 6,150 and a buy rating on Polycab with a target price of 8,550 per share. It believes that the segment is poised to grow 2x the GDP growth in FY24 to FY30, and it expects that the current $8 billion segment is set to grow to $20 billion in FY30, and market share of the top 5 companies will certainly rise. It believes that the shifting in global supply chain will lift the export revenue from $2 billion in FY24 to as high as $5 billion in FY30. It also expects a revenue CAGR of 20% and EBITDA CAGR of 25% from FY24 to FY28 due to multiple triggers such as robust demand, operating leverage, growing market share, and robust export penetration of the companies. Now, coming to KEI Industries, the brokerage says that it is a consistent earnings compounder and only pure play on cables and wires. The company offers multiple triggers such as growth for cables and wires is set to sustain for a longer period of time, scope for market share gains in branded housing, wires and cables, and also export ramp up. Now, coming to Polycab, the brokerage says that it is a cyclical growth champion, beneficiary of a long-term electrification growth. It has a significant room to grow its total addressable revenue share, and FMEG consumer pull is the key for the company. It also expects better than expected domestic volume growth, market share gains, and also export ramp up are some of the key near-term triggers, is what the brokerage has highlighted. So all in all, we are seeing a positive note written by UBS on cables and wire companies.
Okay, all right, Upasana, thank you very much for that. We will take a break on that note. On the other side, we are back with our special segment, The Economy. Lata today will connect with Mahesh Vyas, MD and CEO of CMIE, and K. Ravichandran, Chief Ratings Officer at ICRA, to decode if a private corporate capex cycle is indeed picking up.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome to It's the Economy. This is an important discussion. Has the private corporate capex cycle picked up? That's the question we are asking. Going by the macro GDP numbers for FY24, you know, the one that was announced on May 31st, gross fixed capital formation grew by 9%. Now, this includes government capex, private capex, household capex. Okay? We know from the budget that government capex has grown by 25% last year, state plus center. We also know that household capex has been strong, at least double digits, because of the strong real estate purchases, you know, home and dwelling. By implication, by reduction, it appears that private capex must have grown by only low single digits. But let's ask the experts. Joining me now are Mahesh Vyas, Managing Director and CEO of CMI, and K. Ravichandran, Chief Ratings Officer at ICRA. Gentlemen, good morning and thank you very much for your time. Mahesh, I just saw the last data that of CMI that you sent over the past 1 year. Actually, it's the quarterly data is kind of all over the place. You tell us what trends can we glean. Are the number of projects announced encouraging or projects completed encouraging?
Thanks, Radha, for having me on the show. Let me tell you that there is a lot of noise if you look at the quarterly data. I agree with you on that. But I think we need to step back a bit and take a look at the emerging scenario. What I see from here is that in 22-23 and 23-24, we did see a pickup in investments. So new investment proposals did pick up quite substantially. In fact, from 14-15 till 21-22 or so, we had an average investment per year, new proposals of about 20 trillion rupees a year, 20 lakh crores. And in 22-23, we saw this go up to 40 trillion. That was big. And then in 23-24, it went up again by 31 trillion. So an average of around 20 trillion per annum for many years. Then we have 40 trillion followed by 30 trillion. So I think this is a very encouraging sign that new investment proposals have increased substantially in the recent past. If you look at the June numbers that I can see on the screen now, it's disappointing, but I don't think we should be carried away by that. That came at the end of during the election cycle. Things were a little quiet then. We got to wait for some time, and I think we can expect the good rollout that we saw in 22-23 and 23-24 to continue into 24-25 as well.
What is I mean, these are big numbers, you know, 13 trillion, 1.2 trillion, 6 trillion. So I found it difficult to get a trend. What is the year-on-year growth that you are seeing in FY25 or in the last 6 months compared to a year ago? And how does that compare with the secular trend, say a 10-year trend, 5-year trend, etc.?
So the problem is that investments don't go in these orderly manners. You know, these are growth in investments, so it becomes complicated to make sense of the growth rate numbers. And therefore, you were talking about the numbers being very volatile in the numbers I sent you. So it's best for us to step back a bit, look at the larger trend, and the larger trend I see is new investment proposals worth 20 trillion rupees used to be made per annum flat for nearly 7-8 years. And then suddenly in 22-23, we see this rise up to 40 trillion. That's a doubling, if you want percentages. Okay. And then you may say that the next year, 23-24, we saw the number drop to 31 trillion, which is like a sharp fall from 40 trillion. But you look at it with respect to 20 trillion before. So we are pretty good at 40 and 30 trillion in the recent past. And don't look at June, it is misleading. Let's wait for a few more quarters. I think the story is turning out to be good.
Okay, that's encouraging. Let me get Mr. Ravichandran in. Mr. Ravichandran, what have been the trends that ICRA has observed?
Yeah, as far as we are concerned, we track the private sector capex very closely since we rate the who's who of the Indian corporates. If you go by the the large corporates, listed companies, etc., there has been steady rise in the capex, as seen from the balance sheet numbers. For the last financial year, we, as per our analysis, is close to about 9 lakh crore. Most of these capex, happened in capital-intensive old economy sectors like oil and gas, renewable energy, thermal energy, and metals, telecom, automobiles, etc. So these have been the capital, guzzlers. But one discerning trend that we have been noticing of late is that a lot of announcements have been made with regard to the new economy sectors, especially in the data centers, pumped hydro storage, and in the battery, manufacturing, EV manufacturing, and so on and so forth. Green hydrogen, green ammonia, etc. So these are all announcements which have been made, which we believe will further, increase over the next few years as the projects, get on the ground. So composition of the capex is, shifting more towards the greener side, based on the announcements made. That is one, major shift that, I wanted to bring to attention.
Now, can you, like Mahesh, give me some comparison? What used to be the pace of private capex, say pre-COVID or, last 10 years, if you want to just average it out, and how do the FY24 and FY25 prospective investments compare? Mr. Ravichandran, that's to you.
Yeah. Okay. So with regard to when we have to look at the let's say the projected capex for the coming years, of course, in the current year, first quarter, perhaps we'll not see much of a growth because of the fact that we had elections and heat wave and so on and so forth, which delayed construction. But having said that, I'm sure it will pick up in the coming quarters. So with regard to the growth per se, I'm expecting at least 15 to 20% growth over the previous financial year. That's about 9 lakh crore that we saw.
That is nominal capex.
Nominal,
unadjusted for inflation.
Yes, very much.
Okay, and how would this 9%, you said nominal would be 9%. How does it compare with a longer term trend?
No, 9 lakh crore. Actually, I mentioned 9 lakh
Sorry,
crore.
9 lakh crore. What would be the percentage growth?
Yeah, growth. See, growth, that has picked up, since 21, 22. Post-COVID, there has been certainly pick up. But otherwise, the past growth would have been about, 10, 12%, I would think. So there has been, certainly sharp rise in the capex growth rate. With regard to the, but what one has to see is with regard to the overall, GDP, with regard to the overall, gross capital formation, whether private capex is adequate. So that is, when we have to look at based on those trends, perhaps, the share of private capex is perhaps is not growing that much. Reason could be the demand side, issues. And also we can look at from the capacity utilization of the industry across, different sectors. Even if you go by the RBI's published numbers, we are about 74-75%. So demand has to pick up, and wherever demand is visible, companies are going forward and announcing large capex.
Okay, actually, this capacity utilization, which the RBI governor always makes a part of his speech, has remained at 74-75% for how many quarters now? Probably 20 quarters now. It's not showing an increase. So that was worrying whether that will trigger fresh investments. Okay, Mahesh, you said that you're encouraged by the flow of new investments in FY23 and FY24. What about completion of projects? Has that dramatically improved compared to the previous 10 years when we saw a lot of infrastructure getting stalled?
Yes, the story on completions is also very encouraging. So just to give you an idea that, again, if I look at from 14-15 onwards, we used to see completions of the order of about 5 to 6 trillion rupees per annum. And in 23-24, this number shot up to 9 trillion.
Okay.
So it's a 50% increase. So suddenly a large number of projects and essentially infrastructure projects did get completed in this year. And it was a remarkable number. So we have always expected 9 trillion to get completed, and it was always 6 trillion. Till 23-24, when the 9 trillion actually happened. So I think this is a big turnaround. Again, if you look at the June numbers, it is misleading. No completions were announced in the June quarter, but I expect in the coming quarter or two, this number to come up again and completions to start getting corrected again.
Okay. We will just play your stalled projects as well. That chart has also been made. But Mr. Ravichandran, would you say that the record of projects getting hijacked in between, stalled or announced and abandoned has fallen considerably?
Yeah, I would think so. These days, most state governments are very particular about, investments, and they are going the extra mile to see that, last mile issues are addressed adequately. Even labor issues and other aspects, there are certain improvements in pockets. So I would think in terms of completion, there has been good progress, I would think. The real estate is one pocket where, we saw a lot of stall projects, and even there with the rise in the, real estate prices, we have seen deals happening between stressed developers and, financially strong, developers. So real estate is one space where we have seen a lot of, movement of, assets between weaker and stronger, players. Otherwise, with regard to, the traditional core sectors, with regard to completion per se, I would think there is good progress.
Okay. No, I agree with you that real estate stalled projects actually have gotten, resolved and reconstructed, revived. Mahesh, you have been CMI has been keeping this data forever now. Ever since even I was a student, we used to be given these numbers. Does it feel like we are, getting into a very good cycle? Does it feel like 2004 or 2005 when we took off? Are you getting that sense in terms of the speed of the capex cycle?
Not yet. I would be a bit cautious over there. The investments that have been announced are mostly in the greenfield area, energy, aircraft purchases, and the completion is infrastructure again, largely infrastructure like the Eastern Freight Corridor, which is a big investment that got completed. And I think that's a very, very good project which got completed. So we're doing quite well on infrastructure. Infrastructure investments have been good, both in announcements and in completions. The problem that I say that I'll be cautious is that I don't see private sector animal spirits in people saying we are setting up investments in large numbers. So I don't see the corporate financial statements still showing me a good increase in capex. That is still in nominal single-digit growth rates. That is, we still need to wait. So I think if this has to happen in phases, the big infrastructure projects have taken off, and maybe very soon we will see the private sector taking off as well. We should be hopeful in that manner, but I'll be cautious.
Okay, fair point. That's actually extremely well summarized, Mahesh. We have seen infrastructure because it was government supported, but it is only manufacturing and construction that would be private sector supported. And over there, there is optimism, but there is room for caution as well. And we are not in the exuberant state that we were in the first decade of this century. Thank you very much, Mahesh Vyas and Ravichandran, for laying out the capex cycle and the state it is in. Cautious optimism is the word from our experts. Wrap up on Bazaar on that cautious optimistic note. Markets very much in the green, especially the Nifty Bank after a bad patch. We wrap up on Bazaar on that note. Chartbusters coming up.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Bengal is not a place safe for women. Bengal has failed its women, not Bengal society. The present government of Bengal has failed its women folk. Bengal should again be brought back to its pristine glory, where women had their own respectable place in society. That has been lost. They are scared. They are scared of gundas. This has been created by a government which is insensitive to this issue. You know, we take pride in the fact, Yatra Naryastu Pujanti, Ramante Tatra Devata. Where women are honored, there the gods rejoice. But unfortunately, in Bengal,
IOC, HPCL, BPCL, all these oil marketing companies climb as crude prices decline 3% overnight on the back of easing supply worries, hopes of a ceasefire in West Asia. These stocks fly away.
Nuclear Software is locked in a 20% upper circuit after the company saying that the board will consider a buyback of its equity shares on the 22nd of August.
All cargo logistics also climbs more than 8% after recording its highest ever monthly volumes for the month of July.
Polycab is up nearly 1% and was off the highs of the day, but brokerage UBS initiated coverage on the stock with a buy rating and a price target of 85.50, calling it a key beneficiary of long-term electrification growth.
ADF Foods too up nearly 3% after 4% equity worth about 100 crore changes hands in a block deal at about 227.5 rupees per share. Good morning, you're watching us here on Chartbusters. I'm Manglam Malu, with me Hormaz Fatakia, and as you can see at the top of our screens, it's a roaring market this morning itself. Opened fairly well thereafter, picked pace and currently at the high point of trade. 24,730 is where we are at the Nifty. The good part is that it's being led by the Nifty Bank. The Nifty Bank was an underperformer in yesterday's trading session, but now as we speak is up almost 1%, nearly 500 points, and is above yesterday's swing high as well, holding above that 50,800 mark. So looking good for the markets.
Looking good indeed, and the Nifty Bank is the one, right? 58.50 is that level which it needs to cross for further upside is what the chartists were suggesting, and it is right at that level for 58.50. The broader markets though are a little subdued this morning, and the Nifty mid-cap index is up 0.3%. The small-cap index is also up a similar quantum. There are specific pockets though that are not doing well. We'll get to them as the show goes by, but there are lots of corporate conversations lined up.
Lots of corporate conversations lined up. So let's bring up our first one, BKG Foods International. That's the one on our radar. The company scheduled a board meet on the 23rd of August. That's this Friday to consider an acquisition. So to discuss this and more and their growth plans, we do have with us Manoj Verma, who's the Chief Operating Officer, joining in now. Thanks a lot, Manoj, for joining in. 23rd is the board meet and it is to consider an acquisition. We're just trying to understand what exactly are you looking to acquire? It's the size, target, geography. If you can give us some sense.
I think let's wait for this meeting to happen and get things through. But no, this is not about geography. This is about getting into categories, expansion into categories. That's what now we're working on.
So what categories are we talking here? And I'm not specifically asking for the name, largely because the board meeting has still not happened. So what we're trying to understand is perhaps the size of the acquisition. Will it be a partial investment? Will it be a full acquisition itself? And is it what category? Is it similar to yours? Is it ancillary? Is it sweets? Is it liquids? If you could give us some broad sense.
So it's like we already are in it, and in fact, in the past we've been talking about it to making our footprint stronger in the QSR or frozen stuff. So this would be like of the same.
Is that a listed company?
No, that will not be a listed company, and we'll be taking high stakes in this stuff. So it will not be a full acquisition as well.
Manoj, good morning. Thank you for joining in. We'll get to the business aspects of things right now. How has demand been so far in the quarter gone by, in the current quarter actually, and what is the volume and revenue growth target that you're projecting for FY25? You had earlier projected a 13 to 15% volume growth and a 2 to 4% price growth guidance. What's the current trajectory looking like as the quarter has gone by so far?
I think it looks like that what we said and what we have planned for ourselves, we certainly should now be on track on this stuff. That's what it is. We're already into the festive mode. And I see quite an excitement around when we speak to our channel partners, when we speak to trade in the market. I mean, I see quite a positivity. Good in last couple of quarters is that now the rural demand, which is now picking up. In fact, it is ahead of the urban demand. That's where it is. So things are looking pretty bright at this point in time.
All right, things are looking pretty bright. Do you want to up your guidance that you've given to 13 to 15% volume growth with 3 to 4% price growth? Can you outdo that?
See, we're talking of the full year number, so that's where we certainly should be there. I know if thing goes well, if let's say category grows even faster, so I think these numbers should also be indexed to that.
And your margins, you were expecting at least 0.5% improvement. Do you think you can do better than that as well?
See, eventually, yes, that's a journey, and which is what we have said, let's say by 50 basis point year on year, we would want to increase on the bottom line. And that's what teams are working on. So across vectors, that work is on. And this is what we certainly will do. More importantly, we are not just only focusing on the bottom line. Our task is also to get the volume growth in place. So that's where we are.
What about utilizations, Manoj? Current utilization being around 40 to 45%. Has that number gone up? What is it that you're targeting in terms of peak utilization, and how much are you expecting your new plant also to contribute to your incremental revenues going forward?
So the capacity is what we have built for ourselves. This certainly is ahead of times, and that's where we are at about 44%, 44-45% kind of utilization. The kind of volume growth we are talking of, so if we continue to deliver that stuff, so in say 3 years' time, we should be about 70% plus kind of a utilization. And once we cross the threshold of say 80% or close to 80%, then would be the time we would look at for the expansion or so. So that's what is the plan.
All right. So far you have capacity on ground. Just wanted your targets on your direct reach as well, because you've increased it from a little over 1.6 lakh outlets to about 2.7 lakh outlets in June. Where does that number go by the end of this year, and what are your target market shares in both core and non-core markets?
So this year our intent was that we should reach to 300,000 outlets directly. We started the year at that point in time we were at 2.5 lakh outlets. That's the target for the year. I think we will certainly surpass this number. That's the kind of work which is on. And eventually it will give us increased indirect reach as well, which perhaps will not be fair to quantify, but certainly from 1.1 million outlets, what we are today, this needle will also move up.
One final question from my end, Manoj. What is the current status of the cash or the debt that you have on your books, and how is that likely to change once this acquisition that you are planning to announce on Friday, how is that going to change your balance sheet structure as well?
See, it's not a very big acquisition, that's one. Second thing is that ours is a cash generating business. and we also have, good cash on our books. So I think this debt would not be an issue in this case.
What is the cash?
So we have in our balance sheet, if you look at, so we have enough and more cash on our books. It's close to about 200 crores. That's what is sitting there.
All right, thank you. 200 crores of cash and roughly 250 crores that you generate every year as well. So that should hold you in good stead. Good luck with that acquisition. We'll obviously touch base once you've made an announcement to the exchanges after your board meet on August 23rd itself. Always a pleasure speaking with you. With that, let's move on. Let's talk about a special segment for profit coming in from our colleagues at Money Control Pro. The idea for profit today comes in from Anubhav Sahu.
Hi, so we are tracking Aarti Industries, wherein management commentary on supply side pressure spooked the stock and it corrected sharply post its Q1 results. Now, management has cited various global headwinds from the Red Sea crisis to dumping from China, impacting turnaround time and margins. Now, on account of that, management is getting cautious about its fiscal year 25 EBITDA guidance of 1450 to 1700 CR. That said, we see it as a tactical opportunity as the volume growth guidance of 20 to 30% in fiscal year 25 is intact, and new capacities and newer chemical value chains are expected to get unlocked in next few quarters. Secondly, share of exports has rebounded to 55.5% from 43% last year. Discretionary markets such as dyes and pigments and polymers continue to do well. Further, EBITDA margin continued to improve on account of operating leverage in spite of gross margin pressures. Now, in next 12 to 24 months, our company should start reaping the benefits of a massive capex cycle underway. Our conservative estimates pencil in more than 25% earnings CAGR in the medium term. Now, taking that into consideration and reasonable valuations, the current market gyrations provide an opportunity in our view.
Ideas for profit there from Money Control Pro. Time for a short break here on Chartbusters. Up next, we'll be joined by Kailash Lalpuria, who is the Executive Director and CEO at Indocount Industries, to discuss the company's business outlook. Stay tuned. Back on the other side.
That women have no protection. That is what is reflected in the gruesome tragedy that has taken place in RG Car. That should not be repeated again. I respect the sentiments of the mothers. Certainly, the law will take its course. See, my communication with the Home Minister and the Union Ministers, I do not want to discuss the details in public. I'll do my duty. Regarding RG Car, whatever steps are to be taken will be taken. We have the observation of the High Court about absolute failure of the state machinery, which is a very, very serious observation. I am apprised of that. As governor, I will do my duty and fulfill my promise to the people of Bengal.
What kind of thing we accumulated at sub 100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand but there is a momentum in the company's performance as well as in the price.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC-TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer, but provided
Back with us here on Chartbusters, the Nifty remains around that mark of 24,700. The IT index continues to be the top contributor to the gains in today's session as well. It is the 7th straight day of gains for the Nifty IT. The index is trading at a record high as we speak, surpassing the previous record high, which was around 41,380 in today's session, now closing in on the mark of 42,000. But the one pocket that is not doing well today, though, are the defense names, and almost every other defense stock as we speak, be it Masgao Dock, be it Cochin Shipyard, Garden Reach. Masgao Dock now at the lowest point of the day, 8% lower as we speak. Hindustan Aeronautics also now down over 2%. Cochin Shipyard 4.5% lower. Remember, ICICI Securities put out a note over the weekend projecting a 77% downside in shares of Masgao Dock and a 74% downside in shares of Cochin Shipyard, and showing up in the stock price in today's session. Bharat Dynamics as well at the lowest point of the day. Is there something that is on your radar as well?
Well, I'm looking at the Nifty Bank, Hormaz. You know, once again, the Nifty Bank has seen some sell-off at the 20-day moving average levels, upwards of 50,850 thereabouts. It's mildly off those levels, but it's telling you that it's, you know, struggling to cross that convincingly. Can this dip be bought or not is the answer that we're looking at, because for now we are, you know, at higher levels. We're seeing some profits being skimmed off names like HDFC Bank. So the intraday chart of HDFC Bank should come up for you. It's you know, holding around that 50-day moving average mark on that counter, close to around 1635 thereabouts. And there you have it. Along with that, you have Kotak Bank as well, which has seen a wee bit of a sell-off from the top, and as a result of which the Nifty, when we started the show, was close to around 24,730, has come off a good 30-35 points from the highs itself. No such problems for the PSU pack, though. Yesterday, the PSU banks did extremely well, and that was ahead of the Finance Minister Nirmala Sitharaman meeting the heads of the public sector banks and regional rural banks to review their performance. Now, what we learn is that the Finance Minister has asked the public sector banks to actually carry out special drives to boost deposits. That's not all. She's also asked them to implement a new MSME credit assessment model based on digital footprints and cash flows. Sapna Das joins in with the details of that one. Sapna, the message from the Finance Minister is to drive up deposits. I mean, a lot of people in the banking sector right now are a little worried about the slowing pace at which deposits are accruing.
Well, first of all, it's a bit of a change in the situation. It's a reversal of the situation. Like a few years ago, we used to listen or we used to talk about banks doing loan melas, you know, basically to attract credit, or rather to make sure that there is credit offtake. And now they'll have to undertake special drives for deposit mobilization. So, you know, probably the same kind of model is going to be adopted, but for a different purpose altogether. Having said that, this is an important advisory coming from the Finance Minister, probably stems after the Reserve Bank of India's indication or warning that, you know, this could translate into systemic risk. The fact that continuously the credit offtake is much higher than the deposit mobilization. The gap there, I think, is around 300 to 400 basis points, and probably the banks will have to try to do something to make that good. Of course, in terms of doing these special drives, you know, banks will have to like watch out for if there are higher interest rates that are going to be offered on deposits. That is already happening, but that will also translate into higher lending rates to an extent. Some of the banks have already done that. So there are other issues also involved. We'll have to see how this really impacts the economy, if at all, in the coming months. So that's an important advisory being given by the finance minister to the PSBs. Second, she has also told PSBs to expeditiously implement the new credit risk assessment model for MSME lending. This, of course, will be based on cash flows and the digital footprints and not on the balance sheets alone. Remains to be seen how that pans out. Last but not the least, she's also spoken about, banks, government, regulators and security agencies coming together to basically handle cyber risks. Now, here is something that we have to watch out if there's something else that the government has in mind that they may be announcing at some point in time. But for now, all attention on banks in terms of how well they're able to do the deposit mobilization and what kind of special drive they are able to undertake to attract those depositors.
Sapna, thanks a lot for that update. A couple of other stocks, but before that, PSU Bank Index, of course, continuing to trade with gains of 1% higher in today's session as well. Was up yesterday and continuing to build on those gains is the PSU Bank Index, now back above the mark of 7,000, now up over 1%. But a couple of stocks that I wanted to highlight. One is Nucleus Software. That is the one that is locked in a 20% upper circuit, and that is after the company announced that it will be holding a board meeting on the 22nd, which is on Thursday, to consider a buyback of equity shares. Now, this is the third buyback that the company will be announcing after 2017 and the one that they did in 2021. So 20% upper circuit for Nucleus Software. But what on the flip side though is Ola Electric, and that stock made a high today, was up around 4.5% in initial trade, doubled from its IPO price, crossed that mark of 152, and now has cooled off significantly from the highs of the day. And there was also a block deal that took place in the stock, around 3 crore shares, 0.7% equity, around 470 crore rupees, the kind of block deal that took place in the stock here in Ola Electric, 2.5% lower. Take a short break here on Chartbusters. Back with more on the other side. Stay tuned.
Instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints in the last financial year alone. Express and mail trains, which account for bulk of passenger transit in India, saw 47% rise in complaints over the quality and hygiene of food items served to the passengers, according to RTI response shared to CNBC-TV18. So what action has the railways taken so far? Well, 3 contracts have been cancelled and 68 show cause notices have been issued in the last 3 years alone. Let me put this in context. Even after facing nearly 13,000 complaints over food quality served to passengers in the last 3 years, only 3 contracts have been cancelled. Quality concerns over food served in train is not a new issue. In 2017, a CAG audit report revealed that the caterers for Indian Railways have consistently failed to protect the food quality served to passengers from flies, insects, dust, rats and cockroaches. A parliamentary panel report tabled this year said that the lapses identified in the current system pose a challenge not only to the passengers' experience but also to the overall reputation of the Indian Railways. We asked IRCTC to respond over the rising complaints over the food quality, and they have not done so yet.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these 3 put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content, And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older.
Even as the Nifty is off its highs, no problems to the mid-cap index. The broader markets continue to do well, and right now we have Balrampur Chini, a stock that entered F&O ban yesterday, as among the top F&O gainers. So we'll keep an eye out on that. Alongside that, we have Torrent Power, Union Bank, RBL Bank, all of them hitting highs of the morning too. But let's get in a CNBC-TV18 exclusive. Earlier, we spoke with Ramdev Agarwal, who's the chairman and co-founder of Motilal Oswal Financial Services. He spoke about his views on both Zomato and Trent, saying that Trent valuations have run up ahead of growth expectations, though he remains bullish on that, as he remains bullish on Zomato, though he's began skimming his positions on that stock as well.
What kind of thing we accumulated at sub-100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in Trent has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
Some bit of profit booking is seen in Trend today, but then that's expected after stock goes up almost 200% in a year. But with that, it's a wrap on this edition of Chartbusters from Mangalam, me and the team that put this show together. Thank you so much for watching. Trading Hour comes up next.
0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy, and it's 24,700 on the Nifty. It's been a great start to Tuesday morning. 100 points up on the Nifty. The Sensex is up more than about 300 points. It slipped a bit in the last 15 minutes. The high today was 24,735. So it's come off a bit, but still going very strong, up about 0.5%. And it's banks and IT which are pulling their weight today for the market. So the Nifty banking index is up close to about 3/4 of a percentage point, and IT too is firing for the bulls. Hi.
Oh, absolutely. Hi, Reema. Good morning. And what a nice morning, right, on Dalal Street. I mean, everything that you've wanted has sort of shaped up in the market today, given the kind of positive global cues that we have, given the kind of buying from domestic institutions for 8 straight trading sessions. So all of that has been pretty good. And even if you look at it, even in terms of individual stocks, right, very strong listing coming through from Saraswati Sari. 27% higher. It's day one over there. Of course, this is a stock, this is a fairly smaller IPO, but the new listing has done very well. And a whole host of other stocks, the Bank Nifty well above that 50,700 mark. So things are looking quite good. Let's see how the rest of the day shapes up. We, of course, have a lot of global cues to watch out for as well. But TCS has been gaining after brokerage firm Macquarie issued a bullish call on the stock and raised the target price. What is Macquarie saying?
Well, first, the target price stands at 5,740. And currently, the stock is at 4,500. So we're talking about a good 1,200 rupee upside from current level. Secondly, the reason for the increase in target price is a re-rating in the valuation multiple, not a change in the earnings. So now they're valuing TCS at 35 times FY26 PE, and they've also added the company to the marquee list. Now, TCS about 10 days back held an analyst meet where they were showcasing all the technological developments that the company has been doing, particularly on AI front. So Macquarie attended that, where the company demonstrated its investments in AI, some of the use cases, and they came back quite impressed. So they're saying that TCS has created a legacy modernization framework based on AI. So using AI, they believe that legacy modernization can be done with greater accuracy and lower cost, and this potentially opens up a large market for TCS. Not just that, the company, amongst other things, showcased its autonomous vehicle platform with an algorithm that supports more than 50 plus features. So they're just going back to the point that TCS is a very, spends a lot on its innovation. In percentage terms, it may look at just 1.2% of its overall sales, but in absolute terms, the company's R&D spend stands at $300 million every single year. So according to Macquarie, TCS is best placed because it's got the broadest portfolio of services, geographies. It allows for growth, and at the same time, there is lower risk. So big target price increase by Macquarie on TCS, and they've also added the company to their marquee list. But moving on to Innocent Bank, that's surging in trade. The company has got an RBI approval to set up a mutual fund asset management business. Abhishek is here to tell us more.
Well, for IndusInd Bank, the bank has received approval from RBI to set up a wholly owned asset management business of a mutual fund. This is to be done via infusion of equity capital into that mutual fund business. So there are additional conditions in the letter as well. Just to alert our viewers, the promoter, that is Hindujas, have taken a 60% stake in Invesco. So Nomura has written on IndusInd Bank they have a neutral rating with a target price of 1,580 per share. They said that this is a positive development for the bank, given the fact that they are not currently into any direct para-banking subsidiary businesses. So this would be a booster for the bank. Back to you.
Okay, thanks a lot for that. Let's do one thing. Let's slip into a short commercial break. On the other side of the break, we'll discuss what's buzzing in the commodity market. Gold continues to trade around record highs. So more on that coming up in a bit.
A 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back to Trading Hour on CNBC-TV18. Well, it's turning out to be a really good morning of trade. So we haven't really given up on our gains too much. There are plenty of stocks that are in focus. In fact, even in the commodity markets, we've seen some good traction, especially in some of the precious metals like gold. Manisha Gupta joins in, and today we are focusing on the metal space. Manisha, over to you.
Thank you for that, Sonia. Well, yes, gold is holding around its all-time highs, around $2,500 an ounce. Silver has been trading at a 2-week highs as well. And if you look at the broader base metals, industrial metals, they seem to be doing well as well. If you look at the dollar index, that has declined quite sharply, trading at a 7-month lows. We've seen a break below 102 as well. And that in turn seems to be supporting many of these metals, which in any case had gone for a very strong correction in most part of July and the first half of August as well. And then apart from that, the investors also also will be bracing for the FOMC minutes that are coming in on Wednesday, and the Jackson Hole meeting over the weekend will give you a sense on what really can be expected in sense of rate cuts. So ahead of that, we've seen some bit of a opportunity buying coming in for many of these metals there. So when you look at the copper prices with the kind of gains that we've seen, we're trading at around 2-week highs. Nickel has recovered from its 5-month lows. You have steel prices gaining past 3,000 yuan as well. Steel prices did decline to almost 2,700 around the first week of August. So we are looking at good buying opportunities coming in for many of them. Actually, when you look at the last 1 week itself, we have seen copper prices gain up by almost 2.5%. Silver is gained up by 5.5%. Steel is up 3.5%. And good gains is what we have seen in aluminum and zinc as well. Gains of between 3.5% to 4.5% for this one as well. And nickel is gained up by 3%. So the markets are looking at buying coming in here with the decline in US dollar and the expectation of a rate cut. You could be looking at some more buying momentum continuing for this sector.
Thank you very much for that. The metal index, though, is not moving at all. It's absolutely flat. So base metal prices up, but crude prices, remember, have been on a decline. Brent is now at $77 per barrel. But let's get in a corporate conversation going. IndiGrid is on our radar today. Recently, the company had reported their numbers. It was a good revenue growth in Q1. The management said they're on track to deliver the distribution per unit guidance of 15 rupees for FY25. They also recently entered into a partnership agreement with Techno Electric to develop 2 interstate transmission system projects. Harsha, the CEO of the company, is now with us to talk about the overall business outlook and this tie-up that they've done with Techno Electric. Harsh, thank you very much for joining in. First, if you could just explain to us the complete contours of your deal with Techno Electric for these 2 transmission projects.
Hi, good morning, and thank you for having me. This transaction is not just with Techno Electric. This partnership is with 2 other investors called BII, British Investment International, as well as Norfund, which is a Norwegian sovereign wealth fund. So this partnership between IndiGrid, BII, Norfund, and Techno Electric brings together a set of professionally run investor firms with a developer to develop more transmission projects in the renewable energy and energy transition space. And eventually, when these projects are completed, IndiGrid will be acquiring them as a whole. So Techno Electric will be doing EPC for these projects, besides also investing minority equity. IndiGrid will be investing equity. BII and Norfund will also be investing equity. So it's 4 partners investing equity for these projects, Techno doing the EPC. And eventually, IndiGrid will acquire these projects on commissioning in entirety. So the Techno gets to do EPC, IndiGrid gets to have a pipeline for growth assets. That's how the partnership is built.
Okay, got it. So what is the ROE that's guaranteed on these projects? Is it in line with some of the other, transmission assets? And I mean, going forward as well, what should one expect?
So first of all, there are no guaranteed ROEs on the transmission projects. There is only in the regulated tariff mechanism projects. That also has stopped, and then I don't think incremental projects are coming on regulated tariff mechanism even for Power Grid. These are competitively won projects. And there is no fixed ROE for all the investors and developer. So if the project is completed in time, within cost, all of us would be making healthy returns. If it's not, we would take loss to that account. But with the partnership that we already have in place and the track record, we are pretty confident that it will be completing in time and budget. In terms of future, we are looking forward to take this partnership to greater level and do bigger projects. These 3 projects put together are relatively small, but they start, I would say, they mark the start of the partnership in this space between 4 of us, and we will look to grow this and do bigger projects in a similar manner.
So if the project is completed within the stipulated time period, as you're hopeful, then what would be the ROE?
Usually people bid in transmission in the range of 13% equity IRRs, and that's what we'll intend to make over here.
Got it. And if you could also help us with the shareholding pattern, because you're, the principal partner, but there are 4 other partners who will also be investing. So what will be the shareholding pattern?
So in this case, see, most of the investment will be via convertible instruments because There are lock-ins from different partners as well as the foreign investment directly coming in the shares has some issues. So we are, in general, capital contribution-wise, Techno will be contributing 20%, and the rest of us between BI, Norfund, and IndiGrid, the 80% will be almost divided 1/3 between the three of us.
Okay, and before we let you go, can you tell us about any fundraising plans that you would have in order to expand your AUM?
See, at this point in time, we are at 61% leverage. We have another 6,000-7,000 crores of growth headroom already with us. So we are pretty comfortable in terms of growth. We don't have any imminent fundraise being planned right now on a primary side from IndiGrid.
So going back to this partnership, you also indicated that you plan to take it to the next level and bid for more projects. Could you elaborate what's in the pipeline?
Sure. See, in general, the transmission space is looking at phenomenal amount of pipeline. We are looking at almost 1 lakh crores of identified projects that are coming for auction for next 12 to 18 months. To give perspective of scale, over last 10 years, there'll be around 1.5 lakh crores projects bidded out. So it's like a 10-year growth coming in 12 to 18 month period. So we are seeing that kind of a growth pipeline coming for bidding at this point in time. We would look to bid. And even a 5-10% market share would translate into 5,000 to 10,000 crores of pipeline for us, and we are pretty happy with that.
And is there intense competition in the transmission bids?
It's a function of the size of the pipeline as well. There are established players, and there is competition for transmission project. The reverse auction process gets competitively intensive. However, I mean, when there's a pipeline of 1 lakh crore, I think all of us have reasonable confidence of winning projects at rational pricing.
Harsh, great conversation. Thank you very much for explaining the contours of your partnership and the way forward. Need to get into a short break. We'll come back and discuss market technicals. We'll invite Mitesh Thakkar on our show. Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself. as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we do.
Welcome back. One of the big movers today is Nucleus Software. That stock is up close to about 18% in trade today. But remember, it's been an underperformer. So year to date, now it's up 20% on Nucleus Software, so locked in an upper circuit. But this up move comes after a period of underperformance. So year to date, the stock is down 4% at a time when the Nifty IT index is up 17%. In the last 1 year, the stock has given you returns. It's up close to about 36%, but it's still down 24% from its recent high of 1830 that it hit at the beginning of January. So it's done well over the last 1 year, but again, it's 24% off from its recent 52-week high. The reason for that 20% up move is that the board is meeting on the 22nd of August to consider a buyback of share. The company has about 920 crore of cash on its book, and previously the company had done buybacks in 2021 and 2017. And now with the change in guidelines effective 1st of October, the company looks to be rushing in to do that buyback before that window closes. Another big mover today is actually Unicommerce. Unicommerce e-Solutions. Remember, that is a recent listing. It's another 8.5%, and this stock has more than doubled from its issue price of 108. It had a big listing pop, but after that, it continues to climb higher. Pull up a 2-day gain of Unicommerce Solution. Yesterday, it was up nearly 20%, and it's followed it up with another 8 to 9%. This is a company which provides back-end software to e-commerce companies to help with their shipment. But let's move on and talk about All Cargo Logistics, because that's a big mid-cap mover. They've recorded their highest ever monthly volumes for July. Mangalam joins in with the numbers.
Good morning. So, the highest ever monthly volumes have come in for the less than container load business, which is basically a more margin accretive business. And that's why All Cargo Logistics is higher in trade today. And this, follows a spate of weakness that we've seen in international trade itself. So maybe the street is hoping for some turnaround coming by out here as well. So LCL volume at 8.1 lakh cubic meters is the highest ever volume, surpassing the levels that they did in August 2022 itself. And while it's an 11%, while it's a 6% growth month on month, it's a 5% growth year on year as well. And they believe that the freight rates will continue to stay high. In fact, volumes have increased on the back of improved global trade and the company's growth initiatives itself. And they expect momentum to remain through the year on the back of volumes. They said that freight rates also anticipated to stay high until the end of peak season. For the full container load business, they've seen no decline in volumes quarter on quarter. In fact, year on year, there has been an increase of about 7% as well. So these two factors taking the stock higher in today's trading session, though from the highs, it's seen a bit of a correction. But now if things are improving in this space, then maybe the street is looking at sustained improvement at least until the end of the season.
Okay, thanks a lot, Mangalam, for that. Well, BPCL surges after Citi has issued a bullish call on the stock. Brokerage MK also reiterates their positive stance on the OMCs. Sonal is here with more details. Sonal, over to you.
Thank you so much for that. Well, Citi has a buy call on the stock with a target price of 380 rupees a share. They say all these three OMCs, they have performed better than the broader markets year to date by around 17 to 37%. And most of the outperformance is something that we saw at the start of 2024. And from those levels, we have seen consolidation on these stocks. Last 6 months underperformance is due to soft GRMs, weak marketing margins post the fuel price cut. And Q1 was weak for OMCs as well. However, these factors are resulting into underperformance will now be reversing according to Citi, and just for BPCL, they have opened a positive catalyst watch. This is something MK is talking about as well, how there was a negative surprise in Q1 numbers, but they continue to remain positive on all the three OMCs, and $80 per barrel of crude oil prices provides a comfortable financial position. Q2 FY25 till date margins are improving both on the marketing and refining side, and that is something that makes them very positive. They value OMC is at 6.5 times EV to EBITDA multiple, and they believe the outlook would improve further as key state elections would be done by Q3, so there will be no fear of further fuel price cuts and impact on marketing margins. They reiterate their buy on BPCL and HPCL and add on IOCL. So they retain their target prices on both HPCL and IOCL, but they've improved the multiple for BPCL, and that's why there's a target price hike of 10% on BPCL to 405 rupees a share.
Thank you very much for that. The mid-cap index is still up about 250 points, but many of yesterday's big winners, Mazgaon Dock, Shipyard, and Ola Electric, First Source, these are stocks which have been seeing a relentless up move, and there is a correction set in, and railways are on the back foot today. So RVNL, IREDA too are down about 1 to 3%. Mitesh is now back with us for a quick technical check on the markets. Mitesh, good going, 24,700.
Good morning, Nima. Very good going, and I think the key contributor is Bank Nifty today. I was talking about this in the morning. If the Bank Nifty starts picking up and starts getting past 5750, 5800 zones, then expect 51,400 and in a good case scenario 51,800. So I think that remains the key. In fact, I have buy calls on two of them. Bank of Baroda is something which I like. That's a stock which after a good correction seems to be reversing. So buy here with a stop at about 250, 240.5 and look for a target of around 263. To about 265, and AB Capital is the other one, again from FinNifty AB of this NBFC space, wherein I would recommend a buy with a stop at about 214 for targets of 226.
Okay, thanks a lot, Mitesh, for that. Let's take a short break. On the other side, we'll be joined by a panel of guests from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference. Stay with us.
Of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Bengal is not a place safe for women. Bengal has failed its women, not Bengal society. The present government of Bengal has failed its women folk. Bengal should again be brought back to its pristine glory, where women had their own respectable place in society. That has been lost. They are scared. They are scared of gundas. This has been created by a government which is insensitive to this issue. You know, we take pride in the fact, Yatra Naryastu Pujanti, Ramante Tatra Devata. Where women are honored, there the gods rejoice. But unfortunately, in Bengal, the government has ensured that women have no protection. That is what is reflected in the gruesome tragedy that has taken place in Arjikar. That should not be repeated again. I respect the sentiments of the mothers. Certainly, the law will take its course. See, my communication with the Home Minister and the Union Ministers, I do not want to discuss the details in public. I'll do my duty. Regarding RG whatever steps are to be taken will be taken. We have the observation of the High Court about absolute failure of the state machinery, which is a very, very serious observation. I am apprised of that. As governor, I will do my duty and fulfill my promise to the people of Bengal.
What kind of thing we accumulated at sub 100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level.
Welcome back to Trading Hour on CNBC TV18. Well, let's hear out some market opinion, this time coming in from Venugopal Kare, the MD and Head of Research at Bernstein India. Listen into what he has to say.
The fundamental reality is that you're not really seeing any earnings growth acceleration. And more importantly, you're not even seeing earnings upgrades. The only difference is that we're still in a decent macro cycle. Earnings growth are decent, even if they are slower than what we actually saw in the previous 2 years. So what is essentially happening at this juncture is the broader macro strength, which I think is fairly visible for the next few years, is ensuring that the domestic flows sort of remains resilient. Let's say 15 years back, previous cycle, which is perhaps the first mean cycle that we saw, and this sort of investment community was also smaller and perhaps just starting to understand how to professionally look at equity markets, used to be very embarrassed to put 20x Ps or 25x Ps on stocks. That's a fundamental reality. We have tried doing that during that phase in the peak of the cycle. We used to get slammed, both by investors who used to actually question us on the rationale of a high P such as 20-25x. Now, the difference with this time is that people are a bit more liberal. I don't feel embarrassed putting 100x P rate on stocks. Nobody questions me. People feel happy about it. And the same is the situation 50, 70, 80x P. So now we don't really need to keep very high earnings for the next 2 years. Our broader philosophy is to stay invested, but then alter your portfolio in such a way that you don't end up taking risk on low quality companies. Right? That's like a tricky thing. We're okay with high valuation companies as long as they're high quality or have a visibility for growth. So do remember that when liquidity is there, liquidity finds a way to get sucked, which primarily means you're going to see an acceleration in fundraising cycle as well. And not all of the fundraising will be high quality.
Okay, get into a break on that note. We'll come back and continue discussing the markets, valuation, earnings, flows. We'll get in the top team from Motilal Oswal when we return. Stay tuned.
The position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus. And also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it. And even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking. But my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC-TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer, but provided with the number of instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints in the last financial year alone. Express and mail trains, which account for bulk of passenger transit in India, saw 47% rise in complaints over the quality and hygiene of food items served to the passengers, according to RTI response shared to CNBC-TV18. So what action has the railways taken so far? Well, 3 contracts have been cancelled and 68 show cause notices have been issued in the last 3 years alone. Let me put this in context. Even after facing nearly 13,000 complaints over food quality served to passengers in the last 3 years, only 3 contracts have been cancelled. Quality concerns over food served in train is not an issue. In 2017, a CAG audit report revealed that the caterers for Indian Railways have consistently failed to protect the food quality served to passengers from flies, insects, dust, rats and cockroaches. A parliamentary panel report tabled this year said that the lapses identified in the current system pose
Welcome back. As promised from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference, we now have with us Gautam Dugar, Head of Research Institutional Equities, Ajay Menon, MD and CEO Broking and Distribution, and Ashish Shankar, MD and CEO Motilal Oswal Private Wealth. Gentlemen, thank you very much for joining in. You all have been in discussion with more than 200 corporates. There have been more than 15,000 one-on-one meetings spread over the last 2 days and today, of course. And a lot of the attendance has been with marquee corporates, HDFC Bank, Hero, Godrej Consumer, Mankind, Trent. The list is endless. So Gautam, let me start this discussion with you. Conventional wisdom tells us that market returns track earnings growth. Now, Q1 has been muted, and I think in your note you highlighted the biggest disappointment was the beat to miss ratio. The earnings upgrades to downgrade ratio was just 0.4x, which is the worst that we've seen in close to about 3 years. Is that concerning to you? And what was the feedback from the corporates with respect to earnings growth for the remainder of the year?
Hi, Rima. Good morning. Thanks for having us. So, yes, the earnings season began on a slightly muted note, or rather the year began on a muted note, but it was still in line with expectations. We were expecting that. Yes, of course, the breadth could have been slightly better, and maybe the small cap earnings were slightly more disappointing. But as far as the full year is concerned, we are still quite confident that we should clock 10 to 12% earnings growth this year, which, depending on where you come from, looks either very moderate or reasonably okay, given that this 12% will come on a base of 30% earnings growth of last year and on a base of 4-year CAGR of 20% earnings growth between FY20 to FY24. I mean, the scale of earnings have gone up significantly, Rima. 4 years back, the Nifty total profits were 3.5 lakh crore. Our coverage universe, 300 companies profit was 4.3 lakh crore. Today, that number is 11 lakh crore for our coverage universe and roughly 8 lakh crore for Nifty. So yes, this quarter began on a slightly muted note, but from here we expect things to pick up. The next 3 quarters we are expecting growth at about 5, 15 and 18%. That is how the entire year's growth aggregates to about 11%. Coming to the second part of your question, as to what the corporates have been saying, yesterday we had 8 CEO tracks, and since morning today we are already into the second CEO track. The outlook remains quite strong. We've had corporates representing financials, consumption, manufacturing and even commodity in the CEO tracks which have already happened so far. So growth outlooks look quite decent at the macro front. The heartening thing is that the rural seems to be picking up. That is the common feedback that we are hearing from multiple corporates, those who presented in the CEO tracks. as well as the ones who are attending the corporate meetings. So rural seems to be picking up after a long time, almost 3 years. So that is a very positive sign. The private capex also is taking a baby step now. Government has done its heavy lifting, and it looks like in the next 12 to 18 months, you will see private capex taking bigger shape now. So those are two very important takeaways coming in from our CEO tracks and corporate conversations so far in the day 1 and day 2.
Gautam, very helpful there. So the pickup in rural and private capex, right? Before I head to our other two speakers on the panel, I just wanted to complete this discussion with you, Gautam. This is Sonia here. One growing trend that we're seeing in India right now, which continues, is urbanization, right? I mean, as of last year, 1/3 of India's population now lives in cities, and because of that, we are seeing themes like real estate, whether it's home building. Today, this whole cables and wires theme is doing very well. In your discussion with corporates, is this a big theme that people are speaking about? And if yes, how does one play this theme now?
Absolutely, Sonia. This has been a big theme unfolding since last 3 years. And the best way to play this theme is direct, rather than taking first or second order route. So the direct theme is real estate. We are having Godrej Property CEO session today, later in the afternoon. We've had a huge overweight on real estate for last 3 years now. If you look at the numbers are staggering. The pre-sales have gone up 4x in the last 3 years. The cumulative pre-sales CAGR of the coverage universe of real estate stock that we track has been upwards of 30%. And even on that high base, the next 2-3 years, we're expecting 25 to 30% CAGR. So if you have a slightly higher risk appetite, the direct way to play this theme is to take exposure to real estate stock. They've had a phenomenal run up in the last 2 years, so maybe there could be some cool off here or there. But the trajectory looks very solid to me. We are still in the early part of the middle of the cycle. This cycle, I think, can last another 3-4 years. The absorption rates in the top cities, 7 cities, are going up. And then, moving forward, you can take exposure to consumer durables, cables and wires, as you mentioned, where we have, KEI in our model portfolio. And then there are a host of other names which are adjacent to that theme, something like ceramics, the broad consumer discretionary pocket. But the best way to play such theme is to take a direct exposure, which is where we have a big overweight on real estate stocks.
Ajay, when at the beginning of the conference, we were chatting with Ramdev Agarwal ji, and he said he wants to gauge the FI view, the stance in India post the elections, or are high valuations still going to keep them away? What was your feedback when you chatted with the foreign institutional investors?
So I think, as we all know, that the overall market in this last 2-3 years has been led by the retail boom and the flow of money which is there. And that is what has been the very strong markets which we have seen due to the flows coming from the overall retail participation. But I think when we talk to the FIs and all, they are just waiting for opportunities to come in. That's what we can understand. And I think overall the India story is just here to be. We have got a stable government in place. We are also looking at the macros which are very much well in place for India. So looking at the overall global scenario, what we are facing today, and compare that to India, when we talk to the FIs, there is surely a lot of positive momentum to come to India. Now, question is the valuations. Surely, India is a little more at a premium currently. But I think at the right opportunity, there is more money to come in. And along with that, the retail flow is continuing. So the story continues. That's what we feel. But surely, short corrections are good to start investing again.
Okay, Ashish Shankar, coming to you, of course, the next big event that everyone's going to watch out for is the September Fed meeting, and the expectation is that it'll be the start of the rate cutting cycle. If and when that happens, what does this really mean for a market like India? Do you think that good news has been priced in, the fact that more money flow comes into a market like India? How does one read into it? And what's the assessment from, a lot of the investors or stakeholders that you have spoken to at your conference?
Yeah, hi Sonia, hi Rima. Really exciting to be speaking to you on the sidelines of our global investor conference. So I think, see, the big shift in this bull market is the color of money, right? If I look at the past cycles, we would always try and think as to what the FIs will do, because they were a formidable force in markets. But no longer. I think the big shift is the emergence of HNIs, ultra HNIs and family offices. In fact, even in the conference that we are attending, we are seeing a huge number of family office investors, ultra HNIs attending this conference and talking to companies. So what is happening is that every time FIs are selling, the retail investors, I mean, Ajay just spoke about, I mean, they are becoming a formidable force, because you see the number of demat accounts, the pace is not abating. I mean, you're still adding 42 lakh demat accounts every month. Similarly, if you look at the emergence of HNIs and ultra HNIs, there are about 40,000 ultra HNIs households in the country. There are about 2 lakh HNIs, and if you go further down the curve, the number just goes up 10x. So whilst, you know, there are these events on the anvil, I mean, Fed is definitely a big event, and I think the Fed has become much softer from 6 months back. So there is a clear expectation that before the elections are announced, there should be a policy rate cut. However, I can tell you that at every dip, there is enough liquidity on the sidelines, which is waiting to come in from HNIs and ultra HNIs. We saw it just yesterday, where FIs were net sellers, and it was a typical day in Indian markets where FIs were net sellers, but you saw that HNIs and ultra HNIs as well as retail were net buyers. I don't see this trend abating. So whilst rate cuts etc. will definitely give a slight booster to the sentiment, but having said that, I feel that there is enough liquidity on the sidelines to come in at any dip that happens in the near future.
Gentlemen, do stay on. Ajay, Gautam and Ashish, we want to slip into a very short break, but we've got more questions for you, so we'd like to continue the discussion on the other side.
Not only to the passengers' experience, but also to the overall reputation of the Indian Railways. We asked IRCTC to respond over the rising complaints over the food quality, and they have not done so yet.
Dr. Deshpande, you know, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it
Welcome back. We are in conversation with the management at Motilal Oswal. It's a part of the Motilal Oswal 20th Annual Global Investor Conference, and we're getting many insights into what investors, stakeholders, corporates are thinking about. Gautam Dugar, Ajay Menon and Ashish Shankar are still with us. Gentlemen, thank you for, taking the time out, precious time from your conference. Gautam, you spoke about many themes, right? Whether it's the pickup in rural, whether it's real estate, whether it's urbanization, a private capex. Anything else that stands out for you, which could be a big theme of the rest of 2024?
So, Sonia, I think within the broader umbrella of financialization of savings, we are particularly very excited about the whole capital market architecture, which encompasses so many different subsectors. Your broking, wealth management, AMCs, the capital market infra firms, because as Ashish was mentioning a couple of minutes back, the demat accounts have gone up from 3.5 crore in March 20 to almost touching 17 crores now. And we feel that even if the momentum were to subside a little bit, we're still on our journey to track at least 25-30 crores demat account in the next 2-3 years. You must have read that in the month of July alone, 54 lakh folios were created in the mutual fund industry. SIP amount everyone is familiar with, whether on a gross or a net basis. So clearly this is a theme which can multiply manyfold. Already it is doing very well in the last 12-18 months, but I think we are still scratching the surface over here. And the second theme which I just want to mention is on the consumer discretionary side. 10 years back, consumption was very limited to FMCG and retail. Today, when you look at the consumption canvas, it is expanded significantly. You have hotels, apparel, jewelry, QSR, footwear, and I think many more interesting companies will be listed here. Today, we began our track with a very interesting and insightful presentation by the Zepto founder. So I think as the days pass, the opportunity to benefit from this increase in disposable consumption in India, it's going to present several opportunities, and the traditional way of playing that theme has changed significantly. Who would have thought 2 years back that Trend can become a 2 lakh crore market cap company, or for that matter, companies like Zomato, Varun Beverages. So we remain quite excited at Motilal Oswal about this evergreen consumption theme, and within that, the consumer discretionary part. So these are two things I just wanted to highlight.
Any red flags from your corporate conversation?
So far, none, Sonia, but the red flags are always the ones which you are not aware about. Because the market always corrects more on events which you cannot forecast. You go back to 2007, 2013, 2017, 18 ILFS, and then COVID. So I think a big durable correction, which has not actually happened in the last 15 years in this market post the global financial crisis. But any correction which is an order of magnitude more than 10% has typically happened in India on events which are not forecastable. The usual red flags are always around, the corporate earnings slowdown, crude prices shooting up, in a world which we are living in where every week there is some geopolitical crisis, but market discounts those crises very fast because they are known things. The market typically corrects more on things which are unknown and which cannot be forecasted. So that's what I think will be the biggest red flag. Something which we don't know, because market valuations are very rich now. Nifty reasonable at 20-21 times, but mid caps and small cap absolutely expensive, trading at 60-70% premium. Something like mid cap index trading at 35p in itself it's been in no man's land for some time now, trading at a premium of 75% to Nifty. I don't think in the past when this has happened. So clearly the risks are many, given the valuations that you are negotiating with in the broader market. Nifty is still very reasonable.
Ashish, I wanted to come, to you on a point that Ajay was making a while back about how retail money has been flowing into this market in a big way, right? I mean, if you just look at the domestic institutional investor data, they've been buying consecutively for the last 11 days. But on the flip side, the FIIs has been a little bit wishy-washy. What's your sense of which way things could head in terms of the money flow into India? Do you think the large chunk of it will still be domestic money?
See, FIs have their own compulsion, right? For them, the world is their playground. It's not just India. Although I feel the interest on India is extremely high, but when they just look at India from a global lens, from a valuation lens, India just seems more expensive. However, there are very, very few markets or none which offer this kind of growth runway over the next few years, the kind of balance sheet that the country has, able to develop, and the kind of visibility that you have on corporates, right? So my sense is, look, eventually FIs will come in. I mean, they are also driven by rates globally. I mean, right now there is a China trade going on because China relatively seems extremely cheap. So there is a contrarian trade going on. So I feel that FIs will come in at some point in time. However, having said that, the retail flow continues to be extremely strong. And like I said, if you look at just the wealth that is sitting with the top 40,000 ultra HNI households is about $1.5 trillion, right? If you go down one step further, about $360 billion is sitting with about 2 lakh households. And if you go one more step downwards, about $800 billion is sitting there, right? And a lot of this wealth that has got created for promoters is no longer paper wealth. If you look at the number of block deals that are happening, right, and we just did some estimation that what is the potential block deal size over the next few years, and it could be as high as 15-20 lakh crores. And what is happening is, once the block deals happen, a lot of these promoters are creating their own family offices, and part of that allocation is going back to equities through wealth managers like us. So I think the domestic flow continues to be strong. I only dread to think if FIs also turn positive and they start coming into India, it is going to be a very, very crowded trade. So whilst, what Gautam is saying is absolutely right, that valuations look extended in certain parts of the market. However, with this kind of an optimism and flow, I would believe that valuations, even if they get slightly cheaper, the buying interest will come in a very big way. From FIs and domestics continue to be consistent buyers, and I think the SIP is the best part of this entire story because people who are coming into the market regularly, right? SIP has grown at 28% per annum, by the way, over the last 5-6 years, right? And this is capital that is making IRRs on a regular basis, right? So I think the domestic investor story looks extremely strong, and FIs, I believe it's a matter of time, and whenever they're comfortable with valuations or whenever they're comfortable with the relative interest rate trade, they will definitely come in. But at that point in time, it's going to become a very, very crowded trade.
These are staggering numbers, Ashish. 40,000 ultra HNIs are sitting with a wealth of 1.5 trillion, $36 billion with 2 lakh households in India. And I think the potential block deals, this 15 to 20 lakh crore of potential block deals, this is over the next 12 months?
Over the next 3 to 4 years, I mean, potentially how much the promoters need to dilute, because there have been a lot of IPOs that have happened, right? And a lot of these IPOs, you offer 10%, 15%, but eventually you have to go down to 75 to meet the SEBI norm. And a lot of companies, you've seen the market caps go up 4, 5, 6x over the last 2 to 3 years. And a lot of these promoters are thinking of taking some money off the table. And like Gautam said, I think the first thing that a lot of people love to do is buy a large house. So we see traction in the luxury real estate market as well. But after doing that, all of them want to create a family office and look at allocating this money back into financial markets.
Okay, well, Gautam, Ajay and Ashish, thanks a lot for joining us and speaking to us about everything related to the markets as well as the retail sentiment and your conference. Enjoy the rest of your conference. Thank you so much for being with us on the channel. Well, with that, it is a wrap on Trading Hour, but stay tuned. Halftime report is up next.
A lot of carbs, and ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the...
Strong day of trade with the Nifty gaining over 100 points led by buying in financials and IT stocks. Nifty Bank rallies 1%, life insurance and NBFC stocks see gains as well. Mid-caps underperformed with the mid-cap index gaining 0.3%.
So Matter in focus as a block deal of over 5,400 crores sees 2% equity change hands at a price of 257 rupees. Sources indicate that Singapore-based Antfin is the likely seller.
Nucleus Software surges 20% as the board is set to meet on the 22nd of August to consider buyback. AEI Industries and Polycab gain after UBS initiates coverage on both with a buy rating, calling them the best plays on India's electrification drive. Ola skids, the stock sees profit booking after doubling in price from listing day.
Hello and welcome. Good afternoon. You're watching us here on Halftime Report, and it's a wonderful time for the markets. If you're a bull right now, it's been led by the Nifty Bank. The Nifty Bank has crossed the 20-day moving average, and as a result of which the Nifty is holding pretty above that 24,700 mark. What's heartening is that the broader market's doing extremely well as well, with 1,400 stocks in the mid-cap index, or rather across the NSE, advancing for just about 900 stocks which are declining. I'm Manglam Malu. With me as always, Ekta Batra. Ekta, looks like a good afternoon.
Hi, Manglam. Yes, absolutely. It's looking like a very steady afternoon at this point in time for the market. So we have the Nifty, which is up around 0.5% as we speak. And it is seeing a steady up move across the indices. In fact, the Bank Nifty is also outperforming after yesterday's little bit of sluggishness that we saw for the Bank Nifty. But separately, we have the US markets as well as the lower crude prices, which have really supported us in terms of the kind of up move that we've seen. Banks are seeing buying today That's also because of, there was nothing too averse from the FM meeting which took place with the PSU bank heads yesterday. So all of those bank stocks are seeing some amount of gains today. But separately, just want to point out that there's one particular company which stands out, Saraswati Sari Depot. It's a very small company. It's a new listing today, around 800 crores plus in terms of market cap, but it's a good up move that we've seen. So up around 27% for that particular counter. Issue price was 160 odd rupees, so it's seen a good up move on listing day and subscribed 107 times. A wholesaler of saris, so interesting concept there. But nonetheless, everyone, there's some takers for a different story every day in the markets.
Some takers for a different story every day for the market. What will be very interesting is to see that looking at this outperformance of Saraswati Sari, would the street start ascribing some valuation to Titan's, ethnic wear business, Taneira, as well? Because I remember, earlier Titan was all about Tanishq and some value ascribed to their watches business. Thereafter, when Lenskart went ahead and, raised some funds from ADIA, people started ascribing some valuation to Titan's eye care business as well. And now that they have, a listed, what do you call, comparable in Saraswati Saris, will people start valuing Titan's Taneira business as well or not is something that we'll keep an eye out on. But for now, it's an incredible, story that keeps coming about every time.
Yes, absolutely. And they're wholesalers as well as retailers. So maybe, the positioning of Titan would probably be a little more premium, I would assume, as compared to what Saraswati's core business is. But nonetheless, we're tracking a lot of stocks in today's trading session.
A lot of stocks, and one of them you're tracking is Sequence Scientific. They've got some pre-qualification for a drug in, or an API rather.
Well, yes. The news with regards to Sequence Scientific, which has moved up around 6% in today's trade, is that they've got a pre-qualification approval from the World Health Organization, the WHO, for albendazole API. Now, basically, they already have a partnership with Mepro Pharma for a particular drug which uses this API. So, Mepro has developed and commercialized the albendazole chewable formulation from WHO's pre-qualification plant using Sequence API. So it's already been used. Now, Mepro's chewable formulation is the first global approval of its kind by the WHO pre-qualification. It's used to treat a range of parasitic infections such as tapeworm, roundworm, hookworm infestations which affect people globally, particularly in low and middle income countries. So the Sequence API has now got WHO pre-qualification. They've already they are already used in manufacturing a particular drug which already has WHO qualification. So that's the supply chain. Now, the company says that the WHO pre-qualification recognizes Sequence commitment to stringent international standards in the production of the API, ensuring efficacy, safety and quality. It also validates their manufacturing capabilities and reinforces their dedication to providing high quality, affordable medicines. So in any case, it just gives a little bit of more certainty that they've now got a pre-qualification from the WHO for their API. That's the reason why the stock is up around 6%.
All right, that explains why that stock is higher. Let's talk about another one which is on our radar, Navneet Education. The first management that joins us on the show, Gnanish Gala, who's the MD at the company, joins in now to discuss more on the way ahead for the company itself. Stock's seen a bit of, an up move from the lows right now. But the important part for Navneet going forward would be whether the curriculum changes happen or not, irrespective how the performance in their, tech business, edtech business, along with the stationery business pans out. Thanks a lot, Mr. Gala. Always a pleasure speaking with you. You had earlier, made a target of domestic stationery business growing at 12 to 15%, with margins in publishing close to around 30%, with 13% margins in stationery. First quarter done, academically the strongest quarter of the company. How do you see this entire year panning out? Because on the top line, there was some sort of softness, just about 1% growth that we saw in the first quarter. All right, we'll just try and repatch that connection with the management of Navneet Publications. Remember, okay, we got him back. Yes, sir, go ahead.
Yeah, so first thing I would like to clarify here is that this being a seasonal business, the best way to see the business is from October to September. So first quarter, we may have some moderate growth, But overall, for the year, we are still very confident about our growth in the stationery business, and which we maintain that we'll be growing at that percentage, between 13 to 15%. With regard to curriculum change, yes, now that both the governments, Maharashtra and Gujarat, have decided to change the curriculum from next year. So this year will be quite muted growth, but from next year we are likely to see good growth for next 3 to 4 years.
Okay. When you say good growth for the next 3 to 4 years, let's narrow it down a little bit and talk about your entire fiscal, which is FY25, and then what you're expecting for the next 3 odd years. For FY24, your revenue was up around 3 odd percent, your margins were around 17%, but your profit was up over 20%. Can you replicate these kind of numbers? Are you probably aiming to do a higher revenue growth? What are you aiming for in FY25? And what might your 3-year CAGR be, given the fact that you're anticipating growth to improve?
So as I said, FY25, we are not likely to see much growth in our content business, that is publication business. But the stationery business, as I said, would grow between 13 to 15%. And therefore, overall, at a company level, we should be growing at around 10% for FY25. For FY26 and onwards, once the curriculum starts changing, the growth in publication will start for sure. Only thing that in 1 year, we may not see substantial growth, but as a CAGR, we would grow between 15 to 16% for next 3 years.
Okay. Right. And just on the margins and profitability for FY25, since you are anticipating 10% revenue growth, margins, what would they be, considering that you had challenges with paper prices in FY24?
Yeah, so overall, because the growth is very muted in publications versus the operating expenses do go up every year based on the inflation. So as far as margins are concerned, we are again hopeful to maintain the margins as the paper prices have softened. So FY25, we would more or less maintain the margins as FY24. But once we start seeing the growth going forward, the margins should improve a bit.
All right. What about exports? You had lost business last year. There was weakness, understandably. You said that it'll come back this year. What is your prognosis here? What proportion now comes in from exports?
So overall, of the total business, export is around 35%, and which is likely to grow every year 2 to 3% more to the total revenue, because as a percentage, it will grow much faster. As far as the opportunities are concerned, we have lots and lots of inquiries from various customers that we have, particularly from the Western world. And therefore, in exports, whatever orders that we had lost, we have solved that problem, and therefore we have regained that business. So overall, exports is likely to grow much better.
How much better?
As I said, on an average, both businesses, domestic stationery and exports in stationery, this year will be growing similar, around 15%. But going forward, we are very confident that exports should grow beyond 15% for next couple of years.
Oh, okay. All right. So confident on exports. What are you envisaging in terms of a product pipeline when it comes to, say, your non-paper stationery segment? We do understand that you're evaluating various R&D within that space. Can you tell us how much are you spending? What are you evaluating? How much do you want it to probably be as a percentage of your total sales, and what is it currently?
So at present, non-paper stationery is hardly around 5 to 6% of our total revenue. If I talk about just the stationery, it would be around 4% of the total revenue. Therefore, we are developing lots of new product ranges. As a process, we always receive smaller orders at the beginning of the decision by our customers. Once they are satisfied, then they really ramp up their demand or the order. Once we see that the ramp up is happening, we have already rather planned installing capacities to manufacture such product ranges, and overall we are likely to see good growth. So if you ask me on the FY26 numbers, we may reach around 6 to 7% of our total revenue in exports from non-paper. But if we talk about 3 years down the line, that should be at least 15 to 16% of our total revenue.
All right. Just finally, before we let you go, Mr. Gala, you announced a 100 crore buyback as well. Is this from the proceeds of the sale that you had done in, Navneet Learning, or is this just in lieu of the dividend that you would pay every time? What we want to know is, because the last time you joined us, you said all the proceeds from that sale will go into funding capex of the stationery business.
Yeah, probably. So it was overdue as far as paying back to our shareholders are concerned. And added to that, we received this sum from sale of stake, and therefore board decided to give back immediately.
So with this, what is the remaining cash on your books, and are the promoters going to participate in this buyback?
Yeah, promoters are going to participate, and as with respect to cash on the books as we speak, we have 300 plus crores sitting in with us as a cash.
Okay. Any further deployment that you're thinking about?
Deployment would be major expansion in stationery over the next 3 years. So every year we would be investing between 75 to 100 crore in stationery for the stationery business. So major deployment would go there.
All right, 75 to 100 crore in stationery business machinery typically gets you about 300 to 400 crore of revenue. So we'll keep an eye out on, growth out there as you deploy that money and bring that back in terms of asset turns as well. Always a pleasure speaking with you. Thank you so much. We will have a conversation towards the end of the next quarter as well, as that will be a good season for you too. The street likes the commentary coming in from Navneet Education. The stock was up around 1%, but now has spiked to the high point of trade as the company expects exports to grow a lot faster. All the lost revenue in exports comes back, and at the same time, they maintain their guidance on stationery and publishing business margins going forward. Take a short break, come back, get you more on the markets. Also connect with R. Jeevanandan, who is the MD HOEC, to discuss their business outlook. He joins us from the sidelines of the Motilal Oswal conference.
Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome back. Well, steady for the markets, up around 1% currently for the Bank Nifty. We have a good advanced decline ratio on our hands as well. So around 2,000 stocks plus advancing, with around 1,700 stocks declining on the Bombay Stock Exchange. But let's talk about one particular company now, HOEC. We have R. Jeevanandam, who's the MD of Hindustan Oil Exploration, who joins in from the 20th Motilal Oswal Annual Global Investor Conference. Hi, sir. Thanks very much for joining in. If you could just start by telling us what are your targets for volumes for FY25 from the Dirok 1 well that you all have just finished on.
Yeah, Dirok 1, we have tested an untested sand 9. And it has flown very well, and it has given off a choke 6 million cubic feet of gas. But the total volume we have it is under estimation. And after seeking partners approval and DGH approval, we will communicate the volume therein. This will increase the recoverable resource of the field.
All right, just hang in there, Mr. Jeevanandhan. You know, when we spoke, there were some lines coming in from our team at the ticker. Vedanta has moved to the high point of trade, and that's largely because of an announcement that has come in from Hindustan Zinc, where they've announced an interim dividend of 19 rupees per share. That amounts to about 8,000 odd crores. Vedanta, being the holder of Hindustan Zinc, tends to get about 5,100 crores from this dividend itself. And additionally, they've also launched an OFS for Hindustan Zinc, for which they've garnered about 3,100 odd crores as well. So all these factors put together means a lot more money coming in for Vedanta, and that explains why that stock is higher as well. Hindustan Zinc, understandably higher because of the dividend announcement that has come by, but mind you, there is very limited float available in the market for Hindustan Zinc itself. It may increase as the OFS for Hindustan Zinc goes with Vedanta, but for now Vedanta gets about 5,100 crores. The stock has moved higher. Let's get back to our conversation with the management of HOEC. Mr. Anandan, you announced a 1,000 crore capex plan for the next 3 years. What does this mean in terms of your yield, in the kind of asset turnover that you generate? Maybe if you could give us an earnings impact.
So this 1,000 crore capex would be spent both on onshore and offshore. This will increase the volume of HOEC share from less than 3,000 barrels of oil equivalent to 15,000 barrels in 27-28.
Okay, what will the earnings growth look like, and will you plan to raise any funds?
So we don't intend to borrow anything. This would be through internal accruals, and the earning by reference to the current market, current price. With the volume projected, we would be able to get the EBITDA in the range of 1,500 to 2,000 crores. That is our target. That is our visible projection for 27 and 28.
All right, 1,500 to 2,000 crores. If you could give us a sense on the spread between gas and oil production and any possible changes around it.
See, we don't think now the gas and oil are almost no longer a byproduct, it is a joint product. We get 80% of the value of oil for gas. So our will be predominated by the gas production, and it would be in the range of 60-40.
Any update on the B80 and what is the value that you are currently deriving from that? If you could just give us a sense.
Today we are getting about 12% of the Brent price for MMBTU, and whereas previously we were getting about 22%. This gas price is moving akin to LNG price in India.
And what about the government's notification of 20% premium on gas pricing? Are you penciling in any impact on HOEC from these new discoveries?
We are waiting for the gas grid to be connected, then the demand picks up and our new wells to be drilled in Iraq and Karsang would have some value impact.
Okay, all right. Well, on that note, we're going to leave it. Thanks very much for joining in and speaking with us. So that's HOEC. The stock is up around 0.7%. Just coming back to the Hindustan Zinc and Vedanta story, just to apprise our viewers, remember that Vedanta holds around 64.9% stake in Hindustan Zinc and will get around 5,100 crores of that 8,028 odd crores of the interim dividend, which has been approved by Hindustan Zinc, which is worth around 19 rupees per share. We'll take a break, but Sachitanand Uttekar of Trade Bulls will join in next with some trading strategies. Stay tuned.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com.
Good to be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You could.
Welcome back. You're watching us here on Halftime Report. Perfect time to get you the FNO set up at midday. It's been a stellar day of trade so far, with the Nifty upwards of that 24,700 mark as well, a near 150-point gain that we're seeing on that index, and it's been led by the financials. So if you look at the Nifty Bank, it's up almost 1.2%, 600 points out there. The Nifty Financial Services Index also up around 1.5%. And in today's up move, the Nifty Bank has gone ahead and crossed the 20-day moving average, which was an important resistance to watch out for. Now the room opens up for the Nifty Bank to cross past that 51,000 mark. 51,300 thereabouts is where the 50-day moving average is. If HDFC Bank, its largest component, move is likely to sustain for the Nifty Bank as well, then we can see it cross past that 50-day moving average, because yesterday HDFC Bank defended the 20-day moving average, thereafter went above the 50-day moving average. It's not only HDFC Bank and a couple of these private sector banks, but all the other financials as well, aiding the cause of the Nifty Financial Services Index. So SBI Life up 3%, 2.5% higher on Bajaj Finserv, HDFC Life up 2.5% as well. So what this has done is it has taken the Nifty Financial Services Index past that 23,200 mark, and it's an important mark. Why is that? Because the 23,200 call has the maximum open interest out here, and if we sustain above these levels, all these call writers will have to run for cover, and as a result of which we will see a further up move on the Nifty Financial Services Index itself. And we are seeing a fair amount of short covering pressure on the Nifty already. All those who had written the 24,600 call, as you can see, here the premium has increased by almost 80%, whereas the open interest has decreased by about 24 lakh contracts, telling you that there is short covering at the Nifty 24,600 call. And that's not all. We've seen a reduction in premium on the 24,700 put and addition of open interest, telling you, bulls are writing that 24,700 put, hoping for the support of the Nifty to move higher to 24,600 thereabouts itself. In terms of stocks, I'm watching out for IndiaMart and PNB, Punjab National Bank. Both of them should exit FNO ban in today's trading session or post today, where we get that notification from the exchanges.
Okay, all right, Mangalam, thanks very much for that. So that's the FNO setup. We have Sachidanand Uttekar of Trade Bulls joining in now to discuss what he's strategizing today. Sachidanand, welcome to the show. Well, it's a good day for the markets. We're seeing all of the indices in the green as we speak. What's your call? How would you approach trade?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly the kind of breakout which we saw on the Nifty during the Friday's trading session, we saw it confidently trending above the 5 and 20-day exponential moving averages. The cluster was acting as a resistance at 24,300, and post that we have already seen a very strong rally unfolding right now. So we expect this particular momentum to continue towards 24,940 eventually. The base is now well established at around 24,550 kind of a zone. So unless this particular base is defended, the rally is expected to continue throughout this particular week. When it comes to Nifty Bank, it's a very similar setup that we saw in the Nifty last week. Now the Nifty Bank was struggling, to cross that 20-day exponential moving average resistance, and today we have seen it confidently trending above its 5 and 20-day exponential moving averages both. The daily RSI has also given a breakout above 50 levels. Now this particular breakout has occurred after almost a month. So we are expecting that this particular move may extend its rally towards 52,000 when it comes to Nifty Bank. So that's why we are recommending building long positions in Nifty Bank on an aggressive basis. The stop loss for the trade is placed somewhere close to around 50,480 on the spot levels, and we are expecting this particular rally to continue towards 52,000.
Okay, all right, and stocks?
The focus is on financials and insurance stocks. If you look at the structure of HDFC Life, we have seen a very gradual correction in the last few weeks, and if you look at the overall structure, it exhibits a bullish flag formation, which is again a continuation pattern. The pattern is indicating a target of around 740 on the higher side positionally. The intermediate target is placed somewhere close to around 722, and that's why we're recommending building long positions in HDFC Life. The stop loss for the trade can be placed at around 692. The other stock which has been doing well in today's trading session is Bajaj Finance. Now, if you look at the overall structure for the last 9 weeks, the stock was in a very strong, bear trend. We have seen a breakout from a falling wedge formation. Now, whenever falling wedge formation is formed, it is a sign that there's an intermediate bottom which is in place. So the 6500 base looks very strong and confident, and from that particular base, we have seen this move unfolding. So we are expecting that this rally may continue towards its 200-day exponential moving average level, which is placed at around 7,000, and that's why we are recommending building long positions in Bajaj Finance. The stop loss for the trade can be placed at around 6650.
All right, thanks a lot for that, Sachi, giving your index views as well as stock calls. With that, we'll step into a short break. Come back on the other side. We'll have Manisha Gupta joining us with all things commodities.
It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future, and she embodies it.
Oh, I think it's great. You know, people really get excited when something happens they didn't expect, and it makes them happy. So we're a happy group.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president, and her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States.
Welcome back, and joining us on the show now is Peter McGuire. He's CEO at Exim Australia. Peter, hi, good to have you. And what a big move that we've seen in crude oil prices overnight. 3% down overnight, 6% down now for the week. And yes, there are various reasons, starting right from the ceasefire conversation to the very weak Chinese data. What is your sense on how much weaker can crude go?
Well, good afternoon, Manisha. It was a great market to short, and I'll tell you what, considering also that the US dollar's been hit very hard. So I think there's a few dollars to go yet. It's got to find a floor. It seems to be just it's falling, and you know that sluggishness as far as Chinese growth and year on year, it's down about 4% from an import perspective over that first 7-month window. So I think there's a few bucks to go yet, and yeah, let's just see how it rolls. But it's a time to be short, I'd say, for the short term.
Peter, would you say that the fundamentals are so weak that even as the dollar index is trading at a 7-month lows below 102, hasn't been able to support much?
Exactly right. I mean, you know, that US dollar index has really come under big slide yesterday. It went from about 102.50 and then all of a sudden it was down under 102. So considering crude's had such a big sell-off, coupled with the US dollar index coming under pressure, that really demonstrates the fragility and softness across the whole complex. So where we sit from here, if I want to see what happens as far as Fed Chair Powell, and then of course I think crude's got maybe it's going to hit a 70. I mean, you got the market at just under 74 for WTI. I think a couple extra dollars stripped out of it early this week could, or by Thursday, is a real chance.
Peter, what's your sense on where the dollar index can take support from here? And when it comes to Brent now, where do you see, or what range are you anticipating for the, let's say, next 1 month or so?
Well, Manisha, I'm hanging on every word, comma, full stop, you name it, that Fed Chair Powell delivers at Jackson Hole, because if it's going to be a 50 basis point cut, that's going to really whack the US dollar. I think it'd really make it the best chance you could get even in the hundreds. I know it's high 101 at the moment, it's 101.90, but I think it's got real big softness if 50 basis points are stripped out of it. And the other side is, I think there's just a general sentiment, you know, is the US going, it seems to be away from that recessionary fears as the stock market's at nearly a record high. So it's a very volatile market at the moment.
It absolutely is. But some bit of a support is what we are looking at in case of metals as a sector. Would you recommend a buy there?
Well, you saw copper up. I mean, that had a nice rally to the upside, and it's still, you know, that 92.500. So it's, you know, shopping around. It was at 88, and then all of a sudden now it's at 92.5. Some of those other metals have had a nice little rally as well. So overall, I think could be a little bit further upside, but it's choppy. It's hard to get a real, you know, you've got to be a short-term trader. You don't marry a trade like this, Manisha. You just look for opportunity and then have a chance at profiting from it.
So, I mean, as you said, there is the FOMC meeting minutes that are due on Wednesday. Jackson Hole meeting comes in on the weekend, and between that, there's a lot of economic data still coming in from various other countries. How would you want to trade the current week in light of all of that?
Well, I think US equities possibly up. I think further softness as far as the crude complex. Keep a very close eye on gold. I mean, you're nearly at an all-time high. And then you've got to be conscious as far as where US dollar travels over the next couple of days. It's been choppy. You know, there's plenty of opportunity. The euro's at nearly at 111, so 1.11. So I think there's possibly a little bit further uplift there as well. You've got PMIs coming out for UK and Eurozone, and you've got those CPI numbers coming Thursday or Friday for Japan, Manisha.
Peter, one more question, and this one is on Indian markets itself. While, of course, we are looking at metal prices, there are reports that the metal companies would go ahead, cut some prices here, because we haven't seen that happen yet. But the other thing also is about crude, where we have seen the Indian self-sufficiency in case of crude continue to decline. I mean, until last year, we were 85 to 86% dependent on imports. The latest number for this year shows that it's almost at 89%, with various reports suggesting that we will sustain above 90 in a year or so. How do you look at India with US elections in November, the crude oil prices where they are, and the geopolitical tensions?
Manisha, I'll start with geopolitics first. That's the unknown. That's the wild card, and no one knows what's going to happen as far as the positioning with Russia and, of course, Ukraine. What happens with Israel versus Iran, and then those counterparties that'll join the whole argument. be the likes of Russia and, of course, China. Although I think they'd fall in under Iran. So this is creating a lot of uncertainty to, I think, geopolitics globally. And I feel as though that could happen before the election. So we're only about 2.5 months out. I'm expecting a real hot October. And then you're looking at the other side, as far as what you mentioned as far as crude. If there was something to really bounce it, that'd be the wild card. That'd be the big kahuna, which is geopolitics had just rocketed higher.
All right, I take that point, Peter. Thank you so much for joining in and giving us your outlook on oil. Manisha as well for taking us through with that conversation. The Brent price is close to around $77. Positive for a lot of these OMCs and oil users in trade today. Case in point, something like an Interglobe Aviation, which is doing well. Paint stocks doing well as well. But just before we slip into a short break, a couple of stocks that definitely deserve mention. Angel One is one of them, up around 12.5%, following up on the gains that we saw yesterday. So taking that weekly gain on Angel One to about 22%. Mind you, the stock had corrected about 33% from its 52-week high as well. Ramdev Agarwal of Motilal Oswal liking the capital markets theme. And the other one is Godfrey Phillips, a big mover in yesterday's trading session. Again, following up with another 6% up move, taking this week's moves, the last 2 days' moves, up to 22%. In fact, this year itself, the stock has rallied a whopping 163%. So that's about a bunch of stocks that are buzzing around. On the other side, we have the management of Lemon Tree Hotels joining in to detail their business outlook. Patanjali Keswani joins in.
When a barrier falls for one of us, it falls and clears the way for all of us.
Bengal is not a place safe for women. Bengal has failed its women, not Bengal society. The present government of Bengal has failed the women folk. Bengal should again be brought back to its pristine glory, where women had their own respectable place in society. That has been lost. They are scared. They are scared of gundas. This has been created by a government which is insensitive to this issue. You know, we take pride in the fact, yatra naryastu pujanti, ramante tatra devata. Where women are honored, there the gods rejoice. But unfortunately, in Bengal, the government has ensured that women have no protection. That is what is reflected in the gruesome tragedy that has taken place in RG. That should not be repeated again. I respect the sentiments of the mothers. Certainly, the law will take its course. See, my communication with the Home Minister and the Union Ministers, I do not want to discuss the details in public. I'll do my duty. Regarding RG, whatever steps are to be taken will be taken. We have the observation of the High Court about absolute failure of the state machinery, which is a very, very serious observation. I am apprised of that. As Governor, I will do my duty and fulfill my promise to the people of Bengal.
What kind of thing we accumulated at sub-100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus. And also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant.
So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the price.
Welcome back. Well, for the markets, it's quite steady. Just want to point out a couple of stocks which are buzzing around. GPT Healthcare should come up for you. That stock has gained around 18% this week itself. It's up around 5-odd%. It's crossed that 200 rupee mark today. The margins were weaker this quarter. The revenue also was quite sluggish, but nonetheless, it's just been going from strength to strength. But there was an improvement in the average revenue per occupied bed this quarter. So maybe that has helped in terms of the overall performance. A couple of other stocks which are buzzing within the entire healthcare space include something like a Vijaya Diagnostics, which is up around 7.8%, Krishna Diagnostics, which is up 6.5%. So you're seeing a lot of traction which is coming into the entire healthcare space at this point in time. Moving away from that, IIFL Securities is showing a good amount of gains, so up around 13.5% currently for IIFL Securities. On the downside, just watch out for a couple of stocks such as Prestige Estates, the real estate company, showing a downtake of around 4-odd%. We'll take a short break, but we'll get you that promised conversation with Lemon Tree. Stay tuned.
The underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC-TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer, but provided with the number of instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints in the last financial year alone. Express and mail trains, which account for bulk of passenger transit in India, saw 47% rise in complaints over the quality and hygiene of food items served to the passengers, according to RTI response shared to CNBC-TV18. So what action has the railways taken so far? Well, 3 contracts have been cancelled and 68 show cause notices have been issued in the last 3 years alone. Let me put this in context. Even after facing nearly 13,000 complaints over food quality served to passengers in the last 3 years, only 3 contracts have been cancelled. Quality concerns over food served in train is not an issue. In 2017, a CAG audit report revealed that the caterers for Indian Railways have consistently failed to protect the food quality served to passengers from flies, insects, dust, rats and cockroaches. A parliamentary panel report tabled this year said that the lapses identified in the current system pose a challenge not only to the passengers' experience but also to the overall reputation of the Indian Railways. We asked IRCTC to respond over the rising complaints over the food quality, and they have not done so yet.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned?
Market continues to do well. Moments ago, we spoke about, Angel One having rallied about 13.5%. Let's look at IIFL Securities as well. That's the one that's doing extremely well. Like Ramdev pointed out yesterday, they're positive on financials, and capital markets is a theme that they still believe can continue to do well. Poonawalla FinCorp is the other one which is sitting tall with a gain of almost 7% odd. Hinz earlier announced a dividend of almost 19 odd rupees per share as on an interim basis. Now the stock's seen further spike up around 3%, and on the back of that, Vedanta as well higher as it stands to get 5,100 crores as that dividend. But let's get our promised conversation with the management of Lemon Tree Hotels. Patanjali Keswani joins in now from the sidelines of the Motilal Oswal conference. Thanks a lot, Mr. Keswani, for joining in. Always a pleasure speaking with you. The first quarter obviously was understandably impacted by seasonal weakness, the ramp up of Mumbai Aurika, and at the same time you had set aside some expenses for renovation of your portfolio. So just wanted a status check on all these three factors itself. Have you seen some recovery in occupancy in the second quarter? What does Mumbai Aurika stand at now in terms of occupancy, and how many more months before the portfolio is renovated? What's the prognosis here?
So Q2 will be somewhat better than Q1 in both occupancy and certainly in ARR. Aurika, well, whether it is Q1 or Q2, it's off season. It'll take a little more time, but in H2, as I have said earlier, it will pick up to where we hope it'll stabilize at. As far as renovation goes, we are doing the maximum renovation in H1 of this year and H1 of next year. Our main focus is the high-value Lemon Tree Premiers, which have not been renovated for some years, till before COVID, and the full portfolio of Keys. So broadly, if you ask me, Q2 will be better than Q1, quite significantly in fact. H2 will be much better than H1. And with the renovation of this portfolio, well, I think we will be positioned and reimagined as a completely new hotel company by the end of next year.
Okay. So when you say Q2 will be better, occupancy as a whole was 66.6% in Q1. Average room rate was around 5,686. It was up around 9 odd percent. Give us a ballpark in terms of what the incremental growth could be Q on Q.
Well, as I said, it will be better. I don't want to give a ballpark. All I'm saying is it will be much better than Q1 in terms of EBITDA and in terms of profitability. And this will continue into Q3 and even more into Q4. But very specific guidance I would prefer not to give.
Okay, take that point. On the Mumbai Aurika itself, you said that H2 will stabilize at levels where you expect it to be in the long term. So wanted, what is your long-term objective for the Mumbai Aurika? And on your renovated rooms, I wanted, a sense of the economics. How do they play out? Say for every 1% expenditure that you do on renovation of rooms, how much higher can the ARRs and, the concomitant impact on your EBITDA be?
So our broad perspective is that the incremental expenditure we are doing on renovation, which will be roughly 100 crores a year for this year and the following year, we would expect a payback within 2 years. So if we spend, say, 100 crores this year, I would like us to see an incremental EBITDA beyond what we would have normally done of 50 crores more every year after that. So 200 crores means effectively what I'm saying is that I would like to see a 100 crore improvement in EBITDA annually once this renovation occurs. Now, as far as Aurika Bombay goes, which is your first question, see, Aurika Bombay is a very, very large hotel. When I look back at the first hotel we built in Bombay, which was a 300-room hotel, it took 7 months for it to hit a 75% occupancy. And then today, I think today it is at 90% occupancy at about 7,500 rupees in summer. I would like Aurika to hit 70% in H2. But as I said, it's 670 rooms. So really it will take a year, which means I would reckon that by next winter it should be at 80-85%, but this winter we should be north of 70%, and that's what I hope we will achieve.
Okay, all right. We've completely run out of time, and I'm sure you have a busy schedule at the Motilal conference as well, Mr. Keswani. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Lemon Tree joining in from the sidelines of the 20th Motilal Oswal Annual Global Investor Conference. On that note, we're wrapping up on Halftime Report. Business Lunch up next. Last couple of years.
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein.
Strong day of trade with the Nifty gaining over 100 points, led by buying in financials and the IT stocks. Nifty Bank rallies 1%, life insurance and NBFC stocks see gains as well, and mid-caps underperform, with the mid-cap index gaining 0.6%.
Zomato is in focus after a block deal of over 5,400 crores sees 2% equity change hands at a price of 257 rupees. Sources indicate that Singapore-based Antfin is likely the seller.
Nuclear software surges 20% as the board is set to meet on August 22nd to consider a buyback. K Industries and Polycab gain after UBS initiates coverage on both with a buy rating, calling them the best play on India's electrification drive. Ola skids, the stock sees profit booking after doubling in price from its listing day. Hello and welcome there. You've tuned into our business lunch. I'm Nisha Podar, and with me, as always, is Hormaz. So, Hormaz, it's green on the screen today, and Nifty 50 gaining as well with good gusto, and the financials, IT, these are looking good. But the good news is also that the mid-cap universe is also seeing buying coming in.
Indeed, and that is what has been the day so far, right? The Nifty had to cross 24,650. It has done so with a lot of conviction this morning. The mid-cap index also at the highest point of the day, Nifty heading towards the 24,750 mark now as we speak. So it's good going for the benchmark indices, good going for the broader markets as well. The PSU Bank Index is the top sectoral gainer as we speak, now 1.6% higher there. IT, the Nifty IT is now up for the 7th day in a row. So it's a record high for the Nifty IT index. It had to cross the level of 41,380 for a record high. It made an intraday high of around 41,750, slightly off the highs of the day, but still holding on to the gains is the Nifty IT index. But then there are certain pockets that are not doing so well in today's session, particularly the shipbuilders within the defense space. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them seeing a bit of a sell-off in today's trading session. Mazagon Dock, Cochin Shipyard down almost 4%. Mazagon Dock at one point was down almost 8%. There was a report that was released by ICICI Securities over the weekend. It called for almost an 80% downside in both Mazagon Dock and in Garden Reach Shipbuilders. Mazagon Dock now at the lowest point of the day, almost at the lowest point of the day, 8.25% lower now at 43.30. Both Mazagon Dock is down almost 25% from its record high. Garden Reach is down 35% from its record high. So that is one pocket that is not doing well in an otherwise very strong market. But some of the other stocks that are buzzing today are oil marketing companies, and BPCL being the outperformer among them. Sonal is joining in to tell us why. Sonal.
Well, there are a couple of brokerage notes here. Let me start with Citi, which is very positive on BPCL. They have a buy rating with a 380 rupees target price. They say the three OMCs, they have outperformed the markets, the broader markets, by 17 to 37%. This is year to date. Most of the outperformance was concentrated at the start of the year. In the last 6 months, we've seen an underperformance coming in from oil marketing companies. This is because of Q1 performance, where they saw softer GRMs, the weakness in marketing margins as well, post-fuel price cut. However, all these factors which are resulting in underperformance will now be reversing, and that's why they've opened positive catalyst watch on this particular name. MK is also positive on oil marketing companies. They say the $80 per barrel mark on crude oil prices is providing them some comfort. And till now, till in Q2, till date, these margins have actually recovered. So they are positive on a quarter-on-quarter recovery. They value OMCs on 6.5 times September 25 EV to EBITDA. And they think even Q3 will see a better improvement because of state elections being done as well. They reiterate their buy on BPCL and HPCL and an add on IOCL. So they have retained the target price on HPCL and IOCL, but they've raised BPCL's target price by 10% to 405. One is because of high multiple, and also because they think the value of investments is very high there. That's why they're positive on BPCL.
All right, BPCL getting a thumbs up. Thanks, Sonal, for getting us all those details. The stock is up in full gusto today in trade. Cable and wire companies are also best electrification plays, says brokerage firms. And UBS is stating that and giving out a positive commentary on this particular space. Our colleague Upasna is right here with more details on what the report finds interesting and attractive in this particular segment. Tell us, Upasna.
Well, that's correct. UBS has written a note on cables and wires segment. It has initiated a buy rating on KI Industries with a target price of 6,150 and a buy rating on Polycab with a target price of 8,550 per share. It believes that the segment is poised to grow 2x the GDP growth in FY24 to FY30. And it expects that the current $8 billion segment is set to grow to $20 billion in FY30, and market share of the top 5 companies will certainly rise. It believes that the shifting in global supply chain will lift the export revenue from $2 billion in FY24 to as high as $5 billion in FY30. It also expects a revenue CAGR of 20% and EBITDA CAGR of 25% from FY24 to FY28 due to multiple triggers such as robust demand, operating leverage, growing market share, and robust export penetration of the companies. Now, coming to KEI Industries, the brokerage says that it is a consistent earnings compounder and only pure play on cables and wires. The company offers multiple triggers such as growth for cables and wires is set to sustain for a longer period of time, scope for market share gains in branded housing, wires and cables, and also export ramp up. Now, coming to Polycab, the brokerage says that it is a cyclical growth champion, beneficiary of a long-term electrification growth. It has a significant room to grow its total addressable revenue share, and FMEG consumer pull is the key for the company. It also expects better than expected domestic volume growth, market share gains and also export ramp up are some of the key near-term triggers, is what the brokerage has highlighted. So all in all, we are seeing a positive note written by UBS on cables and wire companies.
Upasana, thanks a lot for that. I must say it's been a very swift recovery that the market has seen over the last 4 trading sessions. The August 14 intraday low that the Nifty had made was 24,100. We are 600 points within just 4 trading sessions. So what's the road ahead for the market? Hear out some market opinion coming in from Venugopal Gare, the Managing Director and Head of Research of India at Bernstein. Listen in.
The fundamental reality is that you're not really seeing any earnings growth acceleration. And more importantly, you're not even seeing earnings upgrades. The only difference is that we are still in a decent macro cycle. Earnings growth are decent, even if they are slower than what we actually saw in the previous 2 years. So what is essentially happening at this juncture is the broader macro strength, which I think is fairly visible for the next few years, is ensuring that the domestic flows sort of remains resilient. Let's say 15 years back, previous cycle, which is perhaps the first mean cycle that we saw, and this sort of investment community was also smaller and perhaps just starting to understand how to professionally look at equity markets, used to be very embarrassed to put 20x Ps or 25x Ps on stocks. That's a fundamental reality. We have tried doing that during that phase in the peak of the cycle, and we used to get slammed, both by investors who used to actually question us on the rationale of a high P such as 20-25x. Now, the difference with this time is that people are a bit more liberal. I don't feel embarrassed putting 100x P rate on stocks. Nobody questions me. People feel happy about it. And the same is the situation 50, 70, 80x P. So now we don't really need to keep very high earnings for the next 2 years. Our broader philosophy is to stay invested, but then alter your portfolio in such a way that you don't end up taking risk on low quality companies. Right? That's like a tricky thing. We're okay with high valuation companies as long as they're high quality or have a visibility for growth. So do remember that when liquidity is there, liquidity finds a way to get sucked, which primarily means you're going to see an acceleration in fundraising cycle as well. And not all of the fundraising will be high quality.
All right, those were some interesting nuggets on the market outlook coming in from Bernstein. On that note, we'll slip into a short breather on Business Lunch, but when we return, we'll get you highlights from that important court hearing, the Supreme Court hearing on the Kolkata rape murder case. Stay tuned for all the details.
Have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. there are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day.
Back with us here on Business Lunch. Now, the government has put the controversial broadcast bill on hold for now. Now, this bill was proposed to classify online content creators as digital news broadcasters. Now, sources have said that the government will assess the need for new regulation after consultation with stakeholders. And they've added that the government is open to drafting a new bill if necessary following these consultations. Now, the drafts from 2023 and 2024 will no longer serve as the foundation for this consultation, and the government will assess the need for new regulations based on the feedback from the stakeholders. Now, the process of reworking the broadcast bill is expected to take over a year.
All right, and news flash on this. DOPT minister writes to UPSC, and also the government asked UPSC to remove the advertisement of lateral entry. So this is an important one that is coming in. We'll wait for more details. DOPT minister writes to UPSC chairman, asked to cancel the lateral entry ad. So this will have an impact as per PM's direction. DOPT minister writes to the UPSC chairman. So that is the detail coming in at this particular moment. So more developments awaited on this. But there is, remember, one more important aspect here. 1 year after, remember, the Parliament passed the Digital Personal Data Protection Bill. The government sources say that the rules for implementing the Act have been finalized, and sources say that the draft rules for consultation and public comment will be issued within 20 days. In fact, the stakeholders will have 60 days time to give their feedback, and the government is hoping to begin the implementation of the Data Protection Act within this financial year. So those are the important details, Hormaz, coming in.
Important developments, of course, and we'll get Parikshit on as soon as we can. But to the big national story first up, the Supreme Court heard the Kolkata rape and murder case today and directed the formation of a national task force for recommendations on safety for medical professionals, and it has also issued directions to the CBI and the West Bengal government. Now, Ashmit is joining in with more details. Ashmit, tell us more on this.
Well, it's a tricky situation, this. In an uncanny move, the Supreme Court taking suo motu cognizance. And at the very outset, the Apex Court outlined a few concerns that it had. The first concern that it raised is that there appears to have been an issue in terms of management of this issue on the ground, raising questions against the West Bengal government, raising questions against the principal of the hospital. The Supreme Court asking question why it took so long for registration of an FIR. The incident came to light somewhere in the afternoon. The FIR was registered at 11:45 p.m. an inordinate delay in just simple registration of an FIR. The Supreme Court also asking as to how is it, at least the allegation allegations are that the principal sought to pass off this entire incident as a case of suicide, that the parents were not allowed to see the body. And these are concerns that the apex court has not taken kindly to, has sought answers from the government on that. But broadly, the larger issue that the apex court is seeking to raise is that this issue is an issue which is leading to a national catharsis, especially on the issue of security and safety of medical professionals, and not just safety and security, but also their working conditions. In fact, at one point, the apex court also red flagging how many of these interns and resident doctors are given shifts extending up to as long as 36 hours without facilities, without even basic sanitation facilities, without toilets, without resting rooms, without duty rooms. And that is something that the apex court said is an urgent need of consideration. One, the infrastructural aids that are being provided, and two, the security apparatus that is in place for the security personnel. So to that end, an NTF, or a national task force, has been formed. The mandate of this NTF will be to submit recommendations on the issue of security of medical professionals, an interim report within 3 weeks, a final report within a period of 2 months. That's the mandate that the NTF has been given. The apex court also assigning the cabinet secretary, the home secretary, as well as the health secretary to this national task force to arrive at these recommendations. Not just that, the apex court has also sought from clarity from the CBI on August 22nd. That's when the apex court will resume hearing, and it expects answers from the stakeholders such as the West Bengal government and the CBI.
All right, an important case and an extremely grave matter for the country. Thanks, Ashmit, for putting all that into perspective. And with that, we'll slip into a short breather for now on Business Lunch. But remember, up next, US President Donald Trump, who was ex and in the running, has said that he would consider taking Elon Musk under his administration if re-elected. More on that developing story, and a very exciting one, after a very short break.
NSE Closing Bell. At these times, only on CNBC-TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years. India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most
Welcome back. You're watching Business Lunch, and markets continue to hold on to the gaining position. Now let's shift some focus to some global updates coming in for today. And as the US presidential elections draws closer, both the candidates, Donald Trump and Kamala Harris, have their campaigns running in full swing. Now, the first day of the Democratic National Convention saw presidential candidate Kamala Harris delivering a surprise speech. Current President Joe Biden also took to stage to bid farewell to the supporters. CNBC's Becky Quick has more details.
Vice President Kamala Harris delivered a surprise speech on the first day of the Democratic National Convention in Chicago, taking to the stage to rally supporters and pay tribute to President Joe Biden.
Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us, let us fight for the ideals we hold dear, and let us always remember, when we fight, we win.
The Harris campaign says the vice president is backing a proposal to make the country's corporate tax rate one of the highest among advanced economies. But a Harris spokesperson said it would put money back in the pockets of working people. The DNC's first day was headlined by President Biden, who appeared emotional as he took to the stage, to more than 4 minutes of applause after speeches from his wife and daughter. Biden used the speech to criticize Donald Trump and throw his support behind Harris and vice presidential nominee Tim Walz.
They'll continue to lead America forward, creating more jobs, standing up for workers, growing the economy, lower the cost to American families so they just have a little more breathing room. We've made incredible progress, but we have more work to do. And Kamala and Tim will continue to take on corporate greed and bring down cost of food.
President Biden there at the Democratic National Convention. Meanwhile, Republican candidate Donald Trump, after one campaign in Pennsylvania, said that he would consider taking in Tesla's founder Elon Musk for a cabinet advisory role. Now, CNBC's Arabelle Gumde has more on this.
Now, former President Donald Trump said he would offer Tesla CEO Elon Musk a cabinet or advisory role if he wins a second term. Speaking to Reuters, Trump also said he would consider scrapping a tax credit for certain new electric vehicles, a move that could affect Tesla's business. Now, Musk appeared to respond to the offer overnight, sharing an AI-generated image showing himself behind a podium labeled with Department for Government Efficiency, an apparent reference to the Doge meme. Now, Trump's comments came after a campaign event in the key swing state of Pennsylvania, where he repeated his criticism of Kamala Harris's economic record.
Very simply, Kamala Harris is an economy wrecker and a country destroyer. Our country will be destroyed if she gets in. Her radical liberal agenda ruined San Francisco. It ruined California when she was the Attorney General. It crushed our middle class, demolished our border, set the world on fire, and now she wants to be promoted to the job killer in chief. But much more than job killer, everything else is going to go bad.
All right, so that was U.S. presidential candidate Donald Trump. And Hormaz, the U.S. presidential, race has just become a lot more interesting with Elon Musk also jumping in. And we have to also get used to the era of job offers coming on X, erstwhile Twitter, and they being accepted on Twitter as well, I think, in Donald Trump's era, if he wins.
We look forward to a web series on that. But with that, it's a wrap on this edition of Business Lunch from Nisha, me, and the team that put this show together. Thank you so much for watching. Midcap Radar comes up next.
And influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
To be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your
Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me as always is Vivek Iyer. Looking good for the markets. Nifty above the 24,700 mark. A lot of action all around.
A lot of action all around, and today the good part is, it's a green screen that you can see, and good part is private financials that were lagging so far. They've also made a comeback. So that's one aspect of the market, one segment of the market too, that's made a strong comeback today. Quite a lot lined up on the show. Let's start off with the top headlines. Strong day of trade with the Nifty firmly above 24,700. Mid-caps in line, financials and PSU banks surge, while FMCG, metals and consumer durables lag.
All cargo logistics records highest ever monthly volumes for the month of July. Company says they expect momentum to remain through the year. Stock surges 8%.
Nuclear Software hits 20% upper circuit after company says the board will consider a share buyback on August 27th. Company has cash of close to 920 crore rupees on its books and has previously done buybacks in 2021 and 2017.
Cable and wire stocks surge. KEI Industries and Polycab gain 8% after the brokerage firm UBS issues a buy call with a target of 6,150 rupees and 8,550 rupees a share respectively. Says the segment is poised to grow at twice the GDP growth in FY24 to FY30.
Shipbuilding stocks are the top laggards on NSE 500 as the sector sees massive sell-off. Mazagon Dock, Garden Reach Shipbuilder and Cochin Shipyard lose between 3 to 8% in today's trading session.
Okay, all right. Those are the top headlines. Let's quickly talk about what the markets are doing right now. 137 points higher on the Nifty, where the mid-cap surging 0.6% higher there. What's really doing well is the Bank Nifty. So that one is up around 1.1%. So it's an all-round gain that we're seeing across the board. And as Vivek was mentioning earlier, it's really the private financials which have made a comeback. But a lot lined up on the show as well. DE Development, it is in focus. The company saw good performance on a yearly basis, while the net profit declined sharply on a sequential basis. Gross margins contracted on a YY basis. But to understand what the outlook is going forward, we have Mr. KL Bansal, the CMD of the company, joining us now. Mr. Bansal, good afternoon. Thank you so much for joining in. Well, you know, your order book was flattish on a quarter-on-quarter basis, but you speak about a healthy order book pipeline going forward. Can you give us a sense of what are the order inflows looking like? By the end of the year, what will the order book look like? What will you end with?
Thank you very much. Thank you very much, and good afternoon, everybody. You know, we recently acquired a very nice order for about $40 million, and you know, the order book as on date, if you will say, is around 1,100 crores, which is highest in the history of our company. And you know, many orders are in the pipeline. We expect that every month we shall be getting large orders. There's absolutely no dearth of business. You know, that is our standard line. I say it every time that, you know, we have been struggling only for the capacity, not for the orders. If we have the capacity, we can get still more large orders still are there, which can be acquired.
Okay, Mr. Bansal, you know, you've told us that the order pipeline is quite healthy. Would you be able to quantify that at the end of FY25, you know, what kind of order inflows are you expecting and where do you expect your order book to stand at, given the fact that we understand Q1 was quite muted in terms of ordering activity? So at the end of FY25, where do you see the order book stand at?
It should be at least 1,500 crores, if not less, if not more.
Can you come again on that number, Mr. Bansal?
So it will be minimum 1,500 crores.
The order book by the end of the year?
Yeah.
You've already received a close to $40 million dollar order from Dow Chemical Canada. So on the back of that, you know, you're sticking to the 1,500 crore order book or the order inflow that you have. So now going forward, export versus domestic, what will the mix look like, and what kind of ordering activity are you seeing, especially in the export order book?
You know, we have always been taking this stand that historically we have been doing almost 50% export and 50% is our domestic sales. In this year, you know, we'll still maintain the same mix, but in the coming year, the mix may slightly shift more towards export, and we may be doing around 60% export and 40% maybe the domestic sales in the coming year.
Okay, 60% exports, 40% domestic sales. Give us a sense of the new Anjar facility. How will you be able to ramp this up? What is the commercial production? What is the incremental revenues and orders expected after the complete ramp up?
We have already, you know, started the commercial production, but of course it's still on a lower level. And we expect that the full operation of this plant will come in March 25. And we expect to do, you know, when it is fully operational, more than 200 crores in a year immediately after that.
And just to follow up on that question as well, on the export versus domestic split, is export coming in at better margins, Mr. Bansal? I just want to understand, how do margins work in two geographies?
You know, in any given scenario, the markets, the margins in the export are definitely higher, but, you know, at the same time, we have to spend a lot of money also. to make sure that your product is well accepted. There is no issue while when it goes outside, because outside markets have altogether a different vision, what we have in India. So, we have to be very, very careful. We have to spend a lot of money in ensuring that, whatever we supply, it should get accepted as it is.
Mr. Bansal, at the end of Q1 in the con call, you did mention that post commissioning of the Anjar facility, you would have better visibility and then you would guide the street to an FY25 guidance for top line margins and PAT. We are right now in the middle of Q2. What is the status of that particular facility? And do you now have better visibility? Would you be able to guide the street for top line EBITDA as well as bottom line?
Sir, again, I will just stick to my same stand that the commercial production has already started. We are ramping it up every 3 months. And, we will be ramping up our Anjar facility by more than 3,000 tons in a year by September, October only. And then another 6,000 ton or around 9,000 tons in next 3 to 6 months time. So, that's absolutely on track. So there is absolutely no issue on that. And as far as top line and EBITDA is concerned, I will again say that, we already have shown substantial increase compared to Q1 of FY24, and our FY25 numbers are much, much healthier. And this is what we projected, that, we shall start showing that we are on the upward trend right from Q1 itself. And I am sure that in Q2 also, you will be able to see very healthy trend, and it's going to be quite upwards.
So when you say healthy, would you be able to quantify it in some form, even a range? Is it a 10 to 15% upside on a year-on-year basis? Or is it slightly higher than that? What does healthy mean for you?
Year-on-year basis, definitely more than 10 to 15%. Year-on-year basis, definitely.
Okay. All right, Mr. Bansal, thank you so much for joining in today with all those details. That's the word coming in from DE Development, expecting an order book of around 1,500 crore rupees by the end of this year, with 60% coming in from exports. Let's slip into a break. When we return, we'll be joined by the management of PVR Inox to discuss the company's business outlook and more. Stay tuned for that.
For your lifetime of service to our nation and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You could feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future and she embodies it.
Oh, I think it's great. People really get excited when something happens they didn't expect and it makes them happy. So we're a happy group.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women.
Welcome back to Mid-Cap Radar. As you can see, the screen continues to remain quite buoyant. The one sector or the one segment of the market that's doing very well today is the private financial space, and the bank index on the back of that is up over 1%. Look at some of the stocks that are doing quite well in the session today. First on the list is IndusInd Bank, stock up almost over 2.5%. And when you're talking about Kotak Mahindra Bank, that stock too is trending near the day's highest point. ICICI Bank, HDFC Bank, both of these stocks too doing quite well in the session today. Along with that, the other set of stocks that are doing quite well is the insurance pack. So look at names like SBI Life, look at names like Max Financial, ICICI Pru, SBI Life. All of these stocks too doing quite well in the session today. In fact, if you're looking at SBI Life, this particular stock is up over 4% in the session today. ICICI Pru up almost 2.5%, and Max Financial too trending near the day's highest point. Now, moving on, we have management on the show. PVR Inox is the next management on the show. Shraddha Kapoor and Rajkumar Rao's 3-2 has witnessed strong box office collections over the last 5 days. Q1 performance for the company, though, was quite lackluster due to IPL elections. To discuss this and more, we are joined by the company's joint MD Sanjeev Kumar Bijli and CFO Gaurav Sharma. Good afternoon, gentlemen. Thank you so much for joining us here. First off, give us a sense of how exactly collections have panned out for 3-2, how is occupancy rates, and what kind of ticket pricing are we seeing, especially over the last 5 days?
Yes, it's been a phenomenal weekend. Of course, it was a long weekend starting with 15th of August. And then yesterday as well, it was Rakhi. So we got the advantage of 5 days weekend. The film has done phenomenally well, around over 240 crores net box office in the first 5 days. And it seems to be still going strong. We still are expecting it to do well on this weekend as well, as there's no other new film releasing this weekend. The occupancy has been roughly about 68% over the weekend, and the ATP has been around 250 to 260 rupees. So yeah, we're very happy with the performance of this film.
Okay, yes, and so are the viewers, right? They're thoroughly enjoying this particular release that has come by. Mr. Sharma, welcome to the show as well. I wanted to understand if occupancy rates are higher, as Mr. Bijli mentioned, around 68% of the weekend. The average ticket price has gone higher. What about ad spends? Are you seeing some comeback in terms of ad spends? Ad spends were under pressure the last 2 quarters. So are we seeing a comeback there as well?
Yes, definitely. Ad spends are driven by films that create buzz. And, Stree 2 and the films which got released in the last couple of months, like Wolverine and Deadpool, and before that, Kalki, has created a lot of buzz, which has attracted a lot of marketeers to advertise in cinemas. And we are seeing a very strong uptake in advertisement revenue as we enter into the festive season in the next few months. And the pipeline of movies which is lined up for release across different languages is very strong. We strongly believe that we'll see a very strong, robust growth in ad revenues sequentially quarter on quarter.
So, Mr. Sharma, when you had earlier indicated on an absolute basis it could reach pre-COVID levels by FY25, are we on track to achieve that number?
As of now, it seems to be on track, yes.
Okay. Mr. Bijli, coming to you, 26% occupancy, is what we saw at the end of Q1, and you mentioned that FY25 will largely be similar to what FY24 panned out by. Now, buoyed by the success of the last two films, can you expect to see slightly higher occupancy rates? And also another question, average ticketing prices, has moderated when you're looking at it, especially on a sequential basis. You have come out with a couple of offers, so do you expect higher volumes and lower ATPs going forward?
I think your first question, of course, we're hoping that the occupancies and admissions are high in Q3 and Q4, and Q2 so far is panning out very well also. But Q3, we have a range of blockbuster films coming out in Hindi, regional, and English. We don't have much of visibility of Q4 right now as far as the lineup is concerned. But Q3 definitely is looking very strong on paper, and we are hoping that all these films do better at the box office. We get better higher admissions, and therefore, because of this, we're able to get better ATPs as well. And we're also seeing that there is a huge uptake in propensity to consume formats as well. People are preferring to watch films in director's cut, luxury formats, IMAX, 4DX, which have a higher ATP anyway. So yeah, the answer to your question is that we're hoping that both actually do have an uptake in Q3 and hopefully in Q4.
Okay. Mr. Bijli, just to follow up on that then, you're talking about different formats being preferred by viewers as well. What does it mean for screen additions? So you've been hovering around that 1700, 1750 screen mark as on Q4. What is the addition plan in FY25? How much would be coming from premium screens? And would that continue to be your strategy going forward?
We have about 120 odd screens which are under fit out right now. And they're a mixed bag actually. So it's a mixed bag of premium, large scale formats like PX and IMAX and mainstream seats. But roughly the split is about 20% would be the formats, about 80% will be mainstream. So that's what is going to be the rollout going forward. But we're also looking at shutting about 60 to 70 underperforming screens, which are basically have come to an end of life cycle. We had started doing this from last year itself. And therefore, the net addition of screens will be about 50 to 60 this year.
Okay. Mr. Sharma, talking about the food court JV business that you all announced a while ago with Devyani, we understand that you've named it a street junction, and you said that in the next 2 to 3 months, it will actually get operational. Could you give us a sense of timelines? What is the initial set of stores that you have planned by FY25? What kind of top line addition can it actually give? And what kind of margins will you be targeting for this particular segment?
So yes, we have identified about 4 locations for the food court business across different parts in the country. And over the next few months, we will open the food courts in those locations. We will announce the opening dates very soon. As far as the near-term visibility on revenues is concerned, I think it's too early to comment on that. We will see how the food courts perform and pan out, and then we will roll out a 3-year plan to scale up the business. But we feel that it's going to be quite profitable as it is synergistic to our.
Mr. Sharma, any internal targets that you set in terms of what it can contribute?
No, there are no internal targets. It's a joint venture partnership with Devyani. And we will open a few food courts, we'll test the waters, and then we'll decide the plan to scale it up.
Okay. So what kind of investments would you be making in a JV like that? What is the outlook on debt going forward? Because you have spoken about using monetization to reduce your debt. What's the plan here with the balance sheet?
Yeah, debt reduction and strengthening our balance sheet is a key focus area of our strategy. We plan to use whatever free cash flow that we generate from the business to pay down debt. And we are also in the process of evaluating the sale of 3 properties in Pune, Bangalore, and Pune, Mumbai, and Vadodara for monetization, which will likely yield about 300 to 400 crores of cash, which we will use to repay debt. As far as the food court capex is concerned, it's not significant in near term. I think it's not going to move the needle around either the capex or the debt reduction strategy at all.
Okay. All right, gentlemen, it was a pleasure speaking with the two of you. Thank you so much for joining us today. And the upcoming list looks very interesting. So looking forward to a lot of them. Let's see which way things go. But it's a pleasure to have you on the show today. Okay, all right. With that, we'll get into another break. When we come back, we'll talk about more stocks and the market moves. Stay tuned.
Fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. My friends, when a barrier falls for one of us, it falls and clears the way for all of us.
Bengal is not a place safe for women. Bengal has failed its women, not Bengal society. The present government of Bengal has failed the women folk. Bengal should again be brought back to its pristine glory, where women had their own respectable place in society. That has been lost. They are scared. They are scared of gundas. This has been created by a government which is insensitive to this issue. You know, we take pride in the fact Yatra Naryastha Pujyanti, Ramante Tatra Devata. Where women are honored, there the gods rejoice. But unfortunately, in Bengal, the government has ensured that women have no protection. That is what is reflected in the gruesome tragedy that has taken place in RG-Kar. That should not be repeated again. I respect the sentiments of the mothers. Certainly, the law will take its course. See, my communication with the Home Minister and the Union Ministers, I do not want to discuss the details in public. I'll do my duty. Regarding RG-Kar, whatever steps are to be taken will be taken. We have the observation of the High Court about absolute failure of the state machinery, which is a very, very serious observation. I am apprised of that. As governor, I will do my duty and fulfill my promise to the people of Bengal.
What kind of thing we accumulated at sub-100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for.
Welcome back to Mid-Cap Radar. Well, one particular segment of the market that's doing very well is the cable and wireless space. Now, when you're talking about this particular space, it's on the back of the fact that UBS today has initiated coverage on two stocks. have a look at KEI Industries and have a look at Polycab. Both of these stocks doing very well on very strong volume action. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.
To justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC-TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer, but provided with the number of instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints in the last financial year alone. Express and mail trains, which account for bulk of passenger transit in India, saw 47% rise in complaints over the quality and hygiene of food items served to the passengers, according to RTI response shared to CNBC-TV18. So what action has the railways taken so far? Well, 3 contracts have been cancelled and 68 show cause notices have been issued in the last 3 years alone. Let me put this in context. Even after facing nearly 13,000 complaints over food quality served to passengers in the last 3 years, only 3 contracts have been cancelled. Quality concerns over food served in train is not a new issue. In 2017, a CAG audit report revealed that the caterers for Indian Railways have consistently failed to protect the food quality served to passengers from flies, insects, dust, rats and cockroaches. A parliamentary panel report tabled this year said that the lapses identified in the current system pose a challenge not only to the passengers' experience but also to the overall reputation of the Indian Railways. We asked IRCTC to respond over the rising complaints over the food quality, and they have not done so yet.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has?
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Today we have with us a very special guest, Neil Parekh, Chairman and CEO of PPFAS Mutual Fund. And we are going to discuss everything markets, the valuations, if they're really expensive currently, the recent corporate earnings, the best approach for the markets at these levels, if any sectors are still attractive. Neil, of course, has spoken about the frenzy in thematic funds, so we'll try and explain the risks and opportunities there as well. All this and much more in the next 30 minutes. Neil, welcome to the show and thank you so much for joining us today. And at a time, we are seeing a lot happening in Indian and global markets, right? So what are you making of the markets right now? Earnings done for Q1, RBI sounded hawkish this time. We have a lot of geopolitical issues. What's your sense?
Thank you, Sonal, for having me over. Honestly, the last few years, the markets have been on a one-way trend upwards, So I think we've all been happy with that, A lot of investors, asset managers, everyone has been pretty happy that markets have done really well for us for the last few years. Now I think it's a bit of a time to be a little cautious now because markets are looking slightly more expensive. Also, valuations are not that cheap, and a lot of we're not getting too much valuation comfort, to buy new stocks. So obviously, the last few months also has seen a lot of news flow in terms of elections or geopolitical events and stuff like that. So which has kept the markets quite volatile and on the edge. I see that will continue to happen. I think markets will probably be quite volatile going forward also. At us at PPFAs, what we've been doing, I think our portfolio has been more or less stable only. We've been actually cutting positions wherever we're seeing excesses or overvaluation and adding wherever the sectors or stocks have been neglected. So we're being a bit cautious right now.
Okay, all right. So a cautious stance coming in from PPFA's mutual fund. Despite that cautious stance that you are talking about and markets going one way, what's happening in the markets right now, especially in the mutual fund industry, is thematic funds. They are still in vogue. Sectoral funds are now 14% of total equity AUM. First, why are generally all the other AMCs showing so much interest here? And second, what is your advice to investors in this case?
Yeah, so what had happened a few years back, we had a scheme categorization circular that came, So basically what it said that a fund house cannot have more than one scheme per category. Before that, before the circular came, mutual funds were allowed to launch as many schemes as they wanted in as many categories, But that came to a standstill a few years back in, I think, 2017 or 18. Thereabout. So if it's a flexi cap category, a fund house can only launch one flexi cap fund in that category. Now, so most of the categories you can only launch one scheme, but there was an exception made for thematic and sectoral fund, where there's no limits to how many schemes or how many themes or sectors you can launch. You can launch mutual funds in, So obviously, I would think. That's one of the reasons why people or mutual funds are launching a lot of thematic and thematic funds and sectoral funds is because that's the only place they can launch more funds, Also, at the time when markets are going up quite frantically, then there's greed in the market. People are wanting to invest in newer things. The overconfidence is pretty high. So I feel like most of mutual funds are launching right now because it can lead to higher AUM. The other reasons why sectoral and thematic funds are in vogue is because every time you launch a new scheme, you can charge higher and higher fees on those new schemes, Because as the fund goes larger, you have to bring down your expense ratios. But in a new scheme, you can charge top dollars for that or the highest expense ratio. As such, you can also pass on a higher commission to the distributors, So the whole ecosystem works well in that way, in the sense that everyone is happy. The AMCs are happy, the distributors are happy, but I'm not too sure about retail investors investing in narrower and narrower themes. I think investors should really study these funds and these what are the new NFOs are coming. I mean, it's always good to look at newer things, but don't be swept away by them. Be pretty careful about what you're going to be investing in. Don't let your greed or the FOMO get in the way of you investing into things that really don't make sense for you. So more or less, I would say that most of these schemes can be avoided. Stick to your asset allocation.
FOMO is the key word in the markets that we are in right now, and that's the reason we are seeing that big surge in inflows coming in from thematic funds, ultimately leading to those flows in equity funds as well. And while we are at those flow number, we're talking about record high gross SIP inflows. But if we talk about the net and look at the internals, as a percentage of gross SIP collection, it declined to an 11-month low of 40%. This is the number as of June. What is explaining this? Redemptions are still at a higher level. What does it talk about the market texture in that case?
Yeah, so I think, first of all, SIPs are great ways to invest in the market. It's a very disciplined approach. to invest in the market. When the markets are high or the NAVs are high, you get lesser units, but as the markets fall, the NAVs go down, you get more units. So I'm quite disappointed to see that SIPs have stopped or people are pausing their SIPs because of the market volatility or trying to time SIPs. I think that's a extremely bad idea if people are trying to do that. The other thing is that, so one is obviously the SIP stoppages probably are because of market levels and the volatility I just spoke about in the last 2-3 months. That's leading to that. And also there were some KYC issues were there, in terms of getting your KYCs, and if your KYCs were not done, then that would stop your SIPs automatically. So a combination of these two, I feel, has led to an increased number of SIPs to be stopped. Again, I am not. I think, like I said, the markets are quite have gone higher in the last few years. And if people do need money in the next 1-2 years, or they have expenses, or they want to profit book to buy a house or what have you, whichever goal you have, I'm okay if they redeem some from their corpus, but I think stopping SIPs is not the answer. Maybe a redemption would be a better answer. So I would urge people not to stop their SIPs and let the SIPs continue, because that's a very good disciplined way of investing in the market.
No, totally take your point, and it keeps you in the habit of investments and not so much expenditure otherwise. Since we are talking to you, we have to talk about PPFAS, FlexiCap Fund, Neil. This has been an outperformer and every investor's favorite as well. What has been the strategy here? Are you looking at some changes in the fund at the global level, considering geopolitical risk and the volatility that we are seeing in the markets right now?
Yeah, so I think what has helped us is just the consistency and the disciplined way of approaching, I mean, we've been doing this for the past 20-25 years, earlier in the PMS avatar that we had, and now in the mutual fund. So I don't think there's any change to our investment strategy or philosophy in that way, So I think also having a very transparent communication to the unit holders has really helped us, in terms of getting sticky investors in, where they really know what we are trying to do, and we try to communicate exactly exactly about what's happening in the fund. So I think that's helped people to stick around, and I feel in the markets, I think just having a long a time horizon automatically will make you make some decent amount of money, and power of compounding can work for you. The other thing is that we've never just chased fads and fancies of the market, and we always look for neglected sectors or stocks to invest in, So that's been kind of the approach we've had. It's a bottom-up stock picking approach where we look at management quality, valuations, business performance, business metrics. Again, is the company very leveraged or is cash rich? Do they have a competitive advantage around it? So these are the things that we look in a company. And obviously, if all these are there, and if the valuations, the starting valuations are very important to invest in. So that's the discipline approach we've got, which has helped us so far, So yeah, so nothing really changes in terms of our fund philosophy or investment style as such.
I ask you because it has been one of the favorites when it comes to investors. Just look at the way the returns have been. Since inception, it's almost been around 680%. In last 10 years, 430%. 5 years, 218%. So if you're talking about numbers like this coming in from just one single fund, do you think there's still more room for growth from here on in terms of returns? Any churn you're planning to ensure that the outperformance continues, because the market has changed a lot since then?
Yeah, so like I said, we are being cautious right now in our approach to these markets. So it's not a market where we're finding easy opportunities to invest in or very attractive opportunities to invest in. And as such, we are currently sitting on 16% cash, So starting valuations are very important to for investing. You can't just invest at any value. The price you pay for a stock will determine your future performance or your future returns. So we are very mindful of starting valuations. And right now, starting valuations are not very attractive, and hence we're sitting on about 16% of cash. So our approach is that we don't mind taking some short-term pain if it leads to long-term gain. So sitting on some cash and not being fully invested, and if the markets keep rising, you will probably see some short-term underperformance in our fund, and we are okay with that, and we are okay of underperforming in such markets for some time if our longer-term returns will be better over the next 5 or 10 years. We are trying to optimize for long-term returns and not to maximize short-term returns. So there could be some underperformance, short-term underperformance if the markets continue to rally and we are sitting on 16% cash.
Yeah, I think as long as the longer term performance works, I don't think it would be a worry for investors. It's a very interesting chat, Neil, but we have to take a quick commercial break. When we come back, we'll continue our conversation with Neil Parekh, the Chairman and CEO of PPFAS Mutual Funds, about the market trends and mutual fund investment strategy as well. Stay tuned for that.
Towards in the past couple of years.
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted.
Welcome back. You're still tuned into MF Corner. We still have with us Neil Parikh, the Chairman and CEO of PPFAS Mutual Funds. We're discussing everything about mutual fund investment strategy, the markets in general as well. Neil, you do have investments in global stocks, the US markets, some big names there. How are you looking at global markets in general? Anything which is standing out for you?
So we continue to like the stocks that we hold, and currently we hold only 4 stocks in the global portfolio, which is Alphabet, which is the parent of Google, Microsoft, Facebook, and Amazon. So pretty much the FANG stocks. I think we continue to hold them. We continue to like them. The earnings growth, the business performance of these companies have been phenomenal. Even though they are such big companies, they're growing phenomenally. They're available at a decent valuation also. And most importantly, that some of these companies are the forefront of the digital trends or the tech trends that people are talking about in terms of artificial intelligence and the like, So most of these cloud computing and stuff like that, right? So most of these companies are in the forefront of that, and they are dominant players in that. And we see that they continue to do well for us, and yeah, we're pretty excited about having these companies in the portfolio. Unfortunately, for the last couple of years, we've not been able to invest further in global companies because of the RBI limit hit of 7 billion for the whole mutual fund industry. As such, we cannot send more money outside the country to invest in global stocks. So as of right now, these are our 4 best ideas, and we continue to hold them. The only other way we could buy other stocks is if we sell our current position and get something if we think that that's better. But so far, I think we've not found anything better than these stocks. So we continue to hold these stocks, and I think, and hopefully we'll be able to invest further in global stocks in the near future.
Okay, so the tech trends that you're liking, the stocks that you continue to hold on to, that's what's happening globally, the IT boom that continues. But where are the spaces or the sectors in India where you're seeing some margin of safety? IT has made a comeback, private financials have made a comeback. Is this a space that you like?
So we actually, like I said, we like some of the neglected spaces, and one of the big neglected space right now is the private sector banking, They have not really, the private sector banks have not really, participated in this rally as such, and we continue to like them. They take market share from PSU banks on a yearly basis. They are available at attractive valuation, and obviously some of these banks have had some short-term or near-term issues in terms of various reasons. But going for a longer-term horizon for the next 5-10 years, we see private sector banks looking quite attractive at this stage to buy. We are also liking select large cap IT stocks, the IT companies, and select PSU stocks, which again, the dividend yields are also pretty good in some of them. So and available at a good valuation. So valuations are extremely important to us, like I just mentioned. So some of these where valuations are reasonable, we've been slowly adding some positions there.
Okay.
Yeah.
No,
Sorry.
please go ahead. Please go ahead.
Yeah, so otherwise, I think a lot of the sectors or the space in the markets are looking pretty expensive, So it's not something you can just go out there and buy anything and everything. I think you've got to be really judicious about what you're going to buy today. So we are being extremely cautious of what we buy into right now because, like I mentioned, starting valuations are very important to make future profits.
That's extremely true, and something that maybe the markets are not yet pricing in, despite those high valuations that we're seeing. So that caution coming in from you really is important in terms of a market opinion. So in that case, what should the portfolio allocation look like right now? The small and mid-cap frenzy, you think it's behind us? Or as we've been saying, markets are just going through and cutting through all the FOMO that they're talking about?
So clearly small and mid caps have risen quite dramatically over the last few years, and they are again, on an overall scale, they are not very cheap. Obviously selectively you can get some good opportunities there, but putting in again, I think the main thing is that following your asset allocation. And each person's risk will be different, so each person's asset allocation will also be different. So it's hard to give a blanket statement here, but I do feel if someone is overbought in small and mid-cap funds or what have you, then I think it's not a bad time to get it back to your asset allocation. You know, don't be too overbought on these sectors. You know, on the small and mid-caps. I think have a longer-term approach, but don't be overbought in this space.
Okay, so Neil, something that this is a question we get very often from mutual fund investors, from the retail viewers. What would some of the ways be an investor can start the investment journey with mutual funds? Do they look at a particular category? Is it pure play equity fund? Or should it be a mix of many things? Because at the start, everything looks very confusing.
Yeah, so 3-4 points from my side, and let me just put those out. So I think over these years, when I'm seeing people's portfolios or we're seeing funds, I think more and more in my mind, it's like the problem we have today is over diversification in people's portfolios. You know, that people are buying a lot of funds and a lot of schemes, you know, which doesn't really do anything because the underlying stocks are the same. And the returns are not very optimal, you know. So I think less is more in my view. I think for most people, and this is even for the newer people, the people who are just going to start coming in the mutual fund industry, who are already invested or who are seasoned investors also, I think on a whole, if I have to make a blanket statement, then I'm going to say that you just need to basically 2 diversified mutual funds and one probably a large cap index fund, and I think that would do you world of good. I think you can just and the main thing is that a longer term horizon is needed. I think it's very important to know that investing is a marathon, not a sprint. So don't try to sprint. Look at it as a marathon. Look at it over a 5-10 year period. Let the power of compounding work for you. Have patience. Sometimes inactivity is the best activity, and let your just funds grow. You know, you don't need to tinker too much by buying and selling newer funds or something like that. Again, one thing is that you probably don't need so many NFOs that are coming and hitting the market. You need to you really need to study if those actually make sense in your portfolio. If it doesn't, it's okay. Don't buy it out of FOMO or out of your greed or something like that. So just stick to that asset allocation. Have a few funds which you're comfortable with, which have a more of a diversified approach, so they can take advantage of market opportunities as and when they come in various sectors or market caps. You know, that's the one thing I would tell people. Secondly, like like I said, the over diversification in the is I think a big issue. You know, because people come with 15-20 schemes. You know, I mean, one doesn't need so many schemes because, like I said, the underlying stocks are pretty much the same, you know. So be careful about your asset allocation and how many schemes you allocate to. Right. It'll be easier for you to track those schemes. And I think on a whole, where I've seen fewer schemes, those are given better risk-adjusted returns also. So I would say that from the equity point of view. From a debt fund point of view, I think we all know that obviously the taxation changes are here. So a pure debt fund will attract your marginal rate of income tax that you pay. So I would say that one thing that looks attractive to me, or what one should do, is probably look at your longer term or mid to long term debt allocation in hybrid funds, which are debt oriented. You know, anything less than 1 year, I think liquid funds and arbitrage funds would do the trick. More than 1 year, if you have a time horizon above 1 year in debt funds, then hybrid funds will work well. Anyway, now the long term has come down from 3 years to 2 years. So post 2 years, you'll be getting a good taxation too.
A lot of changes in debt funds. I think that's a different episode altogether. We'll plan that for sure as well, Neil. Such a pleasure having you on the show today. Thank you so much for your expertise on what to do with mutual fund investments in volatile markets like this.
Thank you, Sonal.
Okay, with that, we'll take your leave on MF Corner today, but stay tuned for more news and updates.
Motorization as transports use lifts instead of climbing and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become
Hang Seng, which was much higher yesterday, is absolutely flat but with some positive bias.
Closing decisively above the 24,686 level, this level can take us towards the all-time high of 24,078.
Macquarie on TCS, where they've raised the target price to 5,740.
About a 0.25% gain, 24,630. The Sensex is at about 80,651.
Whatever the framework be, it's very tough to justify stocks across the board.
It's 24,700 on the Nifty. It's been a great start to Tuesday morning.
The private capex also is taking a baby step now. Government has done its heavy lifting.
There appears to have been an issue in terms of management of this issue on the ground, raising questions against the West Bengal government.
Looking good for the markets, Nifty above the 24,700 mark.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
It's a good-looking screen. It was a good-looking screen in the morning, and that continues as we approach the last hour of trade. This is Closing Bell. We are coming to you From the CNBC-TV18 Motilal Oswal studios, I'm Prashant. With me, my colleagues Surubi and Mangalam. Guys, good afternoon.
Hi, good afternoon, Prashant. It's your birthday impact, I think. That's what the bulls are celebrating, because usually we've had these wobbly days, range-bound action, not participating or in sync with the global move. But today, it's all green. We're practically at the highs.
But at the highs, what can one say? Birthday or no birthday, Prashant is just very happy right now.
The good luck charm. Yeah.
I think rose banate hain, but 150 point rose Nifty. I think.
Well, you know, we're still about an hour away from close. What's interesting is that the Nifty is holding above 24,700. 24,700 was the upper end of the range.
Yeah.
The Nifty Bank is holding above 50,900, which again is slightly, only marginally above the 20-day moving average. And even the financial services index, that's just above the level where we have the maximum amount of open interest when it comes to calls. So we're a little higher than the outer end of the range. The question is, do we break out in the last hour? Or maybe the market puts its invisible hand once again and says that, no, this is the range that you're working with. That is when we'll know, whether your birthday party actually works out here or not. It'll be damn fun.
I think, if you were a betting man, I am not. I think we break through and we kind of head higher and perhaps, the path to all-time highs, which is not very far away, 25,078, right? Yeah. You need 2 good days and you're there. So hopefully we are headed there. So as you said, the Nifty is trading above the 24,686 level, which is the upper end of the gap area. It's, of course, it respected the 20-day, never once did it head back to that level. So it's kind of above that as well. And 25,08, of course, is the next sort of target, which is the previous all-time high. I think, and why not? And we were talking about this in the morning, and it was true yesterday as well. Of course, yesterday things fizzled out and the Nifty ended with about a 30-40 odd point gain. Global markets have very quickly realigned to the earlier narrative before this volatility in the beginning of August, which is essentially, not too hot, not too cold, perfect conditions for the market to cruise along. You look at what's happening in the US. So I think you're seeing some of that here as well. Bank Nifty is also, that's the one. It's finally trading above the 20-day moving average. The Nifty Bank, it never got to it. That was 50,761. We're at 50,900 plus. Here we are, I think 51,100 or so is the upper, the corresponding 24,686 level, which is the upper end of the gap area. So it's a bit more work here on the Nifty Bank because it's underperformed the Nifty. And apart from, and it's, if you want to disaggregate what's happening with Bank Nifty, actually PSU banks are doing much better. Not weight-wise, of course, but, the index is higher, the private bank index is higher as well. And outside of banks, IT and pharma are the other two indices, 0.6 and about 0.4% gain. So overall, a pretty decent looking screen is what we have. And we'll see, as we were discussing, whether the market's got in it to take out this range and perhaps head to the previous highs over a period of time. Surabhi.
Absolutely. The only sort of fly in the ointment could be the fact that right now global markets are not holding on to that kind of an enthusiasm. Europe is flat. You had Japan, of course, building on gains. Wall Street futures for the time being are a little flat. It's going to be more about, of course, the end of the week action, Jackson Hole, and what you get, in terms of all the central bank commentary. That's Europe for us right now. So flattish trends coming in. But here on our screen, it's a big party out there. Look at the mid-cap index. It's up about 0.7%. And if you look at the advance decline ratio, then those lines are really nice and broad. Over 1,500 stocks advancing in the market right now. And just to give a sense or a flavor of what's happening in the mid-cap market, look at the way stocks are flying. KEI Industries as well as Polycab, and we'll talk about these stocks as we go forward, especially KEI actually. It's up about 8%. There are some brokerage notes that are sounding very, very optimistic on some of these wire companies talking about the big play on electrification. So that's working well for these stocks. Something like a nuclear software, there's a impending corporate action, a buyback that's in the offing. 20% up. But even if you go beyond news, the movers and shakers, look at Poonawalla Finance, 7% higher. Godfrey Phillips, second day running, 7% again up on that stock. Angel One, the move started, just a couple of days ago. It's continuing today with a 12.5% sort of a up move that we're talking about. All cargo logistics, I think it was the business update that came through, the monthly update that seems to be working well for some of these names as well. So short point is that the mid-cap market is very vibrant and the large caps are firing away. Both the engines, banking and IT, both turbocharged today.
Well, I'm looking at two things in particular. The first one is, the theme that Ramdev spoke about yesterday when he said that BFSI is going to do well, but BFSI not necessarily implies banks, even though banks are doing a lot better today. Look at all the insurance companies up anywhere between 3 to 4%, and these are the bigger ones that I'm talking about. You know, case in point, something like an HDFC Life Insurance, SBI Life, you have ICICI Pru Life, all of them higher, and these are nifty stocks. The first two at least, they're doing extremely well. And then you spoke about Angel One. Look at the other capital markets theme that Ramdev did speak about as well yesterday. So IIFL Securities is up around 13% odd. We're seeing a decent traction on something like ICICI Securities as well, which is up around 7.5% odd, and good traction on all the other names.
Motilal is up, I think, and of course Angel Surabhi mentioned. Motilal Oswal is also
Motilal Oswal itself is up. So you're seeing some traction in the BFSI, non-banking BFSI space in particular. And that, ties in with the Tuesday theme, which is the financial services expiry. The second thing is that irrespective of valuations, there is momentum. He spoke about two stocks. He spoke about Zomato. He spoke about Trent, right? Look at Zomato. Zomato, saw that large trade take place in the morning. It was at a discount to the prevailing price, and from there itself we've seen the stock flatten out. So that supply was absorbed and the stock moved higher. For most part in the second half of trade, the stock was in the green. The other one is Trent. Look at Trent. Profit taking in the earlier part of today's trading session, that dip has been bought and how the stocks moved to the high point of trade. So is that going to market?
Yeah, no, absolutely. On these brokers, they're all higher, and Angel is up, I think, 20-25% yesterday and today combined. Today is the last day for market participants to submit their feedback on the
F&O consultation paper, right?
Consultation paper. Usually the feedback goes from associations like ANMI, and large brokers submit. Now, I don't think, I'm not sure how that ties in with stocks which are doing well. Maybe just, Angel, etc. were completely bombed out. High was 4,000, their stocks had fallen to, and that's the leader, right? Out of the listed space, it's the most well-diversified, well-owned name. It had, I think, fallen to 2,000 to 2,100 kind of levels, but it's quickly picked up to about this 2,600 levels. We're actually trying to get a sort of sense of what is the feedback which has been given. SEBI proposed something that asked markets for the feedback. That feedback is being given, and then, of course, the SEBI will consider and then finally issue directives. If you remember, lot size and, one expiry per exchange per week, those kind of things. So that is another thing to take note of. But more on all of this as we go along. We'll talk about what's down as well, and what's down is shipbuilders, and Hormuz comes in in just a little bit. But how should you position yourself in terms of specific trades? Mitesh is with us to help us with that. Mitesh, over to you. What do you have, and what should one do?
Yeah. So Prashant, throughout the day, the theme is that the Bank Nifty could be possibly coming back into action, come out of its underperformance mode. I think it's done that. Managing to get past 5750, 5800 was a good event, and now we're sustaining about that. I think longs can be taken with a stop below 5730. And if this sustains, which I suspect it will because the indicators have started turning up, then 51,450 and then 51,800 are my two targets on the upside. So maintaining a positive bias. In fact, I have Industrial Bank as one of my recommendation. I think that's another stock which, like Kotak Bank, I think came out from a big decline, and then we have seen the stock trying to come out of oversold levels and reverse. Recommend a buy here with a stop at about 1365. Look for a target of around 1415 to begin with, and in the best case scenario, 1430. And the other one is buy on Indus Tower with a stop at about 417, target of 440.
Okay. All right. Got that. Thanks very much, Mitesh, for the calls. We'll come back to you in just a bit. Well, while we're talking about a lot of the pockets of the market that are doing well, the one area which is seeing profit taking is actually the CPSE space. This is again a follow through from yesterday. Yesterday was day one of some profit taking. Even today, the CPSE index is underperforming. And some of these stocks, the shipbuilders owned by the government of India, they are the ones that are really taking it on the chin, specifically the PSU names and even some of the non-PSU ones. So what could be behind this? Is it just profit taking after what has been a mammoth run? Let's go across to Hormuz. He's poring over the technicals and the valuation picture. Hormuz, fill us in.
Just about a month and a half earlier, we had highlighted as to how shipbuilders of India have run up significantly and how their valuations have shot through the roof. Now, these stocks have been wobbly a little bit since then, and today is no different. Now, all three of them, Mazagon Dock, Cochin Shipyard, Garden Reach, all of them are trading with losses of anywhere between 4% to 8% in today's session. Now, it was on the 5th of July when we reported to you about this. And that very day, both Mazagon Dock and Cochin and Garden Reach had topped out for the time being. being. When Cochin Shipyard topped out the Monday after that, which was on the 8th of July. And since then, Mazagon Dock is down 27% from those levels. Cochin Shipyard is down 31%, and Garden Reach, which en route to its record high had even doubled in 1 month, is down nearly 40% from those levels. Now, a lot of commentary came in as to whether these companies would be able to deliver in the June quarter, and they did to a certain extent. Now, lower expenses meant that Mazagon Dock's margins leapfrogged from just under 8% last year to well over 27% this quarter. And Cochin Shipyard's margins also saw a healthy expansion. Garden Reach struggled a little on the margin front, but revenue growth was decent during the quarter. Now, a 30 to 40% correction is significant in any stock, but when these stocks have doubled, tripled, or even quadrupled in value, that number pales in comparison. Now, take a look at this. Now, until the 30th of June, Mazagon Dock shares were up almost 90% on a year-to-date basis. Cochin Shipyard had more than tripled, and Garden Reach was up nearly 2.5 times. That shows the frenzy that these stocks had during this period. But not everybody has been gung-ho on these names. ICICI Securities is one such brokerage. Now, even when these stocks were shooting through the roof, it was bearish on these names, and it continues to do so. Its recent note on Mazagon Dock projected a 77% downside on the stock with an 1165 rupee price target. Yes, expecting the stock to fall to 1165 from a high of nearly 6,000. Now, it believes that while margins for FY25 and 26 will remain elevated, they will taper off once these new contracts are executed. Now, even for Garden Reach, ICICI Securities had a price target of 515 rupees, which is a 73% downside. Now, it believes that Garden Reach's EPS will remain in a range, and execution issues will also emerge for the Bangladesh orders that they have won there because of the geopolitical unrest that currently plagues the country. So even after all of these corrections, are these valuations now reasonable? Well, not really. Cochin Shipyard still trades at 45 times 1-year forward PE. The 5-year average, 14 times. Now, the story is no different for Garden Reach as well, trading at 30.5 times 1-year forward. Its 5-year average is 17 times. Now, it should not come as a surprise that these stocks are witnessing some correction after such a frenzied rally. Now, after all, who would not want to take some profits off the table? But for those who are victims of FOMO and jumped in at higher levels, their ship has definitely hit rough waters, at least for now.
That's super interesting, Hormaz. Thanks very much. But you know what? I guess life is always relative. So when you say 35 times, 40 times, it looks better than 90 times, right? Which is what many other stocks in the market are trading at. Just a quick follow-up. This ICICI note, which is still calling for a massive downside on these stocks. So how recent is it, or is it an older?
It came on the 16th of August. Yes.
Oh, okay, so this is the updated note.
The gap between the price targets and the actual price, should we call it what, Strait of Hormuz?
Well, if you are a bull, you would say that they raised their price target on Mazagon Dock. Actually, they had a 900 rupee price target. Now they have raised it to 1165.
How generous!
Some cushion there, yes. Some bits of cushion at least for sure.
Guys, we have Deepak Shenoy with us.
Yeah.
Who's Deepak? Hi, good afternoon. And Deepak is someone who's actually put out. He did a tweet thread on Mazagon. And this is today, so well, it's a good day to have you with us, Deepak. You want to take our viewers who've not looked at your thread? You sort of go in a chronological order, looking at all the times when they put out notes and where price was and what it after that.
And I look at this. Okay, I started off a long time back because SBI would every time come in a press conference and say the worst was behind us. And then the next quarter, they would announce really bad results and then again say the worst is behind us, and kept doing this, right? So I chronicled this over like 10 years. And then when they stopped saying it is when the market kind of allowed them to rise, or the worst was actually behind them. But what happened in this particular case was somebody forwarded this, and we own Mazagon Dock. So I had recently cut down roughly 50% of my position because it had gotten too big. But what had happened then was somebody sent me this, this analysis. And then I just took a look at what the same house had said in the past. And it turned out they've been bearish since the price was, I think, 600 rupees. So it's now from 5,000, it's fallen to 4,300. So from 600 rupees in 2022, they've been bearish all the way till now, and the price has gone up considerably since then. So like Hormus said, the price target has also doubled. I mean, in a way, if it was 600, now the price target on the downside is 1,500. The company's done fairly well. I mean, it's a company that actually has negative working capital. So in that context, does not have to pay any interest on what is effectively a government service business, where the problem usually happens to be that their cash flows won't be as good. But relatively speaking, they're in better financial shape. But even then, I mean, this is not so much a fundamental analysis here, but talking about price targets, if you give price targets, the market will hold you to it. We don't give price targets. We don't know when we buy a stock how much it will go. I have no idea. So, but if I told you that this price will go to 2,000, you would be rightly, in your right to say, Deepak, it's been 4 years since you've had 2,000. The price is still not even half from that price on the upside. So if you give me a price on the downside, at some point people will have to hold you to it, right? So
take that point. Fair point there, Deepak, and an interesting one at that as well. But speaking about prices, one of them which is now seeing a big correction is Ola Electric. Over the last 7 or 8 sessions, we saw the stock, keep moving higher. Today as well, opened fairly higher, almost 7 or 8% at one point in time. It doubled from its listing price, or rather issue price, in just about 8 sessions. Not a lot of free float available. But now look at it, it's down 15% from the highs. Do you think it's turned, or is it just one of those days? I mean, where do you stand on Ola Electric?
It's interesting because they did some kind of an announcement thing recently where they talked about the actual large wheel bikes. The current wheel bikes are really small wheels, so they don't work well in places where the roads are not as good. So the large format wheel bikes and their other stuff in their battery cells and all that are quite interesting. I think that way the story has to play out. So there's a lot more that needs to come. These things need to get to market. We need to see how they actually are received all over India. From a fundamental perspective, I think we'll have to wait at least till one result to see how their financials seem to be performing. They have some back issues with battery, and the segmental results have only recently been demonstrated in their presentation. But right now, the stock is going to be flying more on the basis of the lack of float than anything else. And after a month, the anchor investors of the IPO will get to sell. So there'll be some float that comes in. After 6 months, the pre-IPO investors, which is a lot of the VC funds and so on, who may not actually have a mandate to continue to hold public companies, they may have to come to sell to the market. So there may be some selling pressure, and that float will build up. And that's when you'll actually see the real value as it's discovered by the company. I feel nice announcements and all that. I'd like to see this translate into something bigger. There are also issues with related party transactions, which I think over time we'll have to kind of resolve as they go by. There are other companies within this group that either partake of or benefit from services provided by and products of Ola Electric. So I think once you have a better handle on that, that's when you should consider it. For me, it's too early. I think a lot of investors have said, let's go in anyways. And I wouldn't treat too much into a 15% fall on the 4th day after it's listed. This is like babies with sugar. They can go any direction they want.
Okay, that's an interesting analogy. So basically, when you're not rushing to buy Ola right now, you're going to wait to see more evidence of sustained profitability and growth. I get that. Just to complete the point on the others, Mazgaon, the one that you own, and that entire group of stocks, the PSU defense plays, I think the more difficult thing is your holding. So the question is, I have a two-part question. First of all, whether this price fall right now, we're talking 25-30% down after a stupendous increase, right? Whether this is, unnerving you at all. At what price do you think you will start booking profits if you've had a thought around it? And secondly, Deepak, the issue with a lot of people is those who miss the bus or who've just been watching in awe, standing by the wayside. A lot of those will be wondering whether this 30%, 40, 50% drop, whether this is an entry point. It could be a trap as well. We don't know. What do you think is the case?
That's a good question. So in fact, what I would say here is that if you're dealing with a pure fundamental play, you would probably not be in this stock at all. So because at some point in time, your valuation would be like, oh, this is way too high for a PSU company in this space, which has never traditionally done well. But there have been some changes in defense. A lot more value has been given to Indian manufacturers of submarines and ships versus buying a lot of the stuff from outside. So, and a lot more of the replacements ships are being manufactured in India. So I think there is a bit of a quantum leap from the fundamentals of the past versus the fundamentals of today. But even then, valuations are a little high. They've run up, where I would say they're stretched. So you don't want to jump in to buy, and you have to give this stock at least 25-30% each time, because it's done a 25-30% fall, I think, just last year once. And if you were, phased by that, you would have felt like booking profits at that time as well. So you want to give this stock a little more leeway if you're a person who handles with both fundamentals and price action, and then take a call. And on the downside, on price action based investing, you'd actually want to lighten your stock if the stock corrects too much, because you can always pick it back up on the upside when it goes back up. If the story continues the way it is going right now, it's a pretty good story. I don't know how long it will continue, but I would say I would not advise people to just start jumping into the stock just because it's fallen close to 27 or 30%. I think you'll have to wait a little bit longer, see if the prices correct even more. I would personally give it a little more leeway. I can say this because I've gotten out of half my position, but I have a certain kind of drawdown in mind before I start booking further profits. But 30%, you have to give this stock.
Okay. All right. So wait for more clarity on this one as well. I guess that's the call, both on Ola and on Mazgon. Two big themes, two big stocks. Thanks very much. Slightly shorter conversation today, but a very important one. So thanks for joining in, Deepak, and you have a good rest of the day. On that note, we'll take a quick break, come back on the other side, and we'll have a panel of guests joining in from the sidelines of the Motilal Oswal Annual Global Investor Conference. So wait some interesting conversations lined up there.
Than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube.
Okay, welcome back. Gary Dugan is CEO at Global CIO Office, and Niket Shah is CIO at Motilal Oswal Mutual Fund. We're now actually going across to the Motilal Oswal India Conference, which is being held here in Mumbai. And both Gary and Niket are sitting down with my colleague Nimesh Shah, who's going to take us through some interesting conversation here. Nimesh, over to you.
Thanks, Mishan. Again, we're trying to just have an attempt of getting an FI perspective and a domestic perspective as well from the sidelines of the Motilal conference. Gary has been a veteran in the capital markets, over 40 years of experience across many large institutions like JP Morgan and Merrill Lynch. And Niket, of course, is now the CIO at Motilal Oswal. Gary, I'll start with you first. A very interesting feedback that I got from you that when you're advising clients to look at India markets, you said like global investors now have to look at India ex of emerging market. Do you think that's going to be a reality very soon, that a lot of global investors will ignore emerging markets but they'll still put money into India?
Well, absolutely. I mean, I think we felt even about 18 months ago that you couldn't just look at the emerging market block as a continuity. China is so different from India. India is so different from Indonesia. But the one thing we were most confident about was the Indian market. So we were extracting India out of the complex and saying we'll make a big long-term commitment to India, and the emerging markets will just pick them off as we see a tactical opportunity.
Sure. Gary, you've been advising close to $2 billion of advisory money for large family offices and ultra HNIs globally. What's the initial feedback when they look to invest into India? Are they now getting warmed up that this is a structural story for next 5 to 10 years and has to be invested in India now?
Absolutely. I mean, I think if you look around the world these days, you really struggle to find consistent quality growth. We can go into a sector called tech, but of course then that goes to sky-high valuations and people start to run away. I think, India almost stands uniquely at the moment as a country that can deliver to what's promised. A consistency of a political environment for the last couple of decades, it feels, but it's actually the last 10 years. But it's that consistency of the future. And I think when you can see compound growth rates of profits of 15% for the next 5 years, that stands way above anything else delivered by the world in a serious market.
Is that a reason why global investors has to look at India now? Because it's just in a sweet spot. Macro-wise, we've done well. And earnings are getting compounded every 2 years or every 3 years. So is that something that global investors will have to take a note of and look to invest into India?
Yeah, I think in the past people have thought of India as a tactical market. Yeah. You're in it one day and then there's a bit of a crisis and you run away again. But I think the last 5 or 6 years has told you it's wrong to run away. So it's better to put a marker down and stay engaged in the market through its ups and downs rather than run away and find that you've got to go buying it back at a higher level.
Sure. Niket, mutual funds has been a driving force for the markets to be at record highs, and we continue to see a lot of inflows into the mutual funds as well. You are now actively managing this as a CIO of Motilal Oswal. But I've seen your style. You've been a very concentrated player. Look to invest, take large bets, and act very fast. What is your sense on the markets currently? Is this a time for want to just be very quick in and out? And how are you approaching the markets now?
So Nimish, I think if you look at earnings growth in India, in this quarter, Nifty earnings growth has been about 4 to 5%, which is probably slowest in the last 16 quarters. Mid-cap earnings growth has been about 5 to 6%, again slowest in the last 16 quarters. And we have been slightly more cautious on the markets, being very, very selective. Our focus of this year is to do less mistakes, right? So when we started this year, we could clearly see, earnings growth kind of slowing down. And we want to ensure that we don't do, significant mistakes this year. If you don't do mistakes this year, I think you will end up in a very good outcome at the end of the year. So from a 25, 26 stock portfolio, we're now actually down to about 16, 17 stocks. We're trying to make the portfolio more and more sharper by the day to ensure that, there's no mistake. So that's broadly, I think, what we have been up to.
When you're saying to avoid mistakes would also mean that you're in the right sectors, right? And I guess you've been one of the contra guys to aggressively look at a few sectors like IT and telecom. Broadly, if you can explain your thesis on why you're bullish on IT first, and I'll ask you a bit on telecom as well.
Yeah, so I think, IT hasn't done well in the last 3 years, right? I mean, some of our IT holdings within the mid-cap and the small-cap space have done extremely well. But overall, from an industry standpoint, I think it has gone through some challenges in the last 2 years. We believe post-US election, some of those challenges are likely to go out the pipeline of the IT in terms of the funnel or the deal pipeline that most of the corporates have been talking about is very, very healthy. So that continues to remain healthy. I think most of the corporates or enterprise in US or Europe are waiting for some clarity on US elections to get over, and that the spending will, I think, in next year should come back in a meaningful fashion.
Sure. A word on telecom as well, because I understand you all were very aggressive in the Vodafone Idea FPO as well. But generally, from a telecom point of view, do you think the repair work has started, the tariffs are going to only go up, and it's a structural consumption story now?
Yeah, so I think, in initial part of the year, we did highlight that telecom looks like the sector of the year. And the key thesis was that India has actually seen no major ARPU increases if you take a 10-year back track record, right? So our view was that every year from year on, India needs to take a tariff hike, because from the second half of the next year, most of these telcos have to start paying to government for the spectrum that they had bought 10 years back. And for me to pay, and for some of these enterprises to go and pay to the government, you need earnings, right? And there is no way you can get earnings without a tariff hike. So I think we will see a tariff hike even next year and in the following year. So we might see a tariff hike every year-on-year basis, which essentially means a very strong growth for the sector for the next 2 to 3 years.
Niket, I'll come to you. You spoke about avoiding mistakes, but Gary, if I want to ask you, what are the key risks, or what are the few things that you'll be focusing very closely in terms of maybe potential accidents which can come either from the global market or from an India point of view?
Yeah, I think the thing that India would worry about is a significant increase in US interest rates. Now, today we're talking about when the Fed's going to be cutting. But you just feel in the background that maybe inflation hasn't been completely suppressed. And if we were to see further geopolitical problems, for example, in the Middle East, with higher oil prices, we could be talking about a Fed that just stops cutting interest rates. That can put pressure on emerging market currencies, and it makes everyone feel like risk off. So that's the one thing that we're watching for at the moment.
What about geopolitical risk? Because that's been one of the other reasons why a lot of investors are a bit worried as well. And we've seen a lot of geopolitical risk across the world, right? Whether it's in the Middle East or a lot of other countries as well. How much is the geopolitical risk, according to you, for emerging markets as well as for India?
I think it's still serious. I mean, we've still got a war in Europe that people have kind of forgotten about. You've still got the challenges in the Middle East. The good news is that maybe those negotiations have taken a turn for the positive over recent days, but you can never totally believe in it. But it is still something that could be a negative that all of a sudden has people taking money out of markets and a quick downdraft of 10% off equities.
Sure. Niket, the other sector where you've been very bullish on is the platform businesses. You all were the first to invest in Zomato at 50 rupees, if I remember, and now it's almost 5x for you. And even the Motilal Oswal private equity owns a large chunk of Swiggy. What's the story there, and how big could be this Blinkit story and the earnings potential for these platform businesses?
So I think, the reason why we like this business, obviously food delivery becomes a cash cow over the longer term. The real excitement is quick commerce business. In our opinion, for the next 3 to 4 years, you should see at least 125 to 150% kind of a top line or a GMV growth for some of these companies. which is quite staggering, right? And this kind of model is only, at scale is likely to happen in India because of the way our supply chains are there, the way our auto penetration is there, and we all have, a budget that we run on a monthly basis. So we do monthly pantry filling on a weekly basis, right? So that I think is quite, I would say unique to what Indian styles are. And I think these kind of business models are just started, just scratching the surface. What is actually surprising to us is that the tier 2 markets, where in some of the quick commerce, the tier 2 markets unit economics are much better than tier 1 markets. The adoption of tier 2 markets for quick commerce is much faster than tier 1 markets. So that has actually been a bit of a surprise for us. And we believe the runways is likely to stay here for the next 4 to 5 years. So we just scratched the surface in our opinion.
Sure. But in that case, Niket, what about, the EV market in India? Again, that's a growing market. You saw what happened to Ola after listing, doubled in just 7 days. What's your take on the entire EV space and overall on the autos as well?
So I think EV penetration has to move up in India, but I think both of them will coincide, whether it's ICE and EV both together. But within EV, I think we have very clear understanding that whether it's 4-wheeler, 2-wheeler, there is no major profit pool to be made, at least over the next 2 to 3 years. The profit pool is actually in the 3-wheeler LCV side, because the vehicle tends to run for a longer duration of time in the same day, and hence it makes unit economic sense if you take a 5 to 7 year view for that vehicle. So, the LCV market, the tractor market, and the 3-wheeler market is where we continue to like within the EV space.
Okay. Gary, if I want to ask you, we spoke about some themes like food delivery, EV. You've seen so many global markets in the last many years. What stands out for you in terms of the big emerging theme as far as India is concerned?
Well, I think there's just so many, but the one I pick on it is the consumer sector and hospitality. I mean, I've been in and out of India on many occasions for the last 30 years and just seen this transformation. But it's basically the enabling of people who are getting incomes to spend it on a broader spectrum of services and things. The shopping experience, which goes from shops to malls, the hotel that goes from 2-star up to 5-star. All these things significantly increase the potential of the economy to grow much faster than it has done in the past, as has been evidenced over recent years.
Sure. Gary, I understand you were surprised with the kind of transformation we've seen in the digital payment in India as well, right? I guess missed out on digital payments on some occasions. Has that been a big transformation for you?
Absolutely, because it's something that wasn't even occurring in the West. Yeah. I mean, I did a quick trip to Goa and I couldn't pay for my taxi unless I had the right app, and I couldn't go to the beach bar and buy a drink unless I could tap my phone. I had none of these applications, and I just could not believe that transformation from, remember the dark days of demonetization, through to absolutely no need for money, which is incredible.
Right. Niket, before I let you go, last thing, the one thing that I've learned from you, talking to you on many occasions, this market also needs to be an aggressive seller at one point in time, and you've demonstrated that in some of your holdings. Tell us, what's the right way to look to sell as well, just from an investor point of view?
So I think for us, we strongly believe that buying is extremely overrated in India and selling is highly underrated.
Yes.
Everyone only talks about buying in India, right? What do you want to buy next? We do focus a lot on selling. We do focus a lot on what not to buy. And for us, that's quite important for us because that reduces the mistakes, right? The second thing, how we do take a decision on how do we sell, right? I think for us, earnings upgrade and earnings downgrade cycle is extremely important. We want to get into a cycle where we believe, for example, we believe IT is just beginning of the earnings upgrade cycle. From now, for the next 12 to 18 months, you will see earnings upgrade on a quarter-on-quarter basis. And that's something which really entices us to go overweight on a sector. And vice versa, it happens on the underweight side. The second thing is, if you know that earnings are likely to get downgraded, automatically you find that valuations have been quite expensive. No sector in India does very well for 5-10 year period, right? And no sectors are extremely good for the 5 to 10 year period. So you have to manage these cycles. You can't keep portfolio static. If you keep portfolio static, then I think you will tend to underperform in the year.
Niket, thank you very much for joining us, and same with Gary. Thank you very much for joining us. Back to you, studio anchors.
All right, thanks very much. Very interesting sort of ideas there. IT, perhaps something to look at. And Nimesh, do convey to Gary that now it's the reverse, right? Because when we travel to Europe, when we travel overseas, we feel it's so primitive. Why do we have to take out cash and pay through a card? We want to tap our mobiles and take our mobiles and pay everywhere, right? That's the India payments revolution. So please pass on our message. And we'll come back to you for the chatter in just a bit, Nimesh. Have to take a break right now. And then, of course, as always, all the buzz from dealing rooms with Nimesh, along with some of the final trading calls for the day as well. Back in a moment.
CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
So good to be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Welcome back. You are watching us here on Closing Bell. The Nifty hovering around that 24,700 mark. Importantly, Godfrey Phillips, that's the stock that's taking your breath away literally and figuratively. It's up 13% right now, 14%. In fact, this week itself, the last two trading sessions, it's up 30%. And that's not just a stray move. In fact, this month itself, it's seen a rally of 40%. And this year, we're just 8 months into this year, the stock has rallied a whopping 180%. So that's the kind of move that we've seen on Godfrey Phillips. Just keep an eye out on that. Volumes over the last 7 quarters, the business volumes, that is the cigarette volumes, have outpaced the industry. At the same time, you know, they have decided to go ahead and sell their retail business as well. So some bit of value unlocking out there taking place as well. So we'll keep an eye out on this stock as it moves on. But good time to get in T Street Chatter, where Nimesh gets us up to speed with what all the dealers are saying. But more importantly, Nimesh, you've been spending 2 days at the conference as well. So you've been speaking to a lot of people. As they say, what's the khabar?
Well, khabar, I'll come to the khabar later, Mangalam, because I've been even yesterday I shared some chatter from here on some potential blocks. from a market point of view, another strong day. So it looks like, the momentum is clearly with the bulls, and that's backed by FI buying as well. What is interesting today is the rally is led by large cap names as well as the financial stocks. From a flow perspective, as I said, this is backed by FI buying. Last week there was some large selling which potentially has got absorbed now, and there is a DI support which helps the market to go higher. What is surprising today is while the Nifty Bank is higher, there is selling in some select bank stocks, is what I understand from a flow perspective, largely in the private bank stocks. So, having said that, in general, the momentum seems to be with the bulls, and there is a lot of momentum in the broader market stocks as well. You rightly explained, Godfrey Phillip. It's been a big move in the last 1 week itself. So, there are so much of momentum in this kind of broader market stocks that it just takes the breath away. But clearly, from a flow perspective, the buying seems to be clearly in the large cap names, barring some private bank stock where there's some bit of selling, and the momentum in the mid cap and small cap is largely backed by the domestic buying.
Stocks now, Nimesh, what are you picking up? Lots of blocks?
Well, so, as Mangalam pointed out, cover blocks and blocks and blocks. So, at least, I'll highlight 3 stocks where potentially some large blocks can come. First one is Dixon Technologies. Stock is at a record high, but now I understand, there could be some offer coming in Dixon Technologies in the near future. So, that's one stock to watch out for. The other big stock to watch would be Ambuja Cements. Again, there is a indication that it could be a large block in Ambuja Cements also coming very soon. And the most interesting name to me was Pratap Snacks. Been a underperformer, so to speak, in that consumption basket. But again, there could be a potential very large block, nearly 10% equity can change hands in Pratap Snacks going forward. So that's a third name. But in general, the sense, Prashant, is that there is a lot of offers in various companies, and blocks are pretty much on a daily basis. So that's a few important ones. The second name is Indus Tower. After some bit of consolidation, looks like some interest is back in Indus Tower. So there is aggressive buying from larger FI desk today in Indus Tower. And interestingly, this was one management which was well attended at the Moti conference as well yesterday. So there is an interest back in Indus Tower at these levels. The third stock is Samudra Motherson. Surprisingly, that's been a relatively underperformer post-quarter one earnings, and there is selling pressure from larger FIs. So it looks like some long-only funds are aggressive sellers in Samudra Motherson of late, and that's been the case today as well. And the last stock is Kirloskar Oil. Again, a surprising name, so to speak, because I've generally not heard this name from FI desk, but there is buying interest in Kirloskar Oil in today's market, and there are buy flows, so expect high delivery volumes, and that's backed by FI buying.
Okay, all right, got it. So lots of buzz as always. Nimesh, thanks very much for all the action, dealing rooms and the conference itself. Thanks for all the inputs. By the way, the market's holding up quite nice and steady, 125 points higher. Plenty of names on the upside today. And if you're talking financials, look at something like an RBL Bank, almost 5% up on RBL Bank, Ujjivan Small Finance Bank. So the tier 2, tier 3 financials are also having a fantastic run. PFC right now, 3.5% higher. And some of the PSUs, which were very subdued in the morning, they're turning around. Bank of Baroda would be a case in point. So some of the PSU banks, which weren't having such a great session like some of the other private financials, better afternoon for them right now. So let's quickly head back to Mitesh for some final ideas. Mitesh, has been a strong market. What are your final recommendations?
No, it's been a good market. LTTS is on the BTSC list. Keep a stop at 53.35. Look for 54.40 as the target. And the other one is a BTSC on Nestle, which after a correction seems to be trying to move up again. So keep a stop at 2500 or just below it, and look for targets of 25.40 for tomorrow.
Okay, all right. Thanks very much. We'll take a quick break on that note, and Mitesh, we'll see you again with the markets tomorrow. Come back after the break, and we'll get you the roundup of today's trading action and some more fundamental ideas as well.
Again, what her appearance is just a preview of coming attractions of Thursday night. You could feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future and she embodies it.
Oh, I think it's great. You know, people really get excited when something happens they didn't expect, and it makes them happy. So we're a happy group.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the
Welcome back. Well, it's been a good session. That's what we've been pointing out at every level, large caps, mid caps included. And the Nifty is now just about 1.5% again from the all-time high. The Bank Nifty obviously has a greater distance to travel, about 5% away from the all-time high. Jay Bala of Cash the Chaos is with us. Jay, thanks for joining in. So such a wobble in global markets, and then it's back to the bulls charging ahead. What have you made of the price action over the last couple of days, and where do we stand right now from a global market standpoint, and of course the Nifty itself?
Yeah, thanks, Sylvie. Good to be here. After a 4-week break, for me, the markets haven't developed as a reversal signature. It's still sporting a corrective look. So it does look like the markets are headed higher, barring some abrupt reversal in the next 3 sessions. But the markets continuing to look bullish in the global markets as well as the Nifty. And but there are some jarring, data points which are not agreeing with the bullish outlook, which is the yen is continuing to likely to strengthen somewhere close to 127 in the medium term and 140 in the near term. So leave that aside, but we take each market on its own merit. And it does look like the drop, July-August drop, is a corrective, corrective down move, and further higher highs are due for the Indian markets as well as the global markets.
Okay, so you're still, expecting those kind of levels in the yen. That's interesting. Okay, let's see how that unfolds. But just within the Indian market, like I was just pointing out, that banks are still playing catch up. They're still not in step with the Nifty. Do you see that changing in terms of leadership right now in the market? What looks the most bullish to you?
Yeah, the Bank Nifty is a laggard to the Nifty, no doubt about it. And 51,950 on the banking index is an important resistance. And if that were to get taken out, we are looking at something like 54,000 to 55,000, the long-term resistance, which I've been pointing out for several months now. But the first stumbling block is 51,950. More than what is looking strong at this point, Reliance, again, another data point which is not agreeing with the bullish view. It's come down in 5 steps. And when a market moves down in 5 steps, it's normally part of a larger move. So we don't want to see Reliance gets stopped at just under 3,100 or 3085. Likewise, we don't want to see the auto index drop below 24,400, much below 24,400. So these are the chinks in the bull's armor at the moment. But what is likely to be strong, I think it's FMCG and the pharma names which are likely to be strong, in my opinion. So that's what I'm keeping my focus.
Strong on FMCG and pharma. Just keep an eye on the markets, though. The Nifty Bank is fairly off the highs, almost 150 points from the time we started the show. The Nifty too, closing in on that 24,700 mark. It was comfortably above that mark when we started the show. So, the point is that at higher levels, maybe some bit of supply is seeping in our markets, specifically on the Nifty Bank itself, though we've seen some reduction from the highs on names like ICICI Bank, on, the likes of HDFC Bank, and the other index heavyweight, which is the Reliance that Jay was just speaking about. There you have it, ICICI Bank all but in the red right now. HDFC Bank too is hovering around the 50-day moving average of 1635 itself. Reliance currently off highs. Jay, you said that FMCG is a pack that you like. Is there any particular stock which you believe can outperform from here?
Yeah, I like Dabur at current levels, Mangalam. The stocks move from the post-election results low is looking like an incomplete move. So it needs one more high sequence at least. So I'm anticipating a level of somewhere close to 680 to 690. A stop of about 595 will make sense. And also from a pharma space, I like IOL chemicals and pharma. This has been a laggard since it hit 900. It's dropped somewhere close to 379 recently. This was my investment pick in 2018. It went from 110 to 898. And now it's looking like it's starting the next leg of the medium to long-term move. I have an objective close to about 530 for IOL chemicals and a stop loss of about 379. But if it were to take out 535, it will be a start of a medium to long-term move that will take out the all-time high at 898. So watch out for it. 535 is a very important resistance. The current short-term objective is 530. So, if it were to exceed 535, hold on for the medium to long-term. And the third pick I have is REC. REC, again, looking very similar to Dabur. Incomplete move from the post-election low. The stop loss is about 560 and price objective close to 660.
Markets actually coming off a little bit, right? I mean, we're up 100 points, but from the highs of 24,734, this is now about a 60-odd point drop-off, which has happened. And I think a lot of it has come through. Actually, we pulled back very sharply since 320. So we were at about 24,705 at 320, and we're at about 24,676. So last 10 minutes has been sharp. Jay, a quick word on Mazgaon. From it's come off, right? Sharply. Where does it go from here?
Yeah, this was my pick in early June and July, and the stock still got higher highs to work with, but it's stretched in the short term, and it was stretched in the short term, and that's the undoing that's happening. The supports comes at about 3750. Probably from there, I'm anticipating a rally to resume somewhere close to 6,000. So still bullish on it, but nothing to act at current levels.
Okay. All right. Thanks very much, Jay, for joining in today. We just have about 30 seconds to go before the day closes out. It's been a good day, though the market is not closing at the highest point. There's been some profit taking in the last 10-15 minutes. About a 100-point run for what it's worth, a 0.5% gain on the Nifty. If we talk about the winners, it's actually the financials, banks and non-banks. Very, very strong day for the entire financials complex. Look at the life insurance plays. SBI Life 5%, HDFC Life 3.5%. Then you have something like a Bajaj Finserv 3.5%. So the first three stocks are the non-banks on the Nifty. IndusInd Bank is at a good run. You have other names like Shriram Finance as well. Bajaj Finance are extremely strong on financials. Beyond financials, Hero Motors, Sun Pharma, Nestle and Dr. Reddy's. These were some of the key gainers. On the flip side, Bharti Airtel has lost some ground today, 1.5% down. ONGC is on the losing side. And Adani Enterprises is the third weakest stock on the Nifty. On the mid-cap screen as well, Prashant, there have been big gainers today, right? The index itself has closed in a better fashion than the Nifty, with a gain of about 0.8% and lots of high flyers here.
Oh yeah, I mean, the Angels and the Motilal Oswal, IIFL Securities, all doing well. These are all brokers. So on your screen now, Anand Rathi, of course, is wealth management. IIFL Securities and Motilal Oswal are the other two. But Godfrey Phillips was a big gainer today. Out of the blue, big move. KEI Industries, some of these cable and wire companies. Balrampur Chini was up sharply. All Cargo, we've been highlighting, that was up and about. There was Cyient, the IT company, which did well. JSW Energy was up about 4% or so. So yeah, I mean, a fair bit which came into its own. On the downside, Ola and FirstCry, both recent listings. Of course, Ola has had outsized gains since listing, nearly doubled. That pulled back, and FirstCry was also a bit lower in trade. So those are recent listings. Well, I think we'll wrap up the market action and closing bell here for now. Thanks very much for staying with us. But we'll just take a quick commercial break here, because Surabhi and I will see you on the other side. We'll take you through markets forward. Stay with us.
As our 47th President of the United States. Because, my friends, when a barrier falls for one of us, it falls. It falls and clears the way for all of us.
Bengal is not a place safe for women. Bengal has failed its women, not Bengal society. The present government of Bengal has failed its women folk. Bengal should again be brought back to its pristine glory, where women had their own respectable place in society. That has been lost. They are scared. They are scared of gundas. This has been created by a government which is insensitive to this issue. We take pride in the fact, Yatra Naryastu Pujanti, Ramante Tatra Devata. Where women are honored, there the gods rejoice. But unfortunately, in Bengal, the government has ensured that women have no protection. That is what is reflected in the gruesome tragedy that has taken place in RGKR. That should not be repeated again. I respect the sentiments of the mothers. Certainly, the law will take its course. See, my communication with the Home Minister and the Union Ministers, I do not want to discuss the details in public. I'll do my duty. Regarding RGKR, whatever steps are to be taken will be taken. We have the observation of the High Court about absolute failure of the state machinery, which is a very, very serious observation. I am apprised of that. As governor, I will do my duty and fulfill my promise to the people of Bengal.
What kind of thing we accumulated at sub-100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus. And also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think
Dalal Street maintains its positive momentum. The Nifty reclaims 24,700. HDFC Bank and Reliance bat for the bulls. Broader markets outperformed the blue chips. The Nifty IT hits a record high.
Shipbuilding stocks are the top laggards today. Sector sees massive sell-off. Mazgaon Dock was the top loser with a 9% cut. Garden Reach Shipbuilders and Cochin Shipyard were also down between 4 to 5%.
Life insurance stocks like HDFC Life, ICICI Pru Life and Max Life rally between 3 and 4% as the market finds a combination of growth and valuation comfort in the space. Capital market plays like Angel One, Motilal Oswal, IIFL Securities also stage smart gains.
Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you gear up for the next trading session. I'm Prashant, with me, my colleague Surabhi Upadhyay. Surabhi, hi.
Hi, Prashant. Well, a good day, a green day, not a close at the highs, but then I think plenty of stock buying action and the momentum is back.
Yeah, no, momentum is back. I think one could have said that perhaps things could have been a little better, but I think we'll live with what we got. So towards the end, and I'll just sort of quickly summarize the day's action. Towards the end of the day, starting at about 3:20 or so, the market sold off a little bit more. So it was looking like we were cruising above the 24,700 level on the Nifty. 24,735 or so was the high. And then, of course, the close was a little under that. I think the adjusted close will come up on your screen. And we left off just under the 24,700 levels. The important thing, of course, for the market is going to be to stay above this upper end of the gap area, which is 24,686, which it has managed to do so as of today's close. Just a few other things before we sort of go any further. You had the Nifty Bank, which has also now managed to creep above, and I'm using the word creep because it's not a decisive close above the 20-day moving average, but it is a close above it nevertheless. So 57.61 is the 20-day, and we've left off at about 50,800 levels. More repair needed, more work needed for Bank Nifty to have a line of sight to its previous all-time highs. The Nifty, I mean, I think one can start to make the case that maybe that comes into view. IT and Pharma are the two indices, the other two indices which did very well, up between 0.6 and 0.8%. Broader markets, I mean, they did well yesterday when the Nifty fizzled out. They did well today as well. Mid-cap and small-cap indices, and of course, the broader market as vibrant as ever. Surabhi.
Absolutely. I mean, by the end of it, it was really the outperformance coming in from the mid-cap index that stood out. In terms of themes, really financials was the hottest space today, whether it's large caps or mid caps, whichever way you look at it. That was one solid part of the market. And that showed up a lot in the mid-cap universe as well, in the mid-cap arena. So yes, the Nifty Bank was one of the lead gainers, but if you look at it, I mean, there were big movers, and we'll talk more about this as we go forward. Life insurance companies, capital market plays, some of the NBFCs, that's where the buying action really was centered. So names like Poonawalla Finance, RBL Bank and all, and that's basically a very, very vibrant and lively part of the market, financials as a whole. In fact, by the end of it, even the PSU banks decided to join the party because the party was looking so ferocious and fierce that even the PSU bank names turned around. Just want to mention sugar as well, because by the end of the day's action, there was some buying that was quite visible in sugar stocks. So perhaps there's some sense of policy action, maybe something on ethanol pricing that the market is sensing, because there is a fair amount of momentum over there. Largely speaking, mid-caps look good. The advance decline ratio was still positive, and the breadth ended on a pretty upbeat note. Well, we have a lot of ground to cover on the show, so let's tell you what today's lineup is looking like. We'll start off first with all the movers and shakers. Hormaz will give us more stock-specific inputs on the action of the day. Then, of course, we are looking at a lot of sectors in focus. We are looking at the oil and gas space, in specific the oil marketing companies. Also, shipbuilders are in focus. A lot of profit taking in some of those stocks today. Wire and cable companies were also in focus on the back of some interesting research notes. So we'll tell you more about all of these buzzing segments in just a bit. And finally, we'll cap it off with all the key events to watch out tomorrow. So let's kickstart the action with the movers and shakers of the day. Hormaz, the color was green once again.
Green indeed, and certain pockets of the market, of course, were in the red, but predominantly green, and that's what the bulls love to see. But one particular sector that was greener than the green was insurance, and that sprung up today with SBI Life, HDFC Life, all of them, the Nifty constituents, seeing some healthy gains in today's session, 5.5% higher for SBI Life, and most of the other constituents also seeing gains of anywhere between 2.5% to 3.5%. Defense as a space, as I mentioned, was not having a good day in today's session. Shipbuilders in particular, Masga Dock ending 9% lower, Garden Reach 8% lower. They've almost corrected 30-40% now from their highs. HAL and Bharat Dynamics also seeing some bit of profit booking in today's session. A sector that did well though were the power companies, and Torrent Power was leading the charge there in today's session, 7.5% higher there. REC PFC had a good day. GMR Power was locked in a 5% circuit. Tata Power also ending at the highest point of the day, so that had a good day. And some high-flying stocks from yesterday came off a little in today's session. First Source has been flying all through the last month now. It's up 40%. Saw a bit of profit booking today, 5% lower. CAMS has also had a good run. Some tapering off in today's session. Kaplan Point was up 14% yesterday, ending 3.5% lower. NCC and CE Infosystems also seeing some bit of profit booking. And lastly, stocks that did well on the back of volumes today. All Cargo ending after a business update 9.5% higher. Vijaya Diagnostics had a good day. Web of Global Godfrey Phillips was up 11% yesterday, another 11% added today, and Poonawalla FinCorp 2 ending at the highest point of the day, 8% higher on very strong volumes.
All right, thanks very much for that. Always a comprehensive wrap out of things with Hormuz as far as the day's action is concerned. Jay Bala is with us of cashthechaos.com. Sudeep Bandyopadhyay is also with us. Group Chairman is Indie Trade Capital. Gentlemen, good afternoon. Good to have both of you here. Jay, for the Nifty, does a line of sight to the to previous highs open up? 25,078 was that number. Not very far, but what's your sense?
Yeah, the nearest resistance for Nifty is about 24,960, but the drop in August, it doesn't look complete. It makes sense if it were to drop one more time below the 23,800 level and then come back to the highs. It's not a requirement, but so far the price structure from the August high to the August low is looking corrective. Even for the global markets, it should have turned like a reversal signature, but it hasn't. So that's a positive surprise in the markets. So we might see heightened volatility, but it does look like the market's still not ready to go down.
Still not ready to go down. Something is unfinished, but I mean, yeah, it doesn't. I don't know. Would you put odds to it, to that view, that something needs to, it needs to finish before we start a fresh move higher, Jay?
Yeah, that'll be a very short-term move. As I know, the market will sport a right look if it were to go down one more time below 23,900, 23,800. Then that will, be a corrective look. But we just want to see the all-time highs taken out for the S&P 500 and the yen. Yen strengthening is a big story, and we have a lot of ground to cover for the yen. I'm anticipating something like 127 in the medium term. Medium term is about 6 to 9 months, and in the long term, I'm anticipating about 110 for the yen. So there's a lot of volatility in the short term and the medium term will come through. But if you wear a trader's hat, you're bound to make more money than if you wear an investor's hat.
Okay, all right. So the question is, you have to wear it right and wear it with the proper fit, right? If it's a trader hat you're wearing. Just stay on. We have some questions for you in terms of individual stocks and sectors as well. So let's put the spotlight on the oil and gas space, in specific oil marketing companies. A lot of these stocks were up and about. on the back of bullish commentary coming in from brokerages. And of course, there was a tailwind of falling oil prices as well. Sonal is joining in with the details. Sonal, what are these notes saying?
Well, they're talking about reversal of the underperformance that we've seen in Q1 with respect to their fundamentals and stock price as well. Let's start with Citi, which has a buy rating on BPCL with a target price of 380. They say the three oil marketing companies, they have outperformed the broader markets by 17 to 37%. But most of this outperformance actually came in the first 2-3 months of this calendar year. And in the last 6 months, there has been an underperformance for various reasons. We've seen GRMs falling. We've spoken about marketing margins going lower because of fuel price cuts. So this was the reason for the underperformance, but they think that going forward we could see a reversal of this underperformance because fundamentals are turning in positive and in favor of these companies. They have opened a positive catalyst watch on BPCL and they continue to be very bullish on the stock. MK also has reiterated their positive stance on OMCs. They're comfortable with crude around that $80 per barrel mark because that would be positive both for their refining and their marketing segment. Q2 FY25 till date earnings, they have seen an improvement on a quarter-on-quarter basis in both the segments, and that is something which is making them very bullish. They value OMCs at 6.5 times September 25 EV to EBITDA. And they also talk about how Q3 will be good, and especially after the state elections, the fear of fuel price cuts could go away. That would provide some support to marketing margins as well. They reiterate their buy on BPCL and HPCL. They have an ad rating on IOC. While they have retained their target prices on HPCL and IOC, they've raised BPCL's target price by 10% for two reasons. One, they have increased the multiple on the stock. And second, they think the investments of the value of investments for BPCL is highest amongst the three. So that's why this target price increase.
All right, Sonal, thank you very much for that. So that's a nice look in as far as OMCs go. Sudeep, any thoughts on this SPAC or the sort of entire oil and gas space? What do you like?
Well, Prashant, I think the trick is the oil prices. Global oil prices have been hovering around 80, and that does definitely help the Indian OMCs because they are both GRM as well as marketing margins remain acceptable levels with oil, global oil remaining around $80 per Brent. So that's, I think, it's doing the trick. Of course, BPCL out of the three has a better investment profile and the value of investments are significantly better. So BPCL is definitely at a slightly better position. But I'm a little skeptical because the state elections are approaching us and there may be some fuel price cut and things like that. So I'll be a little cautious. Fundamentally, there is absolutely no problem, but the timing may not be right considering the state elections are around the corner and there is always a fear of fuel price cut around these times.
Okay. All right. Got that. Well, stay on, Sudeep. Some more questions in just a bit. Let's now focus on the shipbuilders SPAC, because a lot of these stocks saw very sharp cuts today between 4%, 5%, going all the way up to a 9%, as we can see on a Mazagon Dock shipbuilder. So what's going on here? Let's go across to Hormaz. He's been looking at an ICICI Securities note, which is actually not sounding very bullish or very optimistic on these stocks. Hormaz, fill us in.
You know, it was around the same time, around a month and a half ago, we reported about how these shipbuilding stocks have shot through the roof and how valuations have surged as well. Since then, they've been on a slightly sticky wicket, and today has been no different as well. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them seeing losses of anywhere between 7.5%, 9% as well in today's session. And it was the 5th of July when we spoke about this first up, and that was the day when both Mazagon Dock and Garden Reach had topped out for the time being, and Cochin Shipyard topped just a day later, which was on Monday, on the 8th of July. And since then, Mazagon Dock is down nearly 30%, Cochin Shipyard is down nearly 30%, and Garden Reach, which at one point of time had almost doubled en route to a record high in just a month, is also down almost 40% from those levels. Now, until then, it was a question about whether these companies would deliver in the June quarter. They did so to a certain extent. Margin expansions were seen in Mazagon Dock and in Cochin Shipyard. Garden Reach, though, struggled a little on the margin front, but revenue growth was healthy. But to summarize, you see the kind of frenzy that they saw before this correction. Mazagon Dock at one point was up 90% year to date. Cochin Shipyard had tripled in value. And even the fact that Garden Reach was also up 2.5 times. So it shows the kind of frenzy that we had. But not everybody has been bullish here. ICICI Securities came out with a note last week, which was on the 16th. And they said on Masgao Dock, they have a price target of 1160. The stock had made a high of close to 6,000. And even on Garden Reach, they have a price target of almost 515, where the high is around 3,000 rupees. They're saying that there will be execution issues that will bother Garden Reach when it comes to the order that it has received from Bangladesh because of the geopolitical issues. Same for Masgao Dock. They say margins will remain elevated there, but it expects that those margins will taper off once the recent contracts get executed. So it's been a frenzied move in these shipbuilders. It's not a surprise considering the moves that you've seen. You'd see a 30-40% correction. Even on the valuation front now, they're still expensive even after the correction. Cochin Shipyard still at 45 times. The 5-year average is 14 times. Garden Reach at 30 times. The 5-year average is 17 times. So even then, it's not a surprise, right, that there has been some profit booking after the move that you've seen. But for those who jumped in at higher levels, their ship has definitely hit rough seas for the time being.
All right, Hormuz, thank you very much. Rough seas indeed. Let's get some view in. And Sudeep, your thoughts here. You heard the valuation picture, the run-up, the pullbacks. What from here, according to you?
Well, Prashant, I've been talking about this for a very long time. Every time I've been interacting with you guys, and this question comes, I've been saying that, I've been proven wrong every time, but the valuation was absolutely unacceptable. So look, somewhere we were equating order wins with, valuation bump up. That's absolutely absurd. And these are long-term projects. To build a ship, it takes years. So, the moment there's an order win, if you bump up the share price, I think it's crazy. So it was a recipe for a significant correction, and that's what is happening. I think it's a good thing to happen because, more and more gullible investors were getting dragged into this momentum. So yes, these are good companies. They have a strong order book. They have a great future, but not at the valuation at which they were quoting. Let valuation correct quite a bit. I'm not sure whether the report suggests 1100 and all that, whether 1100 is the right price or 2000 is the right price, but definitely not 5000. I'm talking about Masgao Dock in this case. Similarly for all these stocks. So significant correction from here on also may be required for them to reach a level which is an acceptable valuation for recommending buy.
Okay, all right. Point taken. Their run-ups have been, 3x, 4x, 10x actually, 10x and beyond. So the pullbacks, of course, have been in the range of 25 to 35%. Now, wire and cable companies like Polycab, KEI Industries were all higher on the back of a positive brokerage note. UBS has initiated has initiated both these names with a buy rating, and they've got a very positive, constructive view on the sector as well. Upasana is here with a quick snapshot of what the view is. Upasana.
Well, that's correct. UBS has written a note on cables and wires segment. It has initiated a buy rating on KEI Industries with a target price of 6,150 and a buy rating on Polycab with a target price of 8,550 per share. It believes that the segment is poised to grow 2x the GDP growth in FY24 to FY30. And it expects that the current $8 billion segment is set to grow to $20 billion in FY30, and market share of the top 5 companies will certainly rise. It believes that the shifting in global supply chain will lift the export revenue from $2 billion in FY24 to as high as $5 billion in FY30. It also expects a revenue CAGR of 20% and EBITDA CAGR of 25% from FY24 to FY28 due to multiple triggers such as robust demand, operating leverage, growing market share, and robust export penetration of the companies. Now, coming to KEI Industries, the brokerage says that it is a consistent earnings compounder and only pure play on cables and wires. The company offers multiple triggers such as growth for cables and wires is set to sustain for a longer period of time, scope for market share gains in branded housing, wires and cables, and also export ramp up. Now, coming to Polycab, the brokerage says that it is a cyclical growth champion, beneficiary of a long-term electrification growth. It has a significant room to grow its total addressable revenue share, and FMEG consumer pull is the key for the company. It also expects better than expected domestic volume growth, market share gains and also export ramp up are some of the key near-term triggers, is what the brokerages highlighted. So all in all, we are seeing a positive note written by UBS on cables and wire companies.
All right. Well, thanks very much for that, Upasana. Before we take a quick break, we'll leave you with the market commentary that we received earlier in the day from Bernstein's Venugopal Gare.
The fundamental reality is that you're not really seeing any earnings growth acceleration. And more importantly, you're not even seeing earnings upgrades. The only difference is that we are still in a decent macro cycle. Earnings growth are decent, even if they are slower than what we actually saw in the previous 2 years. So what is essentially happening at this juncture is the broader macro strength, which I think is fairly visible for the next few years, is ensuring that the domestic flows sort of remains resilient. Let's say 15 years back, previous cycle, which is perhaps the first mean cycle that we saw, and this sort of investment community was also smaller and perhaps just starting to understand how to professionally look at equity markets, used to be very embarrassed to put 20x Ps or 25x Ps on stocks. That's a fundamental reality. We have tried doing that during that phase in the peak of the cycle, and we used to get slammed, both by investors who used to actually question us on the rationale of a high P such as 20-25x. Now, the difference with this time is that people are a bit more liberal. I don't feel embarrassed putting 100x P rate on stocks. Nobody questions me. People feel happy about it. And the same is the situation 50, 70, 80x P. So now we don't really need to keep very high earnings for the next 2 years.
Some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC-TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer.
Welcome back. You're with us here on Markets Forward. Let's get you a quick sampling of some of the top corporate opinion that we got on the programs through the course of the day. Lemon Tree was a company we spoke with. Stock, remember, is an underperformer after its earnings. And the management told us that occupancy and average room rates should improve in the second quarter. Q1 was a bit of a disappointment. They've guided for a better second half overall. They've said occupancy at the Mumbai Aurika Hotel, which is a large property for them, will pick up in H2 and stabilize at about 70%, and it should be at between 80 and 85% by next winter.
All right. The second on our list is the innerwear maker Rupa. The company saw good growth in demand for athleisure, thermal as well as women's wear. The management has guided for an EBITDA margin in the range of 10 to 11% and over 20% growth in exports following the Bangladesh crisis. The management says that they are getting some inquiries from organized players already who were earlier operating in Bangladesh. That's not all. The HOEC management says that they're expecting 1,000 crore rupee capex will help increase their volumes to 15,000 barrels in 2027-2028 from the current levels, which is less than 3,000 barrels. The firm also expects its EBITDA to come in the range of 1,500 to 2,000 crore rupees by FY28.
All right, and before we wrap up, let's get you some of the key market events to watch out for as we come back tomorrow. Sonal is standing by with that list. Sonal, over to you.
Thank you for that. Well, we've been speaking about how earnings season is over, but not for some of them. So Procter & Gamble Health reports numbers tomorrow, and a lot of AGMs as well. It was a long list, so just have pointed out some important ones. There's Metropolis, Ramco Systems, Heritage Fruits, Wonderla, Fine Organics, to name a few, which have their AGM tomorrow. For Indus Towers, the share buyback closes on 21st August, so watch out for that one. There's a new IPO, Orient Technologies, which opens tomorrow. It's a 215 crore issue. The IPO will open on August 21st and will close on 23rd August. In terms of global data, a lot of economic data that we are looking at. For UK, it's the public sector finances, the economic statistical release that will be there. For US, we'll have the EIA crude oil and gasoline updates, which will be very important for the crude oil market.
All right, Sonal, thank you very much for that. So that's what you need to watch out for as we return tomorrow. With that, it's a wrap on this edition of Markets Forward. Thank you very much for staying with us. We are back with more news and updates on the other side. Stay tuned.
With the number of instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints in the last financial year alone. Express and mail trains, which account for bulk of passenger transit in India, saw 47% rise in complaints over the quality and hygiene of food items served to the passengers, according to RTI response shared to CNBC-TV18. So what action has the railways taken so far? Well, 3 contracts have been cancelled and 68 show cause notices have been issued in the last 3 years alone. Let me put this in context. Even after facing nearly 13,000 complaints over food quality served to passengers in the last 3 years, only 3 contracts have been cancelled. Quality concerns over food served in train is not an issue. In 2017, a CAG audit report revealed that the caterers for Indian Railways have consistently failed to protect the food quality served to passengers from flies, insects, dust, rats and cockroaches. A parliamentary panel report tabled this year said that the lapses identified in the current system pose a challenge not only to the passengers' experience but also to the overall reputation of the Indian Railways. We asked IRCTC to respond over the rising complaints over the food quality, and they have not done so yet.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these 3 put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex gains nearly 400 points, the Nifty up 125 after a steady session on Dalal Street. Mid-caps outperformed the blue chips today. Zomato shareholding worth 5,400 crore rupees change hands after a block deal. Sources say Alibaba subsidiary Antfin Singapore is likely to have sold 2% stake in the company. Murugappa Group's plans to split the business into 3 equitable parts hits a hurdle. Sources say stark differences have emerged among 2 of the 3 family factions. The group has a total of 30 companies, of which 10 are listed. The government directs the UPSC to cancel the lateral entry recruitment advertisement for 45 posts, says there is a need to review and reform the no reservation provision when it comes to such recruitments. Congress Party and key NDA allies had opposed the UPSC's move. The Supreme Court forms a 9-member task force to prepare a plan on ensuring the safety of medical professionals at workplaces after the Kolkata rape and murder case. Warns the West Bengal government not to unleash force against peaceful protesters. Directs the CBI to submit a status report by Thursday. Israeli military claims to have recovered bodies of 6 people taken captive by Hamas in Gaza. The US Secretary of State Anthony Blinken heads to Egypt and Qatar for more ceasefire negotiations. Hamas is still believed to be holding over 100 hostages in Gaza. US President Joe Biden passes the baton to Kamala Harris on the opening night of the Democratic National Convention. The Harris campaign proposes hiking corporate tax rates to 28%, rolling back the tax cuts under Donald Trump. Specialist Italian divers search for 6 missing people after a super yacht sinks near the coast of Sicily. British tech entrepreneur Michael Lynch and Morgan Stanley International Bank's chairman Jonathan Bloomer among those missing. Well, let's start with the market action. A steady session on the Lal Street today. The market saw some broad-based buying. The Sensex gained about 378 points, 0.5% higher. The Nifty up by about 0.5% as well, 126 points. 480 points higher, almost 1% of a gain coming in there for the Nifty mid-cap, outperforming the blue chips today. And the Nifty Bank was up by about 1% as well. So the market's closing strong this afternoon. Let's go across now to Prashant. He joins us now. Prashant, before I get to the markets, a very happy birthday to you. And I guess the market's celebrating your birthday today.
Shireen, they're celebrating your birthday as well. Happy birthday to you as well. So, I mean, it's always wonderful. It's a special day, I guess, for both of us. And it's sort of more special because it's your birthday as well.
Well, yes, we're twinning. We're birthday twins, Prashant. But yeah, a good way to close the day for the markets as well.
No, absolutely. A good day. And I think, you know, what today's session does, Shireen, is it kind of opens the path in some ways. You know, you can now start to roughly see the path to the previous all-time high for the Nifty, which is at about 25,078. You know, you have taken out some of these resistance levels over the last few sessions. The 20-day is gone. The upper end of the gap area is done. The gap which was formed because global markets created a few days back, I mean, actually early August. So that has been filled now. And you're looking up broadly. And of course, global markets are also back to where they started falling from. S&P 500, of course, the big market there is a case in point. Even the Nifty Bank is starting its repair work, although that has got a lot more to do because it fell a lot more as compared to the Nifty. The Nifty Bank today also crept up back above the 20-day moving average. It had not done so far. It did that today, which is a good thing. Mid caps and small caps, no problems, about 0.8% gains on both these indices. And that's the reason why the breadth of the market looked pretty solid. I'll get to sort of the large Nifty gainers. It was all financials. So insurance companies like SBI Life, HDFC Life did well. Bajaj Finserv, the NBFC names, Bajaj Finance, Shriram Finance, a bank like Indocent was flying high. So this was a financials-led rally. The other two sectors outside of banks really were IT and pharma. IT has, of course, been having a great last 1 week or so. Nothing noticeable or large which was down on the Nifty. In the broader market, lots of action. Brokers, Angel One, Motilal Oswal, IIFL Securities were all higher. Remember that last day for public comments to SEBI's proposed sort of rules on F&O. That is now behind. And we hope to get some details about what associations, etc. presented. There were outsized gains in names like Godfrey Phillips, KI Industries. There was a UBS note, Poonawalla FinCorp. Stocks actually corrected quite a bit, was up 8%. Balrampur, there was Balrampur Chini, Cyan, JSW Energy, Nuclear Software, Snowman Logistics, and a few others. But this is the bulk of the big volume-led gains that you saw today. The shipbuilders hit some rough seas. So you had Mazgaon Dock, Garden Reach, Cochin Shipyard. These stocks now, from their all-time highs, are down between 25 to 35%. Mazgaon, of course, was the big crack. Ola, for the first time, it pulled back some. It's nearly doubled from that issue price at the highest point, ended down 6. There was also, of course, First Cry, which lost a little bit, recent listing. Gravita India, Strong gains recently. Keytex, Vabag, Matrimony are some of the others which also pulled back. For many of these stocks which sort of came off, it was basically 2-3 days, 20-30% kind of runs and some pullbacks. That's about it. All in all told, a pretty good day. And as I said, hopefully global markets stabilizing. You got a path cleared, and broadly you can start to see the road to the previous all-time highs, which is just 2 or 3 days, 2 or 3 good days away in that sense. Back to you, Shireen.
Well, thanks very much, Prashant, and have a good rest of the evening. Enjoy whatever's left of your birthday. Thanks for joining us this afternoon. Now, regulatory intervention in the F&O segment may impact volumes and participation levels. That's the word in from the BSE CEO, Ramamurthy. This comes just days after the market regulator formed an expert group to tighten the rules governing derivatives. Here's the BSE CEO on the F&O frenzy.
There are some views in the country, across the country in some places, that the volumes in equity derivatives market in India are slightly very high, and there are retail participants who are losing money, and there is a crowded volume on expiry days. So the regulatory intervention is to sort of address these concerns. And naturally and necessarily, therefore, they are meant to have an impact on the volumes and the participation levels.
Well, let's talk about a stock in focus today. Zomato shares worth over 5,400 crore rupees changed hands in a block deal. Alibaba subsidiary Antfin Singapore is likely to have sold 2% stake. Now, the transaction was executed at a floor price of 258 rupees a share. Remember, Antfin owns a 4.3% stake in the food delivery platform before this block deal. So Antfin likely to have sold a little over 2% today. And more block deals. Over 2 crore Ola Electric shares worth 353 crore rupees changed hands today. The volume represents around 0.5% of the company's equity. The transaction was done at an average of 151 rupees a share. The stock correcting today. Shares of Hindustan Zinc rose in early trade after its board approved a second interim dividend of 19 rupees a share for FY25. The interim dividend will amount to more than 8,000 crore rupees. Hindustan Zinc's promoter Vedanta, which owns more than 63% stake in the company, will receive 5,212 crore rupees in dividend payments. Medical consumables firm Polymedicure has launched a qualified institutional placement to raise 1,000 crore rupees. Sources tell us the shares are being offered at a discount of 15% on today's closing price. This QIP is expected to lead to an equity dilution of over 5%. Polymedicure plans to use the funds to set up new manufacturing facilities and pursue inorganic growth opportunities. Well, on to a CNBC-TV18 exclusive. The Murugappa Group's plans to split the business into 3 equitable parts seems to have hit a hurdle. Sources say stark differences have emerged among 2 of the 3 family factions. Jude is standing by now to take us through the details. Jude, what exactly is going on? What is the issue? What does it mean now for the possible split of the Murugappa Group?
Well, what sources have told us, Shireen, is that these discussions, which have been going on for the greater part of 2 years, have essentially hit a roadblock between the 7 factions, the 7 families rather, belonging to the Murugappa Group, of which 2 out of 3 factions are having strong differences of opinion with regard to how this equitable and amicable business split can in fact be effected. Now, the bone of contention really is this. While some businesses or some companies of the Murugappa Group have seen their valuations skyrocket, especially in the last 3 to 4 years, some others, while have also seen moderate appreciation in their market value, haven't quite seen the kind of appreciation that these handful of companies have in fact witnessed. So, for example, while companies like CG Power or the Tube Investments of India have seen skyrocketing rises in their individual or respective share prices, some others like EID Parry or Coromandel International haven't quite seen the same. So the discussion and these differences are pretty much along these lines. How then can we effect an equitable and amicable split among such stark differences in market valuations surrounding these 10 listed companies at least? Now, the other difference of opinion is that should this split in fact be effected, it would in fact contravene some of the terms mentioned in a previously existing terms of family arrangement between the families of the Murugappa Group, details and the date of which we aren't quite privy to as yet. So 2 big issues outstanding really insofar as this split of the Murugappa Group is concerned. board. Now remember, the group is not new to controversy involving family members. In fact, 2 years before it sat down in 2022 to effect this split, what would have been the 8th branch of the Murugappa family, headed by Vali Arunachalam, one of the Murugappa's scions, was in fact denied a place on what has been a traditional all-male board belonging to the Murugappa group. Vali, in fact, later sued the rest of the family, who then, as recently as last year, settled with her outside of court itself. Now, in fact, the Murugappa Group, remember, is a century-old company involving 7 active families. The holding company is Ambadi Investments Limited, and since 2022, they've been sitting together, putting their heads together in terms of how they can split the business, but that process has, in fact, hit a roadblock, even as they figure out valuations and what constitutes a quote-unquote equitable, amicable split.
Jude, many thanks for joining us. Splitting a large conglomerate, a large group like the Murugappa Group will always be a complex process, and to do it equitably and amicably will be an even bigger challenge given some of the differences that Jude spoke of. Now, the government has asked the Union Public Service Commission to cancel the lateral entry recruitment ad for 45 bureaucratic positions that the UPSC had issued on the 17th of August. The Union Minister of State, Jitendra Singh, in a letter to the UPSC chief, has said that there was a need to review and reform the no reservation provision when it comes to lateral hiring. Remember, 2 key NDA allies, Janata Dal United and Chirag Paswan's Lok Jan Shakti Party, had opposed the UPSC's move. The Congress had called the move an attempt to snatch reservation for backward classes. Parikshit is standing by with more on the controversy surrounding lateral entry. So essentially a U-turn being done there, Parikshit, by the government on the issue of lateral entry. Take us through the details.
After much criticism from the opposition and also from NDA allies like the JDU and the LJP, the government has decided to cancel the latest plan to recruit professionals through the lateral entry scheme into public jobs. The UPSC had taken out an advertisement on the 17th of August saying that they are inviting applications for 45 posts in the government, including 10 of that of joint secretaries, to be filled via the lateral entry scheme. There was a lot of criticism from the Congress party, which said that this was a direct attack on the constitution and an attempt to snatch away reservation from the backward classes. Now, keeping in mind the immense amount of criticism coming in from opposition parties and also from some of the NDA allies, the government has decided to put this lateral entry scheme on hold for the moment. In fact, the DOPT has written to the UPSC asking the body to cancel the latest advertisement, saying that there is no provision for reservation in these lateral entry appointments, and as reservation, social justice and equity are the very cornerstones of our constitution, therefore this entire scheme needs to be reviewed and reformed as well. So this is a big move by the government, a big win for the opposition as well, as they had demanded the scrapping of this scheme. The DOPT also noting in its letter that was actually written by Minister Jitendra Singh to the UPSC chairman, it noted that the Prime Minister wants any future policy on lateral jobs to be aligned with the principles of reservation as mentioned in the Constitution.
Parikshit, many thanks for joining us. Well, here's a CNBC-TV18 exclusive this evening. The Central Board of Direct Taxes has laid out a detailed action plan for this fiscal year to tackle tax areas which have soared to 43 lakh crore rupees. Timsy is standing by with more. Timsy, so what can we expect?
In what could ease the litigation burden for the industry and aiming to create a more efficient, transparent and taxpayer-friendly system, the Income Tax Department has unveiled its yearly Central Action Plan for the current fiscal. According to sources, the plan lists out clarity for all its field formations and officers, proposing to align policies with broader objective of economic growth and fiscal stability. As per the plan, the roadmap of the department is to have initiatives to enhance tax administration, optimizing revenue collection, reducing arrear demand gap, and yes, improving the taxpayer services. The plan, sources shared, has enlisted strict timelines for field formations for achieving budget targets, reduction in cash collection out of arrears from pending demands, litigation management and improving service delivery standards, along with a special focus on redressal of grievances. The action plan has specifically focused on having a targeted approach for managing the tax demands, asking fields to have a clear focus on top 5,000 arrear cases which constitute to about 60% of the total demand which is pending in the books of the Income Tax Department, which is of about 43 lakh crore rupees. And to address this real-time challenge, it has envisaged to form a special team by each jurisdiction to analyze these cases. Experts say this move will help in litigation burden reduction, and yes, something which is important right now for both the industry and the government. To be seen is how soon these measures actually result in reducing litigation and enhancing collection. Let's see how the tax department works on this proposal. Back to you.
All right, Timsy, many thanks for joining us. 43 lakh crore rupees in tax arrears. That's a significant sum there. Time for us to head to a break, but more coming up right after this. Don't go anywhere.
Content, and all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said.
The Supreme Court will address Baiju's concerns over the insolvency proceedings against the company on the 22nd of August. This after the EdTech giant informed the Supreme Court that the recent stay order on a settlement with the BCCI is being misconstrued as a revival of the insolvency process. Both the BCCI and Baiju's have sought a stay on the proceedings. However, the Supreme Court has refused to grant interim relief. The Supreme Court has also formed a 9-member task force to prepare a plan to ensure the safety of medical professionals at workplaces. The Apex Court also questioned the conduct of the West Bengal government and the police over handling the RJ Kar rape and murder case. The CBI has been directed to submit a status report on its probe by Thursday. Meanwhile, healthcare services across West Bengal remain severely impacted in state-run hospitals as doctors continue with their agitation. Ashmit is standing by now to take us through the key directives issued by the Apex Court. Take us through what this committee is likely to do, Ashmit. What is the scope and the mandate?
Well, as far as this 9-member committee is concerned, the National Task Force, or the NTF as the CGI is calling it, there are twin subheads, there are twin heads that the Apex Court would like the NTF to focus on. The first is the element of security. So on that front, the Apex Court is asking the NTF to look into issues of whether or not there is police deployment, whether there's a police force present at the medical practitioner's facility, at the hospital, whether they're scanning for any weapons, if there are certain sections which are left exclusively for the medical practitioners, or is the entire hospital premises accessible by the general public. These are some of the measures. Have CCTV cameras been deployed? These are some of the measures that the NTF will now have to look at. That's, of course, one aspect, which is that of security. The other one is that of working conditions. The Apex Court did not look very kindly on the fact that in some cases, interns are looking at shifts which run up to as long as 36 hours. The Supreme Court was critical of the fact that there are not enough facilities available for dormitories or duty rooms. In some cases, even the toilets are not available for medical practitioners, and that of infrastructural aids is the second aspect that the Apex Court would like the NTF to focus on. As far as the NTF's composition is concerned, the Apex Court, very importantly, has accommodated 9 senior members of the medical fraternity, and this is an effort by the Apex Court to reach out to the medical fraternity to call off this strike, to call off this reservation that they have, to address their concerns and to assure that their concerns will be taken note of by the Apex Court. And in fact, there was an appeal also made by the CGI for the doctors to resume work, as it was having an undue impact on the on the marginalized. Now, with that in mind, the Apex Court has asked the NTF to come back with an interim report within 3 weeks' time, a final report within 2 months, also directing the Cabinet Secretary, the Home Secretary, as well as the Health Secretary to assist the NTF in any shape or form that the NTF may deem necessary. The next hearing in this case will be on August 22nd, and that's when the state government of West Bengal, as well as the CBI, will be furnishing their status reports.
All right, Ashmit, appreciate you joining us. Now, protests erupted at Badlapur railway station in Maharashtra, Thane district, after 2 4-year-old girls were allegedly sexually abused inside their nursery school by a sweeper. The protesters crowded the track, stopping trains as they sought stringent action against the accused. The management of the school has suspended its principal and 2 staffers. The protesters also vandalized the school. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. But for now, from all of us, goodbye. Thanks for watching.
There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved.
Hello and welcome. I'm Manisha Gupta and you're watching Commodity Champions. Well, the oil prices have cooled down as the hopes of successful ceasefire talks in West Asia erase some of those supply concerns. The prices of crude oil, gasoline and heating oil have declined